Now you got a hole in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads, and happy Wednesday to you both.
Hello.
Hola. Oh, you're looking very pretty today.
The more chaotic my life is, the nicer I look.
Well, can we talk about the weather for a quick second? Because we've been hearing about how this weekend's going to be cold. They say it was 40, almost 50 degrees yesterday. I don't think so. It was cold yesterday. I don't know what.
So now you do believe in wind chills. So what the phenomenon you were experiencing,
John,
the temperature actually was probably 45 degrees yesterday, but because of the wind, guess what? And you felt what?
It felt a lot colder.
Okay, because it was also really windy yesterday.
All right. All right.
Maybe you should watch a couple of those Miss Rachel videos with your kid. Maybe you learn something.
She is making bank, but she is annoying now that I have a little one.
All right.
She's worse than Barney was ever. I mean, you were more a Barney.
You were a Barney baby?
Yes. Yeah. More of that.
I love you.
You love me. We're a great big family. It was bad.
So wait, did you get in the sauna?
No, I didn't. Should. Maybe today.
Yeah, you sweat it out.
Today. Yeah, maybe today.
Yeah.
Yeah.
So what'd you get up to last night? Was there hockey? Is Vinnie driving around? What's going on?
Vinny's driving. Yeah. Well, I mean, yesterday is.
Does he have his actual license? Did he take the test and get the
Thursday?
But he can't drive.
Oh, wow.
But has he been driving by himself though?
No.
He doesn't get to drive though for another 2 weeks.
2 weeks after that, because you have to have your permit for like 273 days or some number.
Oh, that's smart. I like that.
Some number like that, and he didn't get his permit till like 2 weeks after his birthday or whatever.
Street's about to get hot.
Street's about to get hot.
And he's gonna be.
See, in Indiana, we're all farm kids. We can all drive when we're 13.
Right. Yeah, no. He's been. Can I move it on the driveway kind of thing? Mm-hmm. Can I just drive it around the block kind of thing?
Does he have the fuzzy dice yet?
No fuzz.
You cannot obstruct. You can't have something that obstructs your view. I think from a mirror. I don't know.
Yeah. No fuzzy dice. Haven't introduced him to that yet. He's put a couple of mods on there.
Mods.
He's getting nitrous.
He put the black over the.
Yeah, he murdered it out a little bit, over the emblem and stuff like that. Yeah.
And how is he financing this?
Well, the Amazon
futures with futures.
With futures.
He's a big futures trader.
But are you going to make him pay his insurance or pay for his gas? Like, what's the deal? Because I had a I got a car, but I had a job, but I had to pay for my own gas. I had to pay for my insurance.
He has worked since he's 14, on and off. I mean,
sure.
He's
So
not
what's the
opposed to
deal?
working.
So what's the deal that you made with him? It's just free and clear car. Just go nuts. All the privileges, all the gas, all the insurance.
Bless you, Vanetta. You know how this is going.
I'm just saying
he's the baby. It's anything baby wants.
But there's like nothing, not even like a minimum GPA, like nothing,
no.
Just.
No, of course not.
Just YOLO.
He is a very good boy.
I didn't say that he's not.
No. I know. And that is enough for me.
Yeah.
And he is, a B student, and we talked about him applying himself more this semester, and he agreed he can apply himself a lot more and do better. So that's what his goals are.
Okay.
But as for all the other monetary things at 16 years old, he's okay. If he works, he can keep his money. You see, I worked very hard when I was his age.
Sure.
And for all those years prior to that, so that he wouldn't have to do that. That's how that's how I'm playing this.
Sure. Okay.
Amazing.
Hey, to each his own. Everyone does.
But this is it. I told him, I go, you bang this up, you ding this up. it's not we go to the shop and get it fixed immediately. You know, you are not me or anything else. You're going to live with those consequences.
Sure.
So.
Yeah. Thanks.
Okay. Yeah. Taco Tony.
What else has he got? He has to have, because I know him. And so
Is he getting rims? You getting rims?
I don't know.
Not yet.
He's not going to do that.
He hasn't looked at
Stereo?
He'll start.
No, his stereo's banging. He's got a good Bose stereo.
Yeah, but he'll look into all that in like probably like 3-4 months, like summertime. He'll start looking at that like once he gets comfortable. But what he's going to get right now is like he's going to get, you know, the like backrests massagers. The like accessories.
He's gonna be an Uber driver.
Yeah, like
DoorDash. He's doing DoorDash.
Yeah. He's gonna get all those things. Like, he's not gonna get like the like jumper cables. The things that he really needs. Like, those
I got those for him. Okay. And I've got them for all the kids when they get their cars. He's nickel and diming stuff right now.
Yeah,
it's small baby stuff right now.
Sure.
Yeah,
he has started looking into like a new muffler. To make it sound,
yeah.
You see, it's all about these kids are all about perception.
Yeah,
like there's no substance behind it.
Yeah.
We're trying to teach them about how you need substance behind it. If you really are the toughest in the room, you don't have to walk in and throw over chairs. Everybody knows you're the toughest. A
funny story: when I ride a motorcycle for people that don't know, and sometimes I ride with a group of ladies, and every time we'll see like a group of guys go by on their bikes and they have like the really loud exhaust, we yell, "Sorry about your penis."
Right. You're 100% correct.
It's like, sorry about it. Sorry.
Yeah, so I'm trying to teach him about that, but it's slow going.
Yeah.
It's slow going. Somebody just sent me a picture. You know, on the truck, sometimes you'll have those testicles.
The truck nuts. They're truck nuts.
The truck nuts. There you go, truck nuts. I knew there was a good way of saying it. Beyond testicles. No, he doesn't have those yet, but his birthday's January 27th. Whoever sent the picture, if you'd like to.
Can I ask you a question? Mm-hmm. How much is insurance for a 16-year-old boy?
I don't know yet because he doesn't have his license. So I'm skating for the next 13 days.
Okay.
Yeah.
But I thought you would have priced it out.
No.
I'm just curious. Like, I don't know, how much.
I have no clue.
Like, what's your insurance? Like, mine's like $100 a month for insurance because I'm a middle-aged lady.
Yeah, mine's like
now you're a middle-aged woman.
In terms of insurance, I'm a middle-aged lady. And now I'm a hot young 24-year-old.
I get like mine's like $500-ish every 6 months.
Okay, so it's like $1,000.
But I loop it in with like my homeowners.
Sure. So you bundle. You got a bundle.
Bundle.
You got a bundle.
Small little discount.
Yeah.
You guys, I'm surprised.
His isn't going to be 500.
No.
I would expect it to be probably double that.
I would expect it to be more than that.
Yeah.
I would expect it to be like 15 or $2,000 every.
Yeah, that's why I was just curious, like what the rates were like in 2026, because everyone's insurance, like because my insurance used to be like $75 a month. Now it's like a little bit over $100. So I was just generally curious.
Trump. Yeah, you happy? No, I don't. I did probably $3-4 I would imagine. I don't know.
That's bonkers.
I think.
I did get a note. My motorcycle insurance went down. It's only like $450 for the year. So, but obviously you can't ride year round in Chicago. But I was like, thanks, Progressive.
I'm surprised you two have never, because you guys don't drive that much. I drive a lot still. I'm surprised you haven't looked into one of those. Like they have these apps now where you can pay.
Yeah, like Lemonade, where
like a Lemonade,
where it's like by mile.
Yeah.
No, I'm still old school. And was like, I want insurance every day. Especially in this city, like even if you're not driving your car, something could happen to you.
Well, you still get the collision
I don't know.
part of it.
I don't know.
Comprehension, but you
I don't know how we devolved into this. Nikki, league last night?
Disaster.
Oh, no.
Wow.
Yeah.
You guys were competing for the national championship.
Yeah, we're no longer in playoff contention.
Are you the Alabama of,
no longer
of golf?
that 3 weeks, you guys are out? 3 weeks ago, you were
it's
top
a short
10.
seasson. It's only a 5 or 6 week season.
You were competing for the Natty.
Yeah, we were competing for a trip to the Dominican Republic. It's likely out of reach at this point.
So what happened? Break down what happened.
It was a very hard course, Royal Country Downs. and which is very, very thin.
Is that in Scotland or is it?
That's a good question. Probably.
I'll look it up. Okay.
I would think
You
so.
keep going.
It looked like a Scotland course.
Newcastle, UK.
Okay, there you go. They had the wind setting on, so
Northern Ireland, sorry.
12-mile-an-hour winds.
Oh, wow.
Tour greens. Very tough.
Yeah.
It was a tough day.
What did you shoot? It wasn't best ball or it was like...
It was best ball scramble.
Okay.
2-man scrambles.
Okay.
Was not good. It just was not good. It was a very bad showing. Got stuck in bushes a couple times.
Fescue.
Yeah, in the fescue.
Yeah.
Not good. It was not.
F-U, fescue.
Yeah. It was not a good showing. The team, the morale was really down.
Low morale. Yeah. Low T.
Yeah, it was low.
Low T.
So...
But, I mean, you could have gotten some apps, gotten some drinks. You could be back in it.
Yeah.
Gotten some, what did you say?
Some apps,
Oh,
food.
apps. I thought you said ass. I was like, wow.
What?
No. It's not that kind of place.
I am dressed like a
Interesting kind
Sunday
of-
school teacher.
Interesting concept.
Interesting concept because we actually do, we're all smart enough to extend the season to, in the eyes of the people,
Administration.
significant others around. So the season does actually continue for another 4 weeks until the next season starts. So we will be playing next week,
Just for the love of the game, then.
for the love of the game.
Yeah, there you go.
So that's apparently with wives, that's not how it works. Like if it's a league, you can do it.
Right.
For fun, you're not.
I mean, I
Always
support that. I'm on the
permitted to
side
do
of the
that. League
women.
rule.
So
I
for the
support
league,
women. Mhm.
So for everybody out there, the league has still continued and will continue for another 4 weeks.
League takes precedence.
The league.
I'm going to call you lady. Ooh,
Yes.
I'm going to tell.
Yes. So my Tuesdays are still booked up.
Nice.
Yes.
I'm sorry to hear that.
You should have a day to yourself.
Yeah.
Night
It was
to yourself.
It was a
Whatever.
tough day.
Yeah.
We were really excited. Okay.
Good stuff for you.
So close.
What about you, Ju? Oh, so you asked me what I was going to do. So I watched something last night. If anybody's watched the
You
movie.
just got super Italian. Yeah, I watched the television last night.
It was best screenplay. Won best screenplay. It was If I Had Legs, I'd Kick You.
Okay.
And it was on sale for $5 or $6, like $5.99 on
Some service.
one of the services. I forget which one it was. I don't think it was Netflix, but I'm not 100% sure. I don't know what the movie was about. I still don't. It was horrible. I don't get it.
So
I don't know
whose
what it was.
choice was this?
I know.
I like
thought you
how
were
you're
gonna be like,
looking at
it
us
was a
like we
hidden gem.
forced you. I know. I like how you're looking at us like we forced you to watch this.
No, nobody forced me to watch it. I forced myself. Actually, my wife was watching the Golden Globes because, she's a frustrated actor. You know what I mean? That kind of thing, because she was in the biz 30 years ago or 40 years
Easy
ago.
there, Tiger.
Right. So she will watch those from time to time. She says, best screenplay, we should watch this. I'm like, okay, turned it on. And it's about a woman who's got issues, which...
Nope.
95%
Okay.
of the population have issues. This one's got some deep issues, but I just don't understand. I don't understand the movie.
You're a gladiator guy.
I am a gladiator guy. I will get you that. I will give you that. But I like I can cry at a movie. I like that kind of thing. I'm all right with that.
I haven't seen any of the movies this year, so I don't. Cassie was trying to talk to me.
I don't get
about,
it. If somebody watched it out there who enjoyed it, I would like to know what the.
And it's called "If I Had Legs, I'd Kick You."
Yeah.
I mean, I like the title.
Yeah.
Yeah.
Yeah, and that's what it's kind of about. She's got a little bit of mental issues. She can't get past things, whatever. She doesn't have the...
Sure.
But it was... I don't know how it won best is all I'm saying. I don't know how it did anything. But anyway, that was my night. You asked.
No.
You wasted my...
Yeah, I'm sorry that I
know. I'm sorry I asked too.
Hey, I might have just solved an almost 40-year cold case last night. Yeah. No, not really. It's I'm just like all joking. But I found out, so the two things are related, but first I'm going to give you a little background on this. So I found out, so there's a lot of Hoosiers who work here in this office. So we're all all alumni of Indiana University. So, but I did not know that Mr. Slappy himself went to IU.
Yeah.
Class of 87. Mm-hmm. So keeping that in mind, so this this week preemptively. So we have a fountain on campus. It's called Showalter Fountain. If you guys can find a picture of Showalter Fountain in production, that'd be great. So we have a beautiful fountain, Showalter Fountain, and it's shoots water into the sky. And there's these like bronze fish in the fountain, right? So in 1987, when the IU men's basketball team won the national championship, one of the fishes went missing.
Ooh.
Oof.
I'm not saying that Slappy did it, but it's never been found. And in 2000, when they fired Coach Knight, they took the fish out of the fountain and they ran him down to the river, but they recaptured that fish. Yeah. So preemptively this week, because we're in the national championship, they just took the fish out of the fountain, so no one would steal them or tamper with them. But I think. Have you ever been to Slappy's house? Have you been in his attic?
I've never been in his attic. This is you found. So one of these cement fish they took?
I think they're bronze. I think they're metal.
Oh, this bronze one. Yeah.
I
don't know. These look cement. This looks
yes.
bronze. Oh, so that's what they took. Oh,
yes.
Right. Interesting.
So the one from 87,
Heavy, I would imagine.
replaced it. They replaced it, but the one from 87's never been found.
When you were talking about unsolved
like a cold
murders,
case, yeah.
I thought you were gonna.
I didn't say it was a murder.
I thought you were gonna say I
cold
discovered
case.
another Batista, or like I found another.
I believe the people who bought Slappy's mom's house found that, and they're using it in their backyard as a fountain.
I mean, I'm not saying he's guilty, but I'm not saying it. Anyway, all jokes aside, we have a great show for you today. A lot of really good content is headed your way at the top of the 8 o'clock hour. We have an options jive. Do markets correlate the same way?
Ooh. So yeah, it's an interesting one. So kind of piggybacks off of yesterday's segment, but we're gonna look at longer duration correlations versus shorter duration correlations. We're talking like minutes.
Okay.
So it's kind of a cool look at correlations.
Okay.
Yeah.
2, 4, 6, 8. I can't wait to correlate. At 8:40, we have What's Your Assumption? It's Assume the Position Wednesday. This is where viewers write in with their trade ideas. They pick an underlying and they have a directional bias, and the bats are going to do some viewer submitted trades. Yes. Our viewers have been coming out with a couple of bangers. Like they've had some good. Yeah. They're scouring. They see things that sometimes we don't see. Because he's contractually mandated, TP is here. We have TP in the house.
The cherry picks man.
At 9 a.m. Yeah, that he's gonna do some work. So he's got his cherry picks headed your way, fresh off the presses. And then at around 9:20, we have live from the trade desk, Quentin and Ryan, Q counting down the top trending tickers over at Tasty Trade, and Ryan giving some insight.
Shout out to Ryan for that XRP.
Yeah,
trade. I took like $400 or $500
on a trade. Yeah, it was a good one.
Yeah. Again, where are the bagels? No. Just one time, Nikki. No. You would be like a god. A king among
on the
men.
Follow page. But that was a good one. Yeah.
The ticker is /MXP. They're the micro XRP futures.
I didn't even know that was a thing.
I didn't know that.
That is a crazy sentence. Micro XRP futures.
Yes.
It's doing too much.
Yes. I didn't know it was a thing until Ryan brought it up, and
he
was like, get long this. I was like, all right.
Okay. And he knows what he's talking about.
Yeah, he's good.
Well, hopefully he'll give us some more tendies today at 9:30. And then 10 a.m., I am pointing this out, 1, because I know that it annoys Bat, and 2, because it is important today. 10 a.m., Liz and Jenny live from the floor of the SIBO. So it's electric when the ladies are live. But they might be electric, super electric today, because the tariff announcement might come out. I don't know, unless
might
the Supreme
correspond
Court,
with their opening.
Right. If the Supreme Court kicks the can down the road, then they kick down the road. But them being live on the floor. So just tune in today, because all hell might just break loose, and I'm here for it. And they will be serving looks.
I also have a breaking news.
Yes, go ahead.
A big announcement. We have the other fan favorite, Marty, coming in for Quentin.
Marty Supreme. Did you see that movie?
Today? Marty Supreme?
That's what I'm being told.
Thursday, Friday.
Thursday, Friday.
Thursday, Friday. Oh, way to muff it, Nikki.
Yeah. Well, you know what? You ruin everything. I don't know. This is what happens. First day with your new hands over there?
But Bat, have you seen that movie, Marty Supreme? It's getting good. Timothy Chalamet, I guess he's a ping pong wizard? I don't know.
Yeah.
But it's called Marty Supreme, so I think we should start calling our Marty Supreme.
I think I like that.
Yeah.
I do too.
Supreme is
Yeah.
And Marty has been supreme for a long time.
Yeah.
So
He has.
He's
He's
earned
elite.
that. Polymarket still has it as a 28% chance rule in favor of Trump's tariffs.
Oh, sure,
72
sure.
again, so it was sitting right there. But I think the decision that they're going to kick the can down the road is here too.
Oh.
And I think it was like
What's
a
the
60% chance that they're gonna
that they're gonna punt?
Yeah. Yeah.
Okay.
But I can't find it at this moment, but I saw that.
Someone will update us.
Yeah.
Yeah. Mhm.
Well, that is our run of show. Let's get this Boeing going. You want your daily dose?
Sure.
You can't stop me. Hit me with my theme music. Let's go.
Our leading
In
story,
today's
breaking
headlines.
news,
Today's
coming across the wire. Our leading story, top stories, jump in.
In today's headlines.
This just in.
Breaking news.
All right, everybody. Today is a wonderful Wednesday. It is January the 14th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news?
Earnings.
Goldman Sachs, Morgan Stanley.
I've heard of them.
Yeah. Goldman Sachs has been one of those stocks that brought us to this new heights. It's sitting at 938. Doesn't look like it's traded much this morning, so it's hard to tell if it's higher or lower. I would imagine with the market being down 24 here, that maybe it's a little bit softer. Morgan Stanley, on the other hand, is more like a $23 stock, but has been mirroring the move in Goldman Sachs. Has been
TSM.
Was that? Oh, TSM. Yes.
Big one tomorrow.
Yes.
Yes.
328 looks like it's down around $3.
Yeah.
But it too has been on a run.
BlackRock as well.
Right.
Not really tradable.
TSM, their earnings come out like 2 o'clock in the morning or something
Yes.
like that, right?
Yes.
Yeah.
Yes. A new report from the U.S. Treasury released yesterday showed that $27.89 billion in tariff revenue came into the U.S. coffers in December, capping off a year that saw President Trump reorder U.S. trade policy. That release brings the total revenue collected to $264 billion, a very historically high total, but it was the second straight monthly decline after Trump dialed back key tariffs last November. Again, I'm just mentioning this because we could be getting a Supreme Court ruling today on the tariffs. Let's talk the dollar. Let's talk the bond. Go ahead.
Euro, to see what the dollar's doing. Euro's basically unchanged. Been going sideways the last 3 or 4 days. The Euro's been going a little bit lower the 2 weeks prior to that, so the dollar's been a little bit bumped. It looks like it's going sideways the last 3 or 4 days. What are you seeing, son?
Yeah. I mean, the dollar, the yen has been horrible. The dollar has been horrible.
Yen's not really a currency. That is the
Yeah,
cryptocurrency of the currency.
Yeah. I mean, the dollar's been weak.
What about bonds? Treasury yield still holding steady at around 4.1%, I
Yeah,
think.
115 and a half, 115.29 right now.
Bless you.
Thank you.
Gesundheit.
At the higher end of their range. They've been around 116 to 115, 116.05 last night, 115.29 right now. So at the higher end of their very, very tight range, basically all of December and January.
Yeah.
Silver hits new highs, and
Silver
gold
is a pain
Gold
in the
also
ass.
rises as U.S. data fuels rate cut bets. Silver hit a record high, and gold rose as well. Silver advanced as much as 2.5% to touch 89.16 an ounce.
Yeah.
Crazy.
You've been scalping it good, but so
Look at your face.
We've been scalping it really well.
Yeah.
He's been scalping it really well. I haven't been trading it, showing on the screen there. He's been scalping it very, very well. But we have leftover, gold silver ratio type positions, and that is at new lows. So
Yeah.
long gold,
come
short
on.
silver. So it's
What are you trying to do,
I want to
Nikki?
get another one, right?
silver traded over 92 to 92.20, just rounding up.
Wow.
91.73.
We're going to do another one.
And another one.
This is it.
This is it. This is it.
And another
In the
one.
ground.
See, I talked a little bit about this yesterday when he was trading.
You are giddy.
Because he's like, so this is how you blow up. Yeah.
Well, I was saying, no.
Exactly it.
This is how you don't take, like he was taking his profits from the short side on the E-mini S&Ps and reloading and then
Which I still have.
he was
I have
just
some.
trading it. Like
Yeah.
you would trade it
Yeah, not
the
married.
way you would want to trade it if you were teaching somebody else to trade it or showing somebody else how to trade it.
Right.
Yes.
Silver, on the other hand, he was selling it nicely, having an opportunity for a profit, a normal-ish
I
profit.
took a nice one yesterday.
You took a great one yesterday.
Yeah,
Matter of fact, I
took 2
called you up
points.
to make sure.
Yeah, you called me up like I'm not freaking glued to my screen all day long. Like I need you after you get out the sauna to tell me silver's down $2. Like I don't have eyes.
I don't have
of my
eyes.
own.
Like I was
Like, I
saying,
don't have
he was
freaking
trading
eyes.
it well, where
Yeah.
he'd have quick profits and not taking them the way he was taking it in the equities, in the equity futures. And I said to him, this is what happens when you get into a bad position, one
Yeah.
that's not working for you. You think you hit it, like, you got the top
Right.
pick,
Mm-hmm.
and now you're going to ride it for 6 or 8%. And now we're riding for
Yeah.
6 or 8% the other way. But yes. But he's been trading it well.
Yeah.
In other news, crude oil prices rallied yesterday after President Trump promised Iranian protesters that help is on the way. Help is on the way. No, Mrs. Doubtfire? No, okay. He also canceled meetings with Iranian officials. Oil up more than 2%. Let's go.
Yeah, you can look at oil 61, 69 right now, just a skosh off of its recent highs that it made. I mean, it's had a 5-day run from 56 to 61 and change. You're talking about $5,000 in 5 days, about $1,000.
Yeah.
It's a big move in oil.
Yeah, we have some short delta there. With Craig yesterday, we were selling some call spreads. In oil futures, we sold the ones. What did I do yesterday? Because I have an iron condor as well. 66-ish is kind of our 65, 66 is our upper kind of limit.
61 change
Yeah.
right now. Good IV rank of 42, been expanding over the last couple of days.
Yeah,
too.
volatility very high there.
Yep.
I did want to also look at natural gas. Natural gas did also reflect in the CPI that came out yesterday. So just, it's more expensive and people use it to heat their homes, whatnot.
Nat gas has got a great IV rank of 86. Now, it's not the greatest product to trade. I think oil is a lot easier to trade than nat gas, smaller product than nat gas. Nat gas is a bigger one. 3.25 or so at the very low end of its recent range. Not the lowest, but right there. Nat gas is doing the opposite of oil last 5 days.
Japanese stocks hit another record high as expectations of a snap poll rise. The Takachi trade remains alive and well as investors piled into Japanese markets. The yen has hit its weakest level against the greenback since July of 2024, as Japan's ruling LDP under the new prime minister is expected to call an election likely in February. So if you care about
All he
snap
cares about is the
elections
yen going
and the
higher.
Takachi trade.
It's up 25 basis points.
It is, which is small, but yeah.
Which is 25 basis points off the low.
That's correct.
The first uptick of all time.
First uptick since the last uptick after it made new lows.
Yeah.
Yes.
It's
U.S. senators late on Monday unveiled draft legislation that would create a regulatory framework for cryptocurrency, which, if signed into law, would finally clarify financial regulators' jurisdiction over the sector. It would define when crypto tokens are securities, commodities, or otherwise, giving the industry long hoped for legal clarity. Bitcoin did hit a 2-month high when the CPI came out yesterday.
yeah.
Yeah, it's revisiting that and making new ones right now. Traded up to
Of 95. This has been the spot. This
Yes.
has been like kind of the upper spot.
Yes, and my buddy just told me the expected move for the week was right around here, 95, 96,000. So
Yeah.
Okay.
you're right at that expected move, and you are above recent highs that we haven't seen since early December, so the last 5 weeks.
I hope Ryan will be able to clarify some of this because my Twitter echo chamber of news / disinformation.
Of slash boobs.
Disinformation. Did you say disinformation?
It's very mixed. Like,
Sure.
some are like, this is,
Well, I think that they
This is-
rushed
Well, that's
the bill.
good because when they're all on one side of the
then
boat,
it's bad. And it's bad.
No, the bill has
Very bad.
bipartisan
It's just a bump.
support. I think the
Yeah.
question is the time, like how they rushed it. Like they
Yeah, and
were
there's
some-
a lot in there. And
Right.
I got some people that are like, this is a Jamie Dimon psyops, like.
A Jamie Dimon psyops.
Yeah, like
Oh
the
wow!
banks they snuck all this crap in there that it makes it even more gray. Blah 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 blah. So we'll
Interesting.
hopefully our man will give us a lowdown here.
Intel stock is popping. Can it become an AI winner and rack up even more gains? Of course, TSM is going to do their earnings thing tomorrow morning, but Intel stock has booked nice gains over the last year. It's part of the government portfolio. Can the good news continue?
You've been trading both sides of this. You've been trading it really good, but Intel is going to be making new highs.
Up
at
$1.20.
48.5 right now. Yeah, about $1.20 or so, as he just said.
Yeah.
Wow.
Big move.
Yeah. Big move.
Volatility expanding. It's, a $50-ish price range. So it's pretty tradable product across any sort of account size. So puts, calls, strangles. I've been doing ratio spreads there because there's a lot of upside call skew.
Okay.
Because of the Trump portfolio.
Sure.
It's basically got a floor.
Yeah.
So it's been a good trade. Yeah.
Yeah. Good job, Intel. The U.S. has approved NVIDIA's H200 chip exports to China with some conditions. It's the second most powerful AI chips, putting the rule in place that will likely kickstart shipments of H200, despite deep concerns among China hawks in Washington. China itself was also like, yeah, we are going to try to use chips that are made in China, but they're also like, yeah, give us some of that.
Give us some of that.
NVIDIA earnings February 25th, so they're a ways away after February expiration, which is February 20th. It's been going sideways. I mean, I think you can look at these stocks, these Mag 7 stocks that have not really participated with this rally on what the overall market might look to do in the coming days and weeks. If these catch a bid, and maybe new highs are obtainable, if these don't catch a bid soon, I don't know if the rest of the 490 stocks can keep us going the way they have. I think you need these.
Keep it together. Well, speaking of a laggard in the Mag 7, Apple says don't call it a comeback. No, it was just a baby announcement. But they're rolling out something called Creator Studio to boost their services push and adding AI features. They're like, look, we know we already charge you for storage, so you don't have to delete all of your photos. And we know that we charge you monthly for Apple Care, because if you drop your phone, it's going to cost you $2,000 to fix it. But now we want to charge you monthly to use our services. So for $12.99 a month, you get a subscription bundle, which includes Final Cut Pro, Logic Pro, and Pixelmator Pro. Sorry, it's just hard to say. It's the company's best known creative tools in a single subscription. What are your thoughts?
Apple's been a dog. I mean, it's off what, $20 from highs, $15 from the highs.
Yeah, it traded up to a little over 280, and now it's trading under 260.
I don't know. I don't need this.
Yeah,
this doesn't apply to me.
I just need I don't have an Apple position, IB rank of 18. But again, one of those stocks that's in every indice. You need Apple to start catching a rally, or maybe get a little longer.
One of my little NASDAQs. I just took that off.
That you covered 25,758 down 145. Yeah. Good job out of you.
Well, something.
Cover one of the. Sorry.
No, I'm so sorry.
Too.
Very nice.
I got two little runners left, and I'm short the Russell, which I freaking hate the Russell. The Russell is the worst thing to trade.
I agree with you. I've tried to tell all administrations on that side.
I know. Well,
nobody listens.
I have always been on that side too.
Yeah.
But
it looks enticing. But it doesn't. For some reason, it doesn't have the same rhyme or reason as the rest of the markets.
No.
Well, something that was interesting about the Apple news is that it sent shares of Adobe into the crapper. Adobe was actually one of the worst performers in the S&P 500. Sorry, it's the wrong graphic, but it's the right headline. You can leave it up. It's my own fault. But Adobe shares were down almost 6%, suffering some of the steepest losses in the S&P 500. Shares of Salesforce, say that 5 times fast. Shares of Salesforce were also down almost over 7%. So they were not good because Adobe makes photo editing software, and then Apple was like, hey, we're going to give you our photo editing software. So that's why. Yeah,
Adobe is sick puppy. But that's the same sort of enunciation problem that I have with cash match. Cash match.
Cash match.
When you're saying it in a sentence, in a script read through.
Cash match.
Yeah, with my Chicago
it's hard.
accent, I feel like.
Shares of Salesforce. Yeah. Anything to be done in Adobe?
Maybe. We've traded a few times. We had a free downside butterfly. I believe we took it off. Trading 309 right now. A new low. Ivy Rank's only 21. It has been upticking. We'll see if it continues to uptick today. Good thing about Adobe, if you're looking to put on a trade in February, markets can be a little bit wide in there. Now it's in play. Maybe they'll be a lot tighter. But it has earnings after February expiration, if that means anything to you.
Also, I'm hallucinating. This is the right image. I was just like, oh yeah, I did do that. I was like, it's fine. Yeah, it's a good job. Anything in CRM? CRM is announced. They also announced they're going to put more AI in their Slack, which no one asked for.
Another sick puppy.
Yeah, and earnings after February expiration too. But yeah, it took a slide from 260 to
some of these. They look so bad. It's hard to buy the dip. You know, like the Visa move was like, oh, Visa, this is going to blow through. It's not going to be a problem. I'll buy this dip. CRM, Adobe, you look at Adobe and it's like, oh my God, there's 500 companies that are doing what this company does. It scary dip to buy.
Yep. Visa, since you mentioned it, went from 350 down to about 225 or so. It's sitting at 229. It's up about $1 this morning.
Yeah. They be all right. The East Coast of the United States could soon experience rolling blackouts as AI data centers gobble up more and more electricity. PJM, the organization that services nearly 70 million people in a 13-state corridor, said that they may be forced to trigger power outages during high-demand periods. This does couple with the fact that Microsoft did confirm the news that President Trump leaked, that they would pay for their own data usage and would be more mindful about the water that they use, and that they would not offset their costs to the consumers. But could you imagine, you're like, why are we having a rolling blackout? It was like, oh, I wanted to see what Janet Reno looked like in a bikini. So
is Bud Light going to use the data center water to make new beer? Like they did with the
not the new beer.
I don't know. But like, we're using AI for the dumbest things. Yeah. Obviously, it does have utility for some people, and yes, use it to cure cancer. But I mean, don't use it to try to see women naked. I don't know. Whatever.
I'll change subject here for a minute. Got lucky yesterday with Microsoft. It was one of my option trades today.
Be careful with that phrasing. You started that.
I got lucky.
I got lucky, yes.
I got lucky.
You got lucky with Mr. Softy?
Yeah, I didn't know where you were going there.
Kind of picked the bottom on a 92% put ratio spread when the stock was 466. Now it's back down to 467. So maybe you could put that on again. I sold it around $1.10. I think it closed at like 70 cents. We'll see what it does today. Volatility at 39 has been upticking a little bit.
Crowdstrike has acquired a browser security startup called Seraphic for $400 million because it has the magical phrase Israeli startup. It's Israeli cybersecurity startup. Crowdstrike has, again, will pay around $400 million for the Israeli company. Seraphic raised $29 million in a Series A funding round of last year. What are you doing in CRWD?
I got some long delta. Looked like a genius for a second because it bounced like $20 the next day and kind of missed my close. Now I'm basically a scratch.
It had a $15, $20 range yesterday. $16 range. I just looked.
I did. I think this is an interesting spot to start looking at like the next wave of AI
cybersecurity
parabolic moves because you're going to have to protect all this stuff at some point.
Sure.
I think these cyber stocks are probably the next up to get that kind of, you had the chips, and then you had the memory, and then you had the data centers and the energy, and now like this is kind of the next thing that I see.
Okay. That's valid. It's good insight.
CRWD, Ivy rank only 13, hard to tell. Looks like it's down $2 or $1.50.
Netflix is weighing an all-cash offer for Warner Brothers. They're prepping to make an all-cash offer for the Warner Brothers Studios and streaming business. The changes are designed to expedite the sale, which could take months to close, and has faced opposition from politicians as well as from Paramount.
Up $1 this morning, $1.30-ish, but near lows, and I'm long in all sorts of ways.
In all sorts of ways. None of them good.
Netflix has not been real chill for most of the year, even going back to
see what you did there.
September of last year when it made its highs. 125 Down to 90 where it sits right now, 91 and change.
Yeah.
This is a hilarious story. Roblox has been plagued with, issues because obviously a ton of minors use their site and they're like, how do we protect children? So they tried to roll out this age verification system in response to allegations that they have a child predator problem. Well, in some cases, the new software is classifying children as adults and adults as children. One child used his mom's makeup just to draw a mustache and stubble on, and it's like, yep, you're an adult. A+.
Give that kid a car.
That's pretty creative. I gotta give them props on
Roblox
that.
is like trying to. They're bad at this. They can't guarantee the safety of your kids, and that's nothing to joke about or laugh at. Like, it's a bit serious issue. But like, if a kid can foil it, with a $2 Maybelline eyebrow pencil, then you have bigger issues as a company. And
Street liked it.
It was up
Roblox
$8 yesterday, $8-9.
Yeah, and it was up around $5 or $6 a day before that, going from 74 to 84 and change where it sits right now.
Yeah.
It looks unchanged this morning. Maybe
I
down
had
9.
some long delta and got kind of bailed out by the move yesterday and sold some calls. So I'm now flat delta, short vol here. Just kind of, I would call my position.
By short volume, you mean you're short the front month and back the long month.
No, I'm short. I'm short in February. It's all in February.
Oh, it's
I have
all in
strangles
February.
and straddles.
You're basically neutral then.
Yeah, I'm neutral, but I'm short vol.
Yeah,
Neutral,
short volatility.
vol.
Yeah, we're always short vol. But
Yes. So I'm wrapped around, like, we'll call it 70 to 95. 70, 95 strangles.
okay.
What my position is roughly.
Beautiful.
Boeing outsold Airbus last year for the first time since 2018 as their deliveries rose to 600. What are you doing in Boeing?
Well, I'll tell you what we did in Boeing, or Nick did. We took TP, who will be on at 9 o'clock at Tasty Extra. We took his crappy Lockheed Martin idea and made it a Boeing idea. We made some money on Boeing.
Hey.
Yeah.
Boeing trading 244, unchanged right now, but right at its highs.
Yeah. Nice little trade.
I've
I was on the
60.
cherry picks last week. tastylive.com/newsletters.
Nice.
If you want to sign up.
Fanatics, the sports apparel company, is now also going to be a sports media and entertainment studio. They will create, produce, and distribute films, documentaries, live events, and digital series. They have a wide-ranging slate of projects already lined up, including with ESPN and the 2028 Los Angeles Olympics. So you can't trade them, but I just thought it was interesting.
Interesting.
Hey, in other news, this is crazy. Mike Tomlin has stepped down as head coach of the Pittsburgh Steelers after 19 seasons. The Steelers hadn't won a playoff game since 2017. But this is a funny stat that was going viral on Twitter. There have been more popes than Steelers head coaches. So Steelers and Ravens, they have the opportunity to do the funniest thing ever now and just switch coaches. Anyway. But just very storied programs that have not had a lot of coaches, because Harbaugh was 18 years, Tomlin was 19 years. So he announced his resignation following a crushing 30-6 wild card loss to the Houston Texans.
He is the Steelers.
I know. It's a pretty wild change.
It really is.
Yeah.
So they announced who their new coach is yet?
No, but people want Kurt Signetti, and I'm like, you cannot have him. He's ours.
Yeah. No, it'll be interesting. I mean, they're not in a good place. Their roster is a little bit older.
Yeah.
They don't really it's just they're kind of in purgatory.
Yeah.
So they're not as interesting as like the Giants. Like, I think Harbaugh to the Giants is about shoo-in as possible.
It does sound like it. Yes. Yes.
Do you know who now the longest tenured coach is in the NFL? Because now that Harbaugh's gone and Tomlin's gone.
Ooh. That's a good question. I was going to say Andy Reid, but
It's
not.
Andy Reid.
Oh,
Really?
Been with the Chiefs since 2013, I believe. Someone can check me on that, but he's now that those two are gone, he's
'Cause
now
he was
the
Eagles for the other 10 years or whatever.
Yeah.
Yep.
Good job, Eddie.
All right.
Not just a pretty face.
Yeah.
Hey, in other news, this is funny. I don't know who this guy is, but I think this thing is funny. So a lot of companies and restaurants get involved in like free agent chases. So Bo Bichette, who plays for the Toronto Blue Jays, some very, very fancy steakhouse named Animi offered him free steak for life if he decides to remain a Blue Jay and re-signs there. It's like a very, very fancy steakhouse. So PETA People for the Ethical Treatment of Animals was like, no. You don't eat steak for life. They're like, hey, we will give you Viagra for life if you resign. So what do you take? Boner pills or steak for life?
The boner pills are like, the $1 a pop.
They're a dime a dozen. I see on TV. I almost wrote that website down.
Please don't do that one. Please don't do the infomercial one.
Yeah.
Please.
82 cents a pill for crying out loud. I mean,
God.
yeah.
Your heart will
I'm
stop.
so worried about him specifically because he's just like believes everything, just spends, throws his credit card. The passwords are,
1, 2, 3, 4, 5, 6.
Yeah, well, you're like, password is password,
But why was he on a Taylor Swift auction merch site?
I'm telling you, I'm worried about it.
I'm grateful, but I have questions.
I had him put his two-factor authentication. I've told him, I'm never going to call you if I am abducted.
We have to have a safe word. You have to tell me.
Yes, we have to. We
like
do.
a password. That is a good.
So I know it's you. Like,
Yeah.
it could be your voice, like, now and
Yes,
stuff
I know.
like that. Right.
No,
Right.
So-
I'm worried about you.
Because you are capable of some stupid stuff. I mean,
No, not
bail
anymore.
you out on
No,
it,
I got that out of the way.
Hey, here's something crazy. This is something I never really realized about baseball, but there was like a comedian that has like a funny bit about this. So obviously you play football. Every single, football field is the same, 100 yards or whatever. You play tennis, the tennis courts are all regulation or whatever. But like baseball, yes, the distances between the bases are set, but your outfield can be like whatever you want.
Yeah.
And I'm like, that is wild to me that you could just pick and choose like how your field is designed. So
Sure, that was the whole thing about the Yankees back in the day.
Right.
So many lefties, and they just made,
well, the Kansas City Royals are bringing in most of their fences by 10 feet. So if you hit a ball well, it will now be a home run. They're lowering the height as well. I guess people want to see more dingers. It's just crazy. Baseball makes no
Since you
sense.
mentioned football a minute ago, I was watching a replay. I forget what the play was. Or it was one of the playoff games. And the defensive lineman, had the quarterback dead to rights, like he could have annihilated him like we would have back in the day. And he kind of had to hold up a little bit because, you're afraid to hit him too hard.
Sure.
And he got the pass off and they completed the pass. And back in the day, that pass never would have been completed.
Where is this story going?
Because it changes the game. This changes the game.
Yeah.
When every time you change the game.
Yeah, but don't you want to see more home runs?
Yeah, as a fan, I guess you do, but you'll get sick of them. Like if you see too many home runs, just like if you see too many completed
No, I lived
passes,
through the
you get-
McGuire era. That was great.
No, I don't.
Finally today, for my viral video of the day.
You get hacks like, Vinnie, who can't really hit a baseball that could become a professional baseball player.
No, here's the thing. I'm so glad you didn't even know I was going to do this. I have found, this is true, and I'm being sincere, I have found the perfect job for Vinnie.
Oh, do tell. He's very interested. He's
Perfect.
doing this summer.
Great for a B student. Watch this. So they have to paint the lines on the half pipe.
Oh, that's good.
Look at that. That's so cool. He could do this.
Yeah, no, I think he's got the
The
idea.
X Games, for the Olympics, for the qualifiers.
Yeah. Yeah, I think you can do this. There you go.
You're welcome.
Nice. I appreciate that. That's
Yeah.
very good of you. Thank you. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next? Confirm and send. And we'll talk about this market. Got some movement today. We'll be back in 90 seconds. Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Nicky, we are back, son. And you know what that means? Time for a little bit more Tasty Live with Confirm and Send, where we go to viewer emails. But before we do, let's take a look at the markets on this Wednesday, January 14th. Even the S&P is down 30 handles. You can see here they're just about 7 handles off of their lows, off of their highs. That was back over 7,000, 7,250. I think we've hit 7,000 about 3 or 4 times now. That would be about 2 or 3 times more than I thought we were going to do. I thought we'd have a little bit of a V-top. We'll see if that happens today. NASDAQ down.
V-top.
Well, I mean, we have had so many V-bottoms. I figure we can match one little V-top for a month or 2 at least. That's what
Such a thing I didn't know existed.
Yeah, I know. I don't think it does exist until it happens. But so far, I don't think you could say it has. NASDAQ down 148. Russell down 7. NASDAQ is the weakest of the group by a skosh, but they're all down around the same with the Dow down 160. They're all down around a third of a percentage point, a little bit more. Volatility you might notice is 1880 for those playing at home. 18 is the new 16. That's the about $2,000 after the roll of the futures. That's what it costs to hold a future, basically month after month after month, to get that volatility expansion that you might expect. Got up to about 1885, got down to 1830. It's 1880. You can see here at the higher end of its range. We'll see how that behaves for the rest of the day. Keep an eye on that. Right now, it's pretty elevated with everything that's going on, maybe with the 9 central decision on the tariffs. Bonds up 4 ticks, 115.30. They've been stuck in this range of 15 to 16. Got just over 116 earlier this morning. Bitcoin down up $500. Oh, he's used to saying it's down, but it's up $500. It's got over 96.6. It's back to 95.2, but you can see here at the high end of this range, 96,000 or so we haven't seen since early in December. Ethereum up $96, doing the same, flirting with its highs that it made in December. Oil up another 41 cents. I think it's obviously been an interesting 5 or 6 day move in oil, but an interesting move in volatility too. IV rank of 42. So maybe oil will be the next soup du jour. Gold is up $43. That's a big move, about 1% up at new highs. But silver up 6.25% up at new highs. Traded over 92. I know you sold some silver futures right here. Went a little bit lower. Now they're basically unchanged from where you sold it. Gold silver ratio. Have you looked at it? Where
50.
Yeah, 50. 50. It's moved about 6 or 7 grand in the last 3 days. That's how big a move That is nat gas doing the opposite of oil, down 18 cents. And on the earnings front, you had Citigroup, which was unchanged to down small, and that looks like it's up about $1 or so. Wells Fargo was down 1 or 2. It is still down around 2 or so. Bank of America was another one down small. All these stocks inside the expected move. Goldman Sachs today, Morgan Stanley, and TSM, as you reminded me.
Had some short delta in Citi. We'll see if that gives it up a little bit. Kind of the same thing that happened with JP Morgan. JP Morgan was basically unchanged into the open and sold off. And that's actually at 310, which is right at the meat of our butterfly that we legged into yesterday. Because the put spread or the put ratio spread, then I just bought that long put, the 305, to make it a 5x5. So I have the 315, 310, 305. The stock is at 310 here in the morning. Obviously, 2 days left till expiration, so 3 days, including today. But
beautiful.
So we'll see if that plays out.
Let's go. You ready?
Cool. Let's do it. Yeah.
Confirm and send on this Wednesday, January 14th. Let's see what's going on with. Let's see what's on your mind, the viewers. First question, please. The Supreme Court is supposed to release their opinion on the tariffs today. Is this a binary event we can trade?
I think so. I mean, I've been leaning short, and I have my opinion of the grenades that have been thrown and just the news cycle. I feel like there's certainly a binary event here. It's supposed to come out, I think, at 9 Central. 10 Eastern.
Yeah.
I do think it's going to matter. I do think it's going to matter.
But is there anything specific that you could trade? Like, is this going to affect bonds more than the equity market? Is it going to affect oil more than anything else? Bitcoin?
I'm trading it just via the futures, the equity futures. But
yeah, I think it's going to have a totality move on the overall market itself. I don't think bonds are really going to be affected by this as much as everything else.
Yeah.
But volatility
has been nothing.
That's about a 97% chance that there's no rate cut, according to the Fed Watch tool.
Until April. April's our next.
The next 2 weeks is what I was going to say. Yeah. I believe it is a binary event. I don't think there's any one specific thing you can look at. Like, if it doesn't pass, will silver revert lower or will it go higher? I don't think there's a one-to-one correlation, but you should make sure you have your ducks in order with all the risk and positions that you have. I think that's the most important thing.
Yes.
Next one, please.
I have a question. If your beta-weighted deltas are negative, that means if SPY goes up, you lose money, right? Yes.
Okay.
So if you have short delta, beta-weighted delta, SPY goes up, all else being equal, you lose money. But I guess
your delta loses money, yes.
Yeah, your delta loses money. Mm-hmm. What they don't understand is how, if you have positive theta, doesn't that work against your short delta, meaning your theta helps you in the event that the market goes up, short delta.
Yeah.
Or am I missing something?
No.
So the idea of being long theta, so positive decay, and short delta, can you explain that?
Sure. So we have to take a step back for a second. So what does volatility usually do on the way down? Volatility usually expands. And you just said you're short theta. So that's going to hurt your volatility.
No, short delta, positive theta. Short delta, positive.
You have positive theta, which means you're short volatility.
Yes.
Is what I meant. Positive theta decay on the options, the way we like to trade. You sold options.
Yeah.
What happens when the market goes lower? What happens to volatility? Volatility usually rises. So you don't get that premium contraction that you had expected if the market stayed sideways or to a little bit higher. So the thinking is, if you have less long delta or lean a little bit short delta, that would offset that volatility expansion. Now let's understand what happens on the way up. On the way up, volatility usually contracts. You're short a lot of volatility, so you make money on that position, and you hope that your short delta doesn't hurt you as much. So you're trying to give yourself two outs. Two ways to win on the position, as opposed to just one way to win, which would be volatility contraction.
Which is I mean, all of our strategies kind of incorporate this. If you sell puts, you're long delta, but you're short volatility, you're long time as well, and you don't need the stock to go up. Like, you're long delta, but that delta decays, and so if the stock stays sideways or drift a little bit lower, you could still benefit from that. So every trades strategy that we trade, regardless, I mean, the pop will tell you this, but if you didn't even look at the pop, you know that, there's three things that can happen. The stock can go down, stock can stay sideways, or the stock can go up. And everything we do, you have a positive expectancy or a positive outcome in two of those three outcomes.
Right.
And so that's what this is, that's what you were kind of explaining.
Right. I mean, but it's the best laid plans of mice and men,
Yes.
right? I mean, if you are bullish in a scenario, then you should have bullish delta.
Yes.
Right? And your overall portfolio can be something else beta weighted, but you want to make sure that you have what you want directionally, bearish, neutral, or bullish in each individual product.
Yeah. The setup of long theta, short delta is not like a science. That's just one way to do it.
Yep.
Like you can build it however you want, and you could be overweight on certain things. Like maybe you want to be bullish, oil stocks, or you want to be bullish on tech stocks, whatever. You can change that to whatever fits your assumption.
Yep.
Good question.
Next one, please. What is a stable coin and how is it different from Bitcoin?
So stable coins are essentially like, similar to what you do in like a savings account, right? So you put money away.
That's a good way of saying it.
Yeah, but it's held on a blockchain. So it's it's the same sort of savings that you have. The benefit of it is that there's much less of an intermediary. So like if you have a savings account at Chase, you probably get like a fraction of a percent.
Or say zero even. I mean,
zero. You basically get zero in a savings account. You might get 10 basis points, 15, 25 if you're lucky. On a stable coin, you get a higher rate because there isn't that intermediary. It's pegged to treasuries. And so
or pegged to anything. A stable coin could be pegged to anything.
Yes. Right. So you have a higher yield on those. So that is essentially what a stable coin is. And it's transactable on the blockchain, which is similar to like if I'm Venmoing you. Like if I Venmo you back and forth, those are stable coins just in a different phrase. I mean, that is a stable coin.
That's right.
That is what it is.
Because no dollars are transferring, you're not feeling it. Yeah.
It's all digital. It's all.
This is one of the times where they got it right with the names. Stable coins are exactly what they sound like. They're stable coins. They just don't have any movement to them. They're pegged to something. You could almost think of it as like, penny stocks versus bonds. And Bitcoin would be, or whatever product you're using over there, the cryptocurrency would be the penny stock. It's going to have a lot of volatility, a lot of movement, and the stable coin is going to stay basically right where it is. Now, as an extreme example that I was using, I like your example a lot better, but this time they got it right. Stable coins are exactly what they are. They're priced or pegged to something that does not move, or we've preset what that price is going to be. And Bitcoin is a volatile digital currency.
Yeah. But it's not really a price. It's not really pegged to a price.
No,
it just is a dollar. It's like if I handed you this dollar and you owe me this dollar now, I have a stable coin. Because you hold
it's worth a dollar, but it might not have a dollar's buying power X amount of time.
Yeah, you have the dollar.
That's right.
In your hand. Yeah.
Next one, please. I can see how it's difficult for people to understand.
Yeah, no, for sure. Why don't you guys sell much smaller delta options and more contracts? We actually kind of talked about this in a market measure the other day. Isn't there a better probability of profit? I understand you will collect less that was my copper. I sold a copper put spread. Mr. Vecchio, my man, put me in that one. So I just took like $150 out of that.
Making you money all over the place, Mr. Vecchio.
I understand you will collect less premium, but can't you make it up with more contracts? What are your thoughts?
You're not wrong.
The probabilities are what they are.
Probabilities are what they are, and you are right. You will get less premium, and you can make it up with more contracts, which will use more buying power. I mean, everything has a little bit something to it. But let's forget about it and say you had the buying power. Why not do 50 of a 10-cent option instead of one $5 option, something like that? The size kills. We've done the research. It looks great on paper. There's no way that silver can get to $80 and it's $91. You know what I mean? When it was $50, a month ago. It can happen, and that's why they have value to them, because time has value, and it can happen, even if it is a 92% chance that it won't happen or 98% chance that it won't happen. It can happen, and size kills. We've done the research where you're a lot better off using a lot less contracts than more contracts when you're looking to sell premium.
Yes.
Keeps you in the game, keeps your door open every day.
Yep.
All right, even the S&Ps down 27, just a little bit off of their lows that I talked about just a moment ago, about 3 or 4 handles off of where I quoted them last time. NASDAQ down 140 and change. Russell down 6, Dow down 150. Volatility at 1880, sitting right there, up 40 cents. Have a nice 2 or 3 day rally in volatility. We'll see what goes on for the market today. Bonds are up 2. 115.28. Bitcoin hanging out 95.5. Ethereum up $106, doing a little bit better, 3% move in Ethereum versus just under a 1% move for Bitcoin. Gold up 43, and silver continues its rally, up 6 1/3%, $5.47 at new highs. We'll take a quick 90-second break and come back. We got more Tasty Live with an option jive. Immediately found these messages.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
It's option jive. Nicky, 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 we are back, son, and you know what that means. Time for a little bit of an option jive. You all good? Even the S&P's down 30.
Let's do it.
End of the day. We're down 30 right now. I know you've been a little bit pessimistic lately. Are we here?
Lower.
Lower?
Lower.
Okie dokie. Dokie. Something we have not seen.
Vol 20.
Vol 20. Oh, this is like a
I'll
hold.
say
This is like a
VIX.
hold me moment.
No. I'll say the VIX.
Beginning of a hold me
here,
moment.
I'll give you VIX. I'll say VIX at 1825. VIX another point.
VIX.
VIX,
You're
another
talking
point
about.
higher.
Okay, not the VIX futures. VIX futures, you said.
VIX another point higher. 69.25. Get 50 points.
Oof, talking your book. All right. Well, we shall see.
We'll see.
Option jive. Do markets correlate the same way? As Kai would say.
Do they?
Do markets correlate the same?
Do you think correlations hold? So, like, if you look at a month correlation on a 10-minute time frame, do you think they hold? Like, are they similar?
Yeah, I would say so. Sure. On a 10-minute, very
yeah,
tight.
like a really short term.
I mean, anything can happen short term. I mean, so a 10-minute one day. Yeah, like a 10-minute one day. A 10-minute one day is not going to be accurate. A 10-minute 1 month is going to be accurate.
Yeah,
A 10-minute.
if you do it every 10-minute batches.
Yeah.
So here's the question. Correlation of Apple and SPY, basically one.
Yeah.
But most times. Not recently.
Right.
We'll say most of the time. Whatever stock you want.
Sure.
But the biggest stock is
Sure.
market. NVIDIA, whatever.
Yeah. Mm-hmm.
You get a blip in time where Apple goes down, spikes down $1, and the market's up, 50 basis points, up, 30, 40 handles.
Mm-hmm.
Do you buy that dip for a scalp? Do you think there's an opportunity? Like, do you say?
I do. I do think there's a small little opportunity. Yeah.
That's kind of what we're looking at today.
Okay.
Which I think is a really cool look. Because
Yeah.
I agree with you. Okay. Like, I see that move, on a
something, or I might sell the rip in the market itself and saying there's no way this market's to sustain this rally with Apple or the Mag 7.
Yeah,
all
maybe
week,
say if vol is not moving and Apple's down $5 on a some news.
I'm looking to do something. That's the binary event that I'm looking to do as opposed to the tariff news.
Yes, I agree with you. I think it's an interesting look. So let's look at the data.
That's part of market awareness, I think, when you talk about tape reading or anything else like that.
Yeah,
That would be part of that.
For sure. So do markets correlate the same way? First slide, please. So we get this question a lot regarding like timeframes for our research, and we've kind of buttoned up the timeframes a little bit to make them a little bit more interesting and look at like kind of shorter timeframes, more recent market timeframes as opposed to these big broad-based research pieces, which we still do as well. But why do we research and draw conclusions from longer duration trades? So looking at like 45-day expirations as opposed to shorter duration trading. We're going to kind of try to compare those two aspects using correlation here. So the next slide here, we're going to look at a basket of popularly traded broad-based ETFs and compare their correlations on a daily basis to the correlations of the 5-minute time frame to determine if the relationship that we find if it holds in intraday periods. I know we just had a discussion on like Apple versus the S&P 500. That's kind of where we're going here with kind of broader based sectors to each other, to SPY, and seeing if there's like if you can kind of play that correlation on a very, very short time frame. So the study that we are looking at is we're obviously going to look at SPY. We're going to look at the Qs. We're going to look at IWM. We're going to look at TLT gold, which is our metals, USO, for energy, FXE for our currencies, and ITA, which is the defense sector / aerospace. If you remember, we talked about that with TP last week.
Yeah, we sure did.
Boeing, he was talking about LMT. It's definitely been kind of a hot topic here. So the things that we're looking at here, so we're looking at the previous 2 months of daily percentage changes, and then we're going to look at the 2-month data in 5-minute sets. So we're looking at just normal correlation, a 2-month correlation, and then we're going to look at really short time frames, 5 minutes, percentage changes, and see if they go in the same direction.
Okay.
So correlations isn't necessarily magnitude. It's more about direction. And then we're going to compute the correlation of all these assets to SPY for both time periods. So basically what we're looking at is, are they moving in the same sort of direction as a correlation on longer time frames as they do on very short time frames? And this kind of leads into the question of like, okay, if you see a stock, an Apple spike down $5 while the market's up, do you buy that dip? Or do you sell the market? You play for that kind of correlation, that pair to go back to its normal correlation. So let's take a look here at the data. So
this is going to be interesting. So go through this slowly. Go ahead.
Yes. So based on the last 2 months of data, we can confirm that the difference between daily correlations and intraday correlations is very, very small. So regardless of how we look at the relationships between different underlyings, short or long term, they remain consistent. What this is saying is that if something has a high correlation on a 2-month time frame, when you're looking at very short time frames, like a 5-minute time frame, that correlation typically holds. It kind of goes to the idea that we were talking about of like, if you're talking about market awareness, or you're talking about, like you can kind of correlate this to, if the E-minis are down 1% and the Russell is flat, there's probably a trade there for that relationship to get more in line. Meaning, buying E-minis and selling Russell, or just selling Russell, or just buying E-minis. It tells you that the correlations tend to align even on shorter time frames. And so, like when you're looking for opportunities and you're looking for things, and the reason we look at some of the biggest movers every single day is because you can kind of trade that, right? And you could trade that on a very short time frame, and that's kind of what you're looking at here. So you can see the correlations do change. They're not the exact same, but they're relatively in line with the longer term correlations here. So it kind of validates the idea that we were, offhand talking about of like, if a big name stock is down, on a random, event, or just on a 1-minute time frame, it has a sell-off, but the rest of the stocks are up, there's probably a trade there. You can either sell the stuff that's not moving in that direction, or buy the one that is moving in that direction. And there's usually a spread. There's usually, a catch-up is
That's
really
correct.
what the trade is.
That's right.
And so that, it's kind of
It's kind of what we look at for, like I was saying, market awareness. This is how you're basing. And then you put a strategy that has a 65 to 85% probability of success. And at least you're putting yourself, in our opinion, on the better side of the trade, the side that might have a little bit of reversion. Yeah. I like it. Good study so far.
So based on the results, we can loosely conclude that the proportion in which two assets close in the same direction daily is roughly the same as the proportion in which two assets close in the same direction every 5 minutes. I think, it's important to kind of take this with a grain of salt, of course, but, when you're looking at the E-minis and the NASDAQ, I think this is probably a good thing to look at. When NASDAQ is down 1% and E-minis are flat, there's certainly an opportunity there. If this plays out in the way that it does, which is like about an 80% correlation, that's a tradable opportunity.
Most definitely.
Couple takeaways. Regardless on the time period you use to measure the relationship between major asset classes, it's fair to say that their price relationship over one time period may be similar to their price relationship over another. No, they're not going to be the exact same, and it's not going to happen on one data set. You also have to keep in mind that the 5-minute correlation is a big data set. It's not just one data set. So, you can't, it's not always going to play out. It's still going to be a correlation, and correlations, break down at points as well. The increased liquidity and volume in nearly all markets means that we can expect price relationship to hold the same way it does 45 days as it does over a 5-minute period, and most likely any time period in between. So, as long as the other key here is something that's liquid. So all these things are pretty liquid. I guess the aerospace defense sector probably the least is the least liquid of the bunch. But the point being, when you're looking at an Apple and the E-mini pair or E-mini and NASDAQ pair, you got enough liquidity there to kind of make correlations a potential trade opportunity.
Very nice. Good job out of the team. Good job out of you explaining it, too. Even the S&Ps haven't moved. We're going to be back in 90 seconds. What do we got coming up next, son? We got the opening bell. We'll be back in 90 seconds. It's Tasty Live. Even the S&Ps down 30.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
show. Watch me go, 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 go. Watch me go, watch me go. Start the show. Start the show, start the show. Watch me go, 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 go. Watch me go, watch me, watch me go. Start the show. Start the show, start the show. One foot in front of the other, put your best one forward. You've got everything that you have ever wanted. It's already the best day. It's only the rest of your life. You've got the hair, you've got the style. Don't even care, you'd walk a mile in those high-heeled shoes and your velvet suit. Two eyes on the prize. Once you win it, then it's yours. You've got all the time in the world to make a score. It's already the best day. It's only the rest of your life. You've got the hair, you've got the style. Don't even care, you'd walk a mile in those high-heeled shoes and your velvet suit. You've got the hair, you've got the style. You've got the hair, you've got the style. You've got the hair, you've got the style. Don't even care, you'd walk a mile in those high-heeled shoes and your velvet suit.
I gotta play it cool, you gotta look right. I gotta keep it smooth, you gonna want it right. They gonna bring it down, I gotta feel good. You wanna see my moves, let's party all night. We gonna build it up, and then we tear it down. They gonna know our name all over this town. We gonna stir it up and do things our way. So if you wanna move, get out of our way. I'm feeling fly tonight, like a rocket ship. I wanna drive fast in this red hot whip. We gonna stand our ground and show off all our moves. Get out the glitter ball and play some dope grooves. I wanna play the game, I wanna roll the dice. I got an easy hand that's gonna make the night. You wanna dance off, let's get our shoes on. I'm done with all your fussing, this body totally bussin'.
Nikki, we are back. I'm sorry, I had a little internet problem here. As boomers, we kind of trip over wires.
Tripped over the
here.
wire, yeah,
So
pulled something out.
Truth be told, I had to go to the bathroom first time in 15 years. Took me a little bit longer. Let's see what's going on.
We got to get used to those incontinence pants.
I'm gonna need
so
them. I'm gonna need
do
those.
it right there in your chair.
I'm definitely going to need those. I'm not too far away from them too. Even the S&Ps down 31 or 32. They opened. Let's take a look here. They opened closer to 69.98. Well, that's last night. Even the S&Ps down 32. Nasdaq down 219. Nasdaq's the weakest of the group. The Russell, I just saw it a moment ago, went green. Is now down 9. Dow went green. Also, I believe it's down 100. Volatility.
Mini's down 39.
Up by 52. Even the S&P's down 39 going into this 9 o'clock decision, if we have it. On the tariffs, volatility up 50 cents. Bonds are up 6 ticks, 116 and change. Haven't made a new high today, 116.05. Gold up $28. It was higher by about $30, $25 a moment ago. Your silver's up 5% to 90.78. I don't know.
Take a point out of that.
You do have a point on that at the moment. You haven't closed it yet, right?
I have not. Should
Okay, I don't have that open yet, so I don't know. Nat gas down 25 cents. That's a big 7.5% move back down to its recent lows. What is that? Well, that's silver closing it at 90.78. So
I took a point.
Yeah, good job out of you on that. Good job. Let's see what's moving the market here, because there is some movement to the downside. AVGO was weak earlier this morning. It's still weak, down 11. Meta down 8. Tesla down 7. BE down 7. That's a big percentage move.
Oh, my boy Mikos in the chat, he covered his too.
Oh, did he? Oh, his silver future, good for them. Yeah, there's two sides to every trade. Even the S&P's down 40, making new lows. Volatility /VX flirting with 19. Your VIX 1747.
Yeah, this looks like doo-doo.
Up around 10% here. I'll zoom in a little bit on this volatility so you can see how much it's expanded over the last couple of days. Let's see what the buckers are to the upside. You're looking at, man, I hate it when the Chinese stocks, MSTR up 10. Well, that's with Bitcoin. Bitcoin up $1,600, almost 2% move, 1 3/4, and Ethereum up almost 4%. There's your silver up $3.40 still. Baidu up $3.40, coin up $3. Not your biggest buckers that you'd like to see, right? I mean, the stocks that are green right now. Apple's only down $1. Nvidia is down $3.60. That's almost a 2% move in Nvidia. What is that?
I did a diagonal spread in Bob on the downside. We're fading the move.
Very nice. Very nice.
Fading the move.
Good job out of you.
All futures at 19, VIX at 1759.
Even the S&P's down 42. What do you think we got going on here? It's a little bit bearish going into today. Volatility over 19 now. Volatility.
Not just today. I've been bearish.
Yeah.
Into the up move. So I
into the 7,000 touch on the even the S&P's numerous times.
I've sold 7,000 multiple times.
Right. Yes.
Yeah, I don't like it. I don't like it.
And
I feel sad because I'm normally perma bull.
You have been. I mean, we have been on the even the S&Ps right here, basically 6950 to 7,000 for the last week or so, right? I mean, this is where we've kind of stopped. So we'll see what goes on here. Be interesting if we're sitting here at 9 o'clock on this decision.
Take off the gold side of our pair.
You mean
because we took off half of it
and just be
short the silver. I think you kind of do it.
Sure, you can. Yeah, you can do that. I have no problem. I mean, like you certainly wouldn't be selling your long gold at lows, right? I mean,
no, it's highs.
I know.
$100.
Right.
I mean, 200 and 250, something like that.
Yep.
All right, I took it off. So now we're just short silver. I mean, we've had that pair. We've scalped around it.
We have.
If we get a little bit of a move lower in silver, this would be a nice day.
It would be a golden nugget miracle.
Yes, it would be a golden nugget miracle.
Even the S&P's down 46. Haven't really had an uptick here. Your leader in the clubhouse is the NASDAQ, down a full 1 percentage point. Close all watertight doors. Volatility 1910 has not had a downtick.
Yeah. I think.
All right.
I think there's. You know,
all right. Let's
spooky one today. The spooky,
scary.
What was that BE trade? Let me see if I can buy in the risk. No, I'm gonna close this.
You gonna hang tough?
No, I think I'm gonna close it.
Taking profits. Even the S&P is down 46.
I don't know where I'm gonna get filled here, but.
Pregnant pause. Say something to me.
Yeah, it's bit ass.
BE does not have.
I'm gonna just sit for now.
Let's take a quick 90-second break. I'm sorry about that little internet.
Bitcoin 96.
96.
Yes.
Bitcoin 96.5.
Going on here
on the futures, up 2%. Let's take a quick 90-second break and come back. We got more Tasty Live after this. What do we got coming up next? We got. What's your assumption? We're going to look at 10 trades. Let's do that. We'll be back in 90 seconds. It's Tasty Live. Should have some interesting pricing.
Woo!
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Okay, cowboy, here's an earnings event. Keep an eye out for them when you open your trade. They're fast, they're loose, and they can take you for a wild ride. But that's no reason to steer clear, because you can be your own personal earnings event if you take the bull by the horns. What makes earnings events so special? Before the event, people will start guessing how the stock will move once the earnings report is released. That, in turn, makes the options IV rank higher. Like way, way higher. The nearer the event, the more the speculation, the higher the IV rank. Then right after the event, IVR goes the way of the buffalo. If you sell high premium options right before the event, when IVR is really high, you can take advantage of inflated prices and lock your profits when volatility disappears. Only if, and this is a big if, the stock doesn't move against you. If it does, well, sometimes you eat the bear and sometimes the bear eats you. Earnings events can hit you hard. They can also pay off big and fast if you play your cards right. Pretty simple.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live. Let's see on this short little break, and I am sorry about that little internet problem I had earlier. Even the S&P is down $40, son. NASDAQ down $250, about 40, 50 handles off its lows. Russell only down 3. I mean, that's a skosh compared to the almost 1% move on the NASDAQ, 0.5% move on the even the S&Ps, which is down 40.
I'm going to get heavier there.
You're going to get...
I just sold some Russell. Again.
Yes, so you're selling the leader in the clubhouse here.
Yeah.
So going a little bit back now to that kind of reversion to the mean in the overall market. So here's your thinking, right? You're thinking
the market goes down, there's no way the small craps are staying up.
So you would think that they would go down even quicker from this height that they're at now. And if the market rallies, you might think that the Russell's not going to go up as much as maybe some of these other ones that are down, 0.5 percentage point or something like that.
Yeah.
It's a 0.5%.
Bonds rallying though.
What's that?
Bonds rallying. Rates coming.
Bonds are rallying. Didn't make new highs, 116.02, but we are down. Well, we're down 1% on the NASDAQ. That's a decent sized move. We're down 0.5% on everything else.
Yeah.
Yes. Interesting market. All right, are you ready, son? You know what we got now? We got what's your assumption? Let's do it. Even S&P is down 44. What's your assumption? First slide, please. Volatility up 68 cents, right at its highs, up almost 3.5%, 4%. Go ahead.
All right, so we're looking at wheat, lean, hogs. This is Roberto, neutral. We're going into March, playing the pyramid inversion. I don't know if I know this one. Do you know the pyramid inversion?
Yes, I think he's talking about the new food pyramid.
Oh,
inversion.
that's
that's my guess.
That's on that was the new South Park episode, I think.
Yes.
Okay, so short wheat, long live cattle, 4 bales to 3 cows. You guys are amazing. I really
You are amazing.
I mean, wheat's at lows.
Wheat's at its lows, 510 and change looks to be unchanged, and then LE, which I haven't traded in quite some time, down 55 cents.
I don't know if I could do.
I don't make this trade. I think it's an interesting trade, but I would just either get long wheat.
That's what I think I'm going to do. I think I'm going to just sell put spread in wheat.
Yeah, I think that's the way to get smaller in there. And yeah,
all right. So we're going to sell put spread in wheat.
Beautiful.
What's
I'll come
LE
through the
do?
follow page in just a second. I get that for you. So we're going to take the one side of your pairs trade here.
I mean, you want to sell the call spread in lean hogs, or what is LE live cattle?
It's live cattle.
I'm going to stay away. Live cattle a little goofy.
Yeah.
I like that you pointed out that wheat is at lows here, and I'm
Sure.
going to get a little bit of long delta there. So I'm going to call this a win. Give us a check.
Oh yeah.
We traded it.
Yes,
for sure.
Yes. Good job out of you. Next one, please. TSM for earnings. All right. You want to do an early earnings TSM trade?
So
TSM
slightly
down
bearish.
$2.25.
Slightly bearish.
Russell's actually up, just ticked up $1.
I know that's because I got shorted. I mean, the Nasdaq E-minis, that was no brainer, easy one. The Russell, who's not buying the Russell right now? Come on.
Yeah, it's not as healthy when the Russell and the Dow are your strongest in the groups, in my opinion, for the bulls.
No, not. It's not staying that way today. TSM. Okay. Shorting feels wrong here. Maybe just go neutral. So I am with you, Brett. I have a strangle and I'm short the 300, 320 strangle here in February. So I got a little extra duration on this trade. So
February 37 days, that would be the months that we normally would be trading right now. Yeah.
So I'm with you here. I'm with you. I don't think I'm going to add to this one.
You're with them, but you're not going to do this.
Yes.
All right. Sounds good. I tend to agree.
I'm not going to add to it. I am in it.
Yeah, and markets are not good in TSM. I'm surprised you haven't pointed that out. I mean, they're borderline horrible. I mean,
yeah, you're like 50, 60, 70 cents on some of them.
Yeah, I mean, you go to an out of the money option like the 380, 265, 370, $2, 265. I mean, there are better things to trade in this market than that.
Agreed.
Next one, please. Riot. RIOT.
Craig probably gave us our call spread that we took off the other day.
In Minneapolis, yes. Thinking 14/20 Feb strangle, 45 days to go. Riot does not have earnings during the February expiration, February 20th expiration. Earnings are February 30th. IV rank of 34 is pretty good, expanding ever so slightly. Been on quite a rally from around 12 or 13 to 17 without a downtick. Does have call skew, dollar-wide strikes. Call ratio spread maybe. One to triangle. Markets are
not great.
Meh. Is that what you kids say, meh? Or are you too young, too old for that?
I mean, dude,
are you too old for
I have
meh?
freaking gray hair. Okay?
MEH, you do have gray hair.
I am too.
You may have more gray hair than me these days. You're trying.
I mean, there's a,
You're trying. You're definitely trying. You mean the S&P's down 44.
These markets stink.
Russell just went red again.
I put an order in for the 15/20 strangle to do it at $1.80. I've walked it down from $1.90. I'm not moving from $1.80 if we don't get filled them out.
Got it. Right up 50 cents. That's why you had to move those puts up.
I like to go, so I want to collect somewhere around $1
Yeah.
on each side, and so that's why I moved it in a little bit. Both those options, the 15/20 trade at like 90-ish cents, so we're kind of below that, but that's why I moved it. The 14 at 60 cents, that's what I'm managing at.
Yeah. Yep.
Managing it at 60 cents.
Yep. Totally agree.
Thank you, Craig.
Next one,
Working that
please.
one.
Even the S&P's down 45, 47, with about 4 minutes to go if they come up with this announcement on the tariffs or not.
Roblox, neutral, Evan. So great IVR here, selling the 1 standard deviation strangle. I'm with you on Roblox. I actually sold calls into yesterday's move. I'm basically flat delta here. I like it. I think it's an interesting one if you don't have a position, relatively low buying power, and
Roblox up $1 or $2.
Yeah.
Also,
20
Evan
cent
and
wide
Lafayette.
markets here, so not the greatest, but
No, these kind of fringy players here. You go these out of the money options, and they're 40 cents wide on $2 options. You got to be kind of directional here, I think, if you're gonna do anything, do some sort of defined risk trade as opposed to a strangle or something like that. That's just my opinion.
Yes.
Next one, please. Baidu bearish, I believe. Baidu was up. It is up $4 and change, a little bit of a bucker here, making new highs with even the S&P's down 45 and the NASDAQ down almost 300, trading near its lows. Russell just turned green again, basically unchanged.
all right.
Not bullish on China stocks, especially Baidu. Price isn't cheap, and neither is IVR. 56 IVR, a good one to point out there. Earnings are February 17th, just a couple of days before February 20th. Reverse Jade Lizard, maybe?
Ooh.
Better ideas? The S&P's down 45 on the watch. What do you think about a reverse Jade Lizard? I don't hate it.
I don't hate it. What do you want to do? Like the February 170? And then like the 140, 130? I want to do...
So you wouldn't be collecting over $10, right?
No. You collect $7 and change.
Yeah. Yeah.
It defines the risk to the downside.
Sure.
And that spread...
What call you want to sell? You want to sell the 170s?
Well, yeah, like a 30 delta.
Okay, so...
the $5 wide spread...
okay.
The $5 wide spread at $1 or $1.50,
That stinks.
I'd rather just sell the calls.
Right. So can I give you food? Can I give you food for thought? You sell the 170s. Let's say you sell them for $5. Your break even's 175. I don't hate it. It sounds good. Can I give you food for thought? Are you ready? Selling a closer put spread, the 50-40 put spread, and the 160 call gets you $11.57. Your break even is 171 instead of 171 and a half instead of 175. What do you think about that?
I like
My delta's 28. Your delta's 31. It's about the same, but it's more of a classic Jade Lizard. Let's get filled on something.
1179, but I put your orders in if you're doing this one well above.
Mid price is 11.
20 cents above the mid price, and I got price improved by another 20 cents.
You did.
You're pumping some juice in there. E-mini's down 50, 69.51.
That is
69.50 was where we bounced yesterday on the downside.
Yeah, that's what I said when we were. Yeah, right. Go ahead.
If you're looking for a spot to get long, this is probably a decent one. But I'm
the last I'll put it back up there. Last week or so, we've been getting down. We got one day we were as low as 35. That's back on the 8th. But yeah, we've been getting down to here and we've been bouncing. We've been hanging out between 7,000 and 69.50.
But Vol hasn't been expanding into that.
Vol has definitely expanded up 73 cents right now. That's a 4%, just about a 4% move.
Yeah.
So good job out of volatility.
We got more.
Okay. Let's do it.
Cool. So we're in. And that riot trade, I'm going to cancel that because I can't get filled.
Okay. You mean S&P's down 55. 55.
Next one, please. Morgan Stanley, earnings after the close today, right?
Morgan Stanley earnings after the close today.
Ooh, bullish banks overall. What's Citigroup doing?
Morgan Stanley has been on a tear. It is off its highs of 185 to 179, back to where it was in the beginning of the year. So it's taken away all of its gains since the beginning of the year today, and it does have earnings January 15th. That's tomorrow before the market opens. I said after the market closed, but it's really before the market opens.
Citigroup. I just did an at the money call spread yesterday. I'm sorry, at the money long put spread.
Okay.
And the stock is now down like $3 and change. I just figured we saw the move with JP Morgan. E-mini's down 60 now.
Even the S&P's down 60 is
Morgan
correct.
Stanley, I do not concur. I think we've watched all the banks go down, so I'm not on the side of the bullish overall, Gary. But I'm going to do.
We still like you, Gary.
Yeah, of course.
Richmond, Virginia.
We're friends here.
I've been to Richmond.
Ooh, these markets stink. Look at the weekly. So the weekly, which is actually a monthly expiration, the January 16th. Like the 175 puts are $1.25 at 265. The next is 38. The 72 and a halves are 38 at $1.50. You can't trade this. Even the monthlies, you go out to February. The 190s are $1.30 at $3. This is a no-no, Gary.
Yeah, hard pressed.
Rule number one is liquidity, and this is a no-no on the liquidity meter.
Totally agree with you.
I think you got to pass on this one.
Okie dokie. Pass we may.
All right.
Next one, please. QS. Wow, one we haven't talked about in some time. QS down 22 cents, trading around $10 and change. Been going sideways. The low end of its range. I know back in last September it was around $7.50 on its way to 18. Now sitting at 10.5, $10.40 to be exact. Down 20 cents.
Ugh.
If there's been any decision, please let me know on the.
What do you think about like a covered call here?
See anything at the moment? Sorry, go ahead.
What do you think about like a covered call?
A covered call.
Sell the 11 call.
Sure, I don't have a problem with that.
Or you sell the 11 strike put. I mean, the same thing.
Yeah. I'm good with that.
All right.
I think I'm good with that. I'm good with it right now. Right?
Yeah. All right, 948 cover call. I'm in.
948
Same sort of thing. Sell the put or
it's the same.
It's same exact thing.
It's the same thing. Yeah.
We don't do a lot of cover calls.
Right. You usually are going to look for a lower price stock that's gotten beat up with relatively high implied volatility. You got almost all of those factors in QS.
Yeah. I sold the 11 strike call.
Beautiful.
Cool.
Next one, please. We're looking at you. You, son. We're looking at you.
February.
Unity Software.
Oh, laddered puts. I like it.
Yeah, IB rank of 34 has earnings coming February 19th.
Okay, you want to do February, March?
I think that's where you would go. Markets are in here too. Meh.
41, 43.
I mean,
So you're
March
kind of aggressive here.
March options are 40, 50 cents wide. I don't even know if I would do laddered puts in Unity. I might just stay in February, maybe just sell one put in February. You look at the 20 to 30-ish delta option, it's $1.40 to $2.
Mm-hmm.
I mean, you talk about liquidity, it's probably not the liquidity that you want.
Yeah.
Yeah. Yeah.
50-cent wide markets. Yeah, I got to pass on this one. It's just a little too wide.
Agreed. Your Russell is down $6. Your even the S&P.
Wake me when it's 60.
Which is a quarter of a percentage point. Even the S&P is down 56, 57, which is about 7/8 of a point.
Yeah.
Percentage point. NASDAQ down 1 1/3. That's your big leader to the downside, down 340 and change. Volatility up 74 cents, hanging steady at 1913. That's a 4% move. That's one of the bigger moves we've seen in volatility to date. Hasn't moved off of its highs, which is 1920.
We're going to pass on this one, but thank you, Tahar, Tahir from Dubai.
Yeah.
We appreciate you.
Thank you. We appreciate you, Mr. Akabato.
Next one, please.
Next one, please.
Ooh, Mike looking at Oklo. All right.
Oklo.
30 to 60 days out. Today's dip is our chance to get long. Wide bullish put spread. See, the one thing about these high-flying stocks, you typically have the call skew, but also into the down moves, vol contracts, so you don't get like murdered on these puts, even when the stock goes down.
That's correct. That's why puts are schmutz.
Puts are schmutz.
Down $4.64 is a decent-sized move.
Here's what I'm going to do. Here's what I want to do. I want to sell the 75 strike put. I want to do the 100 115 call ratio spreads. You basically do the call ratio for like 30, 40, 50 cents, depending on where you get filled here. These markets stink. We've talked about liquidity the whole time. I'm going to break all of the rules.
We've been harping on liquidity, and you are
We passed on
going to
my
break
friends
all
in
those
Dubai.
rules right now.
Yeah, we've done good up until this point, but I'm sick of passing on trades, and so I'm slinging it.
Good for you. Good
so
for you.
I'm going to do the 75 put, which is around a 20-ish delta. No clue where I'm going to get filled. It's probably going to be a horrible price. 440.
Do you like your fill?
I love it. I'm in.
Beautiful.
69.50. We're back.
69.50 on the E-mini S&Ps. We are back. You are right. They got as
All
low
coming
as
in a little bit.
69.38. Volatility is coming back a little bit. 19.02.
Is it a fake out?
Is it a fake out? Is an excellent question. I don't think we've had any decision yet.
No.
On the tariffs that I can read. Well, volatility will tell you. Maybe if it ticks under 19 here, then you'll say it's a fake out. Right now, I think it's just absorbing any kind of movement that we've had in the market.
Andrew's saying that the show's gotten weak. We haven't heard an Omaha in a while. I don't know, Andrew. I think we've had a couple Omahas recently.
John's drinking his coffee right now. You gotta leave him alone. I mean,
yeah, we've had a couple.
Beth is more Omaha.
We're on good
terms.
Yeah, we're on good.
We're definitely on
We're
good
trying.
terms.
We're trying to be
Yeah.
good boys.
Yep. Give me SP down 55.
DraftKings, DKNG, Neutral, Dale, Seattle, February 30-40 strangle. This thing's going nowhere. I kind of agree with you. I'm long stock, short 2 calls at the 37.5. So I basically have an at the money straddle in February. You're looking at the 30-40. It's a cheapy strangle. I don't hate it. 20.
It's definitely a cheapy one.
Yeah, I think I could do this.
Mm-hmm.
Let's see. 146.
DraftKings, you're in. You did the
30-40, exactly as he gave us. But I have the long stock, and then I'm short 2 of the 37.5.
Got it. So
I'm a straddle. I'm here.
Good job at you. 146 credit on that. Beautiful.
Cool.
E-mini SP down 55.
Oh, that's the last one.
That was the last one. Yeah.
You did good.
Yeah, I would say you did real good.
Yeah.
I think you were mechanical with a lot of your
until the Oklo.
And yes, but you have
got me. But I have an addiction to those stocks.
I was going to say that. Yes,
I have a little bit of
like a fly or moth to the flame. You can't avoid those. Let's take a look at what's going on in the market because it's the first kind of movement day, especially to the downside that we've seen. Even S&P is down 54. Volatility hanging out at 1906, up around 3.5%. Nasdaq down 324. Russell's definitely your strongest of the group, down $5. Dow down 183. I don't like your Russell short. If I was you, I'd probably be looking to close that.
Why don't you like it? Because bonds are rallying?
Yeah, and I think if you got a rally in the market, maybe you could sell that instead as opposed to the Russell. It doesn't look like the Russell's going to be...
I'm on the other side of that. I think if you get a 50-point down move from here, if you get to 6,900 and vol starts to expand, there's no way anybody's holding long Russell into a real down move. That's what I'm thinking.
And if we get an up move, Russell's going to be up a full point. Percentage.
Yes.
That's why I say you close your Russell, you take your scratch, your small profit, and if you get a rally in the market, you do something.
All right, that's fine.
Let's take
I'll do it here. How does Daddy do it?
Quick 90-second break and come back.
I am the luckiest man ever. This is my dad. This is the dad I get. You can't.
Even the S&P is going to be down 100. Russell's going to be down 3 percentage points.
And I get this guy. I get this. He's a.
We're going to take a quick 90-second break.
You get put with your family, and I got a good one.
We're going to take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next, son?
Market measures.
That's right, with my man TP coming
Not
in the
market
house.
measures, cherry picks with TP.
Tasty Extra. Yes. Everything else, we'll be back in 90 seconds. What we want to know is TP is in the house. That's what we want to know. We'll be back in 90 seconds, Tasty Live.
You got the man, the myth, the legend.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
body totally bustin'.
Nicky, we are back, son. You know what that means. Time for a little tasty action with my man TP. How are you, handsome?
I'm good, Dad. We're getting nice little sell-off this morning.
It's about time.
We're
back.
Can we talk about that for a quick second, TP, before we get to the cherry picks in your agenda?
Please do.
Even the S&P is down 37. Now, we're right above where we've been hanging out at 96.50. We got a skosh below it on its lows. Volatility got up to 1920, decent size 4% move in volatility. It's contracted by about 35% off of its highs to just under 1887. That's after the VIX futures rolled last night. Your Russell, good cover by you, son. I don't know what little birdie talked to you.
But the Russell's
amazing dad. Actually up $1, and the Dow is down 100. Those are your two leaders in the clubhouse, with the NASDAQ, which was down over 1.5% a moment ago, down just about 1%. TP, I know you live in the land of silver and gold. Silver up 6%. Really hasn't had a downtick. We've been trading for the short side, been able to make some small profits in there. Gold.
What's a downtick?
Yeah, what's a downtick in the market? What's a downtick in the metals? You're right.
What?
You're right.
What's a down? Unbelievable.
Yeah.
No. So anyway, my wife.
Emails too. Tell me about your
my
wife.
My wife loves, all that Native American silver and turquoise jewelry.
Yeah.
She goes out there. I say, listen. You're probably walking out the door with about $2,000 worth of jewelry. Maybe you want to back it off a little bit. She puts on this necklace.
Well, it used to be $200 worth, right?
Yeah.
What's that? What?
It used to be $200 worth of jewelry. Now it's $2,000.
Thank you.
Yes.
Thank you.
Yes. So
did she listen to me, Pat? No.
Of course not. So we have somebody here that might listen a little bit more than your wife, because they're always right anyway. But this gentleman over there across the pond, my son over there, he bought 10 ounces of silver just as a gimmick, just to have it. Felt
during
heavy.
COVID, when we were just
he had nothing to do. Paid in the 20s for it. Should he go and sell his silver, or should he hold on to it?
I think you should just hold on to it. Why not? There's if you bought it, Nick, if you bought it back in 2000 or 2020, whatever it was,
27, something like that.
You have so much downside cushion. What do you care? So what if you give back $10 of profits?
Yeah, be like a boomer and just hold. Like you made fun of us. Now you have an opportunity to do it. TP, you're exactly right, TP. I was more on you should sell it. But you know what? You always talk bad about us boomers that just bought stocks when they were so low. You bought silver when it was so low. Why are you trading? Just keep it.
Are you calling your father a boomer?
Yeah,
numerous times.
Tony, that drives me up the wall.
He has gotten a little crotchety though. He is a little cantankerous. He is a little cantankerous.
I am not.
Sometimes in the morning, with Vanetta,
with good reason. With good
Vanetta
reason.
showed a video of a. Wait a minute. I'm sorry to interrupt you, TP. Vanetta showed a revenge video of a woman taking a baseball bat to a pickup truck. Now I'm sure the gentleman who owned the pickup truck probably did some heinous things, and he deserves whatever justice he should get. But he does not deserve to have his property destroyed.
Yes. No, but that wasn't that's not the only one. You've been you're a little cantankerous. There's nothing wrong with it. It's okay.
I used to call the administration over there cantankerous. You can't call me. You got to get your own
I understand.
word.
I understand you can be upset. I understand you can be upset. I understand wanting to destroy something personally, unless she's got some, significant, upper and lower body strength. She's not going to do that much damage.
Oh, she had a baseball bat. She had a baseball bat. She was doing good.
Yeah, that video.
Well, like what?
That woman has done that like.
That's not the first time.
That was
what,
you could
breaking
see
headlights or something.
She got every window.
and
she got every backlight.
Yeah.
She was hitting the bed. She was.
Yeah, and she wasn't doing like the flat side of the bat. She was doing like the tip of the bat that really smashes. Into
She
things.
was.
Like,
She was.
You could tell this was not the first time.
She was angry.
Very angry. That's my city group.
So you
or she was doing it for TikTok or whatever.
She must have a lot of paid followers.
Or it was AI. How about that?
It
was
could have
AI.
been. It was seriously.
It was just clickbait.
Could have been.
So my wife watches these videos. My 20-year-old daughter says, AI.
Yeah.
And how do you tell the difference? You just know. All right.
It's so good right now.
Whatever.
You're right.
This exact conversation worries me with him because he has a lot of AI. I keep telling my dad, I'm like, Dad, they can't possibly be that big. It's not real.
No, I tell that to my wife. My wife gets fooled by those. Not me. All right, you're right. All right, TP, cherry picks.
Let's get into this cherry pick.
Come on.
Guys, we do not have
That was your
all
Omaha
frickin'
chance,
day.
John. We got called out in the chat for no
All
Omahas.
freaking day. So here's what I did. So I had a question, and I know that, Tony, you and I have been talking about this for a long time, and you and I have both seen this happen off the floor, on the floor. Nick, you're starting to see this the more you get into trading, is how much do stocks move ahead of earnings versus after earnings? So I decided to pull some data. And I'm not a research pro, so I had to sort of, restrict it to a relatively small subset. I picked the Magnificent Seven, and I don't really like that name, but basically it's seven of the biggest market cap stocks out there. They have decent liquidity in their options. So what I did is I went back over the past year, over 2025, 4 earnings cycles. I looked at the price volatility before the earnings date and the price volatility after the earnings date. What does that mean? Okay. You take the 1-day price change. Okay. So, Monday to Tuesday, Tuesday to Wednesday, Wednesday to Thursday, 5 days ahead, 5 days after. Take the standard deviation of those price changes. That turns it into a volatility. Okay. And then I averaged out those 4 numbers for each stock. So NVIDIA had 4 earnings in 2025, 5 days prior, 5 days after, calculate the volatilities before and after, average them, and that's what we're seeing here in this 5-day average volatility. The orange is the post-earnings number, okay? The blue is the pre-earnings number. What we're seeing is significantly higher price volatility, not implied volatility. That has nothing to do with the options. Okay. Significantly higher price volatility after the earnings come out than before the earnings. So earnings are coming up, let's say, next Friday. We should expect to see a certain amount of volatility variance in the price changes of a stock, whether it's NVIDIA or whatever, okay? But after the earnings come out is when we see higher price volatility. In other words, bigger price swings. Now, that's not surprising. Right, Tony, you've seen this a million times.
Sure, it doesn't surprise
Is that once the number comes out, people get scared. People say, "Oh, geez, it's a good number, it's a bad number. Either I'm going to start bailing on my positions, and they just dump the stock, or everybody says, "Oh my God, it's the next Apple," and they start buying it up, and that can increase the actual price changes up or down post earnings.
Sure.
Yeah.
The question is, how much does it change? Okay, so we know anecdotally, sure, okay, prices swings are higher. If we go to the next slide, if we scroll down a little bit and go to the next next number here.
Yep, the pre and post price volatility increase.
This is the jump. This is the percent increase in the price volatility. So what you have is NVIDIA is 45%. So to put it in reference, it would go from, let's say, 10% volatility to 14.5% volatility, that sort of thing. Google was negligible, but Apple, Microsoft, Amazon were all about 100%. In other words, twice the volatility after earnings than before volatility, than before earnings. What was that, Nick? I'm sorry.
Of the price movement. So like
yes.
So like it might move like 50 cents normally, and after, if it's 100%, after earnings, it might move $1 on average. Like that's
Yes.
the sort of the comparison it's looking at. It's an interesting stat.
Thank you. That's exactly right. So what you have is Tesla is, about 80% or whatever. What does this actually mean? We all know, and we focus on implied volatility, option implied volatility, and we see option implied volatility increase ahead of earnings. Okay, we've seen that a million times, and we see it drop after earnings. What I'm saying is, at least for this, and hey, guys, this is 7 stocks. Okay, the research team can do this for 500 stocks, and I'd like to see what those numbers are. But the point is, for these big stocks, selling premium ahead of earnings to take advantage of higher implied volatility makes sense. Let's say selling strangles, iron condors, that sort of thing. But holding it through earnings doesn't necessarily make sense. If you think a stock is not going to move that much up to earnings, great, gotcha, okay, fine. But if you carry that speculation through earnings, taking a lot more risk. And Tony, I want to get your feedback on this. Because one of the things that the way I approach trading is implied volatility is great for trade entry. So for locating trades, entering what type of trade should I put on? Selling spreads, buying debit spreads, that's what Nick does, right? Okay, fine. Base it on volatility. But once you have that trade on, the stock price is by far the biggest determinant of the P&L of that trade. Okay, so as you approach expiration, let's say you put a trade on 45 days or 60 days or whatever, doesn't matter. As you approach expiration, volatility impacts those options less and less and less. So, I sold it at 80% volatility, and now it's 60% volatility, but the stock has gone against me. Chances are you're losing money. Because that 20% favorable move in implied volatility didn't offset the unfavorable move in the stock. That's what I've seen in my own trading for years. That's why it's, it's like, okay, I don't really monitor the volatility change that much. Okay, what I'm mostly interested in is what the stock price is doing. Tony, it's like at expiration. If you had short strangles on and you trade an OEX back 100 years ago, I was trading bonds, you get a short strangle on that's expiring, you don't care what the volatility is. You're trading the stock at that point. You're trading the index. Index moves up $1, you're long 100 deltas, moves down $1, you got 0 deltas. You're not trading volatility, you're trading the stock. And that's what this is right here.
No, you're 100% correct.
And I think this also tells you that
it goes to all our mechanics here. You're just looking at our mechanics in a different way.
And it goes to after the earnings, just closing the position and taking the money and running, because after the earnings are out, there's more price action. So if you get that non-move or that directional move that you were playing for, and volatility contracts and you have that profit on the table, waiting for the rest of it doesn't make sense, because the actual price volatility moving forward gets way, way wider. So, we get that question all the time. Well, it's so far out of the money, why not just hold it and take the extra 10 or 20 cents or whatever the dollar amount is? This is kind of the reason why is because, you've played for the non-movement, you hit it, and now going forward, there tends to be a lot more price action after that. So, you close it, take the money and run.
No, Nick, you can find examples, Nick, of where this didn't happen. Okay, fine. I get it. You're going to find one-offs and things like that. Well, the volatility in the stock didn't move that much. I should have held on to that short strangle. Okay. Okay, fine. And this is not an exhaustive study. Yeah. This is 1 year of earnings across 7 stocks. But the consistency of these results is what caught my eye. And I thought, hey, okay, like Tony, you just said, this kind of reinforces all the stuff we've been talking about. But this tells you why the magnitude is so much bigger. You need to get out of those trades. So let's move on to a couple of trades that I was looking at.
Cool.
I like the way you pointed out. I like the way you pointed out the consistency, though, of that as your kind of definitive why it was important to you, which I think is a great factor, which I don't hit on. Which is good on
look, guys, I can't pick the direction of the market. I don't know.
Yeah, no, right, me either.
Okay. All I just look for is consistency. What's this consistent strategy? So the first trade I'm looking at, Microsoft. And guys, all I did was look through those 7 stocks, found the ones with the highest IV ranks. Okay, that's it.
Yeah.
And could I collect a third of the width of the strikes on the iron condors, even though they had like 10 days for Microsoft? Yeah, I'll sell a 10-day. Hey, if I'm selling zero DTE SPX strangles iron condors, I'll sell a 10-day iron condor in Microsoft.
Sure.
So this has what, a 63% chance or whatever the number is, I can't read it there. 63% chance of making 50% of its max profit. Yeah, I'll take that chance. That's not bad. For a defined risk trade in Microsoft, I'll try that. Then the second one is, and I'm also making about $4.70 in theta on that. Second one, same thing, Amazon. Short iron condor, a third of the width of the strikes. I get a 71% probability. They're a little bit higher, making 50% of the max profit. Would I be happy with making $40 in a week on this iron condor versus $169 max risk? Yes. Yeah.
Yeah, that's really how you got to look at it.
It's get out of it ahead of earnings. That's it. That's all I get for you.
Yeah, I like it. We don't have an Amazon position where we have basically the same sort of thing with Microsoft, just kind of neutral delta, short vol. Amazon, I think, is one that we can look at here. Put something on, maybe a wide strangle here.
Good job, Eddie.
Yeah,
you brought Lockheed Martin. We end up putting a Boeing trade on that worked out for us. So maybe you'll be 2 for 2, TP. That would be a first.
No, it's with all like we were talking about last week when there's more shooting this week, those stocks are soaring. Anyway, on that cheery note, happy 2026.
Happy 2026 to you too. Volatility back over 1915.
I did a strangle at Amazon, so I'm
$4.58 credit to 210, 270.
One standard deviation. Yeah.
One standard deviation on each side. NASDAQ is your biggest loser, down $320, a little over almost 1.25%. Russell down around 1/3%. Dow down almost 0.5%. Even the S&P's down around 7/8%. TP, thank you for your time, my friend. Bonds 116.08. Silver still up $4.76 with a 5.5% move, and gold up $20, have not moved, about a 0.5% move. We'll be back in 90 seconds. We got more Tasty Live. We're bringing our boys from the trade desk, Q and R, Quentin and Ryan, I believe, right? Yeah, we'll be back in 90 seconds. It's Tasty Live. You mean the S&P's making new lows? Maybe. Back in 90 seconds. Tasty Live.
Thank you, TP.
Thanks, guys.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Nikki, we are back, son. Before we get to our men, Q and Ryan, what do you think of this market here? So no decision today. They kicked it.
Oh, they kicked it down.
They kicked the can down the road.
When?
I haven't heard yet. I'm going to assume 48 hours. That's what they did last time. Pretty much maybe Friday or Monday next week. We'll see. But I don't know. That's just me completely guessing.
Everything is theater.
Yeah, but now let's look at how the markets behaved here. Acting a little worse, right? Even the S&P's down 54, volatility back near its highs. Not kind of taking it as a good sign that they're kind of postponing this. NASDAQ still down near its lows, but $70 off its lows, I guess is a decent sized move off of its lows. Mm-hmm. Russell's a little bit lower. Silver keeping its wings up. Gold keeping its wings up. Bonds catching a little bit of a bid.
Yeah.
Market's acting a little bit like you can sell rallies here right now, especially with volatility. Volatility stays over 19 today, closes over 19. You can have a lot more of an expected move in the overall market. Like even the S&P's expected move at 940 is $24. That's what it was at 830 under normal days after some sort of announcement that's no longer an announcement.
Yeah.
So volatility is definitely elevated. What's the VIX one day?
It's probably pretty high at this point.
Well, it was over 10, 10 and a half or so. It's down to about 9.5 right now.
Yeah.
All right, enough.
A lot of mixed signals is I think the consensus here.
Yes.
You got the metals going nuts. You got Bitcoin back in vogue here at 96, 97.
Yep.
And then you got equities getting killed, but then you got the Russell basically unchanged. So it's very all up, oil up, bonds up. I mean, it's weird day.
All right.
Weird
well,
day.
Enough out of you. We'll run out of time. Let's get to this, man. My man Q, how are you? Just this is
how's
Rivian.
it going?
Good job,
Rivian
buddy.
puts
Nice
or
job.
calls. I just
You don't talk over Q.
I know. I just wouldn't.
It's okay.
Sorry, Q.
I'll let it slide this time. It's okay.
Good enough. Q, how are you, my man?
Yeah, I'm good. But
how's the desk today?
The markets are a little weird. And, it's always like, we're not getting it's not like a huge amount of traffic this morning on the phone. So it's always a little eerie when there's not you would think There should be more calls today.
Yeah.
And it's
Well,
like,
we haven't gotten out of this really tight range.
Yeah.
We're around right where we are, 6,950 on the ES to 7,000. So everything is status quo right now. You need another 50 handle move.
yeah,
then you'll light them up.
think on a day like today there would be like some more calls into the trade desk, but
Mm-hmm.
there's not. And so I guess people are still like waiting, making some decisions, assessing
Yep.
the market this morning,
Yep.
and just seeing what's going on. And then, I mean, silver. You know, silver is like big. When I got my cousin texting me about it,
Mm-hmm.
he's like, "Hey, should I buy silver?" And I'm like, "Well, I would have told you it was probably overbought at 50. So you don't want to hear anything out.
Yeah.
I'll let you,
And then again at
you know?
70.
Yeah,
You
like
would have told him,
who would have
this is
thought?
definitely it.
Who would have thought like 75 was buy the dip on silver? Like who would have thought that? I mean, it's crazy.
Not I.
Yeah, I know.
Frankie in the chat.
Yeah.
Frankie would tell you to buy the dip right now. Buy the highs.
Yeah, and,
Buy it
you know,
again. Buy it tomorrow.
we got this new kid on the team, Maxim. Shout out to him. I was teaching him about futures today, and I'm like, yeah, so like you see how like the price of like SI is $90, but like it's actually every point is worth $5,000. So it's
Yeah,
really a
on the big- on the big
$450,000
on the SI futures.
Yeah, on the big futures, I'm like,
Yeah.
so every point is actually $5,000. This is a $450,000 index. But you only have to put up like 65 grand to trade it. So that doesn't mean go nuts. That means watch yourself.
Yes.
You know?
Yeah.
And so I was teaching him, he's like, oh, futures are sick. And I'm like, well, they're sick when they go your way.
Yeah,
But
leverage is-
you want to make sure to, be careful and stuff like that. But yeah, it's always exciting seeing the new traders understand the markets. And I'm telling them how this was really made for like farmers and stuff like that. Not made for us speculators. We add liquidity, which the farmers love, but it's really made for them to hedge their product. And there's futures out there for everything. I mean, there's only certain like tradable futures, which are some of like the ones that we offer. But I remember one time I was looking up like there's shrimp futures, which are massive in Korea because that's like their product over there.
There you go.
And so
And that makes
there's
sense. That makes
everything.
sense,
There's futures
yeah.
for everything.
Yeah.
And so we were just talking about that. And I was like, that's always a riveting conversation to see someone like first start to grasp those concepts,
Very cool.
Yeah, it's always nice.
Yeah.
All right, let me get to my list here.
All right,
Top
let's do
20
it.
symbols going through the system and their IVR at number 1. No one else would expect anything different. SLV at 122. So volatility really expanding a lot intraday. If it's over 100, that means volatility is expanding a lot intraday, especially to be 122. You do not see this often at all, a 122 IV rank. And on to number 2, MSTR 32. NVIDIA 7, falling all the way to number 4, Tesla 8, IBIT 31, GLD 55, Meta 36, Amazon 38, Microsoft 42, Palantir 27, C 21, Intel 56, Wells Fargo 14, TQQQ 24, Netflix 50, Bank of America 12, AMD 37, Apple 20, Google 36, and SoFi 20. A lot of the banks popping up here. See, that's Citigroup. A lot of the banks popping up here. I assume due to
Yeah, Citigroup had earnings too. Wells Fargo, Bank of America. You've got Goldman Sachs tonight and Morgan Stanley. So banks are in play a little bit. TSM.
TSM has earnings tomorrow morning. Yeah.
Tomorrow morning. It comes out like 2 o'clock in the morning or something like that. Sometime like that. I'll be sleeping.
All right. Well, I will not be here the rest of the week, and then
Don't worry. We got what's his name? What do we call him? Marty.
What's
Marty
his name? I
Supreme.
like that.
No, Marty Supreme. We named him Marty Supreme.
I like when you called him what's his name. Think
No,
that he's
no,
forgotten.
no,
I
no,
like
no,
that.
no.
I'm gonna let him know. Oh, you guys are in
Disrespected
trouble.
Marty Supreme.
You guys are in trouble tomorrow. I'll be like, yeah, they forgot your name.
No.
Oh, you guys are in
new
big
nickname,
trouble.
Marty Supreme. Don't do that to me. Don't ruin a 40-year relationship. My longest relationship.
Very nice.
Yeah.
Very nice. There we go. Hey, good job out of you.
Good job out of you, my friend. We're going to go to, who's our next victim? Well, he's not a victim. It's doing good today.
Yeah, we're back, baby. This man is so freaking back.
He's money. He helped us in what was it?
The XRP future.
Yes.
Oh, well,
Worked
you
out
get one
well.
every once in a while, I guess, right?
That's right. That's
feeling
right.
better.
That was a good one.
And Bitcoin traded up to almost 97,500 on the futures. They're 96,700 right now, up $2,000, up 2%. So good move there, bucking the equity market. So outside the standard deviation for the week, and it's only Wednesday.
Yeah.
I've got some updated ranges for you, though, which is
beautiful.
also
I like that.
encouraging. But yeah, it feels a lot better. Maybe playing
So
a
you're
bit
going to
of-
update the update.
We've got an update to the update, absolutely. But maybe
like it.
playing a little bit of catch up here to what we've seen in other markets. Obviously, you guys just talked about silver, precious metals. We're seeing equities at all-time highs here or near highs, and crypto starting to catch a little bit of a bid. But you've seen that literally since January 2nd. The year started, markets reopened, and crypto caught a bid. I think you need to hold 95. Let's give it a day or two here, but definitely trading a lot better than it has.
Most definitely.
And it's come quick. I mean, it's been a 2 or 3 day, 48-hour-ish move. Basically, I mean, this week, we're finally busting out. I love it.
Yeah, which is the one point you can't forget when you have these drawdowns, just how quickly you can snap back. And I would argue the same thing up here too, right? You could trade right back into low 90s, 92, 90 area very quickly. We're used to the chop, we're used to the volatility, but just remember, those moves do come pretty quickly.
Good job out of you.
So if you guys want to run through the slides here, have a couple things to update you on, a couple talking points. Let's start with volatility here. We've talked about this premium that's opened up between 30-day realized volatility and 30-day implied or future volatility. That premium's come in a little bit, but it's still there. It's pretty substantial relative to what we've seen over the last year, even though implied volatility is low. These are cheap options, relatively speaking, but we haven't moved up until now, right? We've been in this 85 to 90 range for basically the last 2.5 months. Maybe that's changing again. Let's see if 95 holds. But that said, what's encouraging to me here with our 1 week, 1 standard deviation moves is that you're now seeing, in terms of the calculation, higher highs, higher lows, obviously what you want to see if you're bullish. So we've got 101 for Bitcoin at the top of that 1 week, 1 standard deviation move, given the current spot and implied vol of 41%. And then for ETH, on the downside, we have retaken, at least in terms of how this move is calculated, we've got a $3,000 price point on the low end of that 1 week, 1 standard deviation move. So we'll see if that holds or not, but definitely trading a lot better. When I look at the volatility picture in here, I think there's 2 different ways you can view this, right? You talked about this, I think, on Monday, Nick, where if you're long, this has been a fantastic time to sell calls specifically because of that vol premium.
Yes.
That said, this will resolve itself in a couple of different ways, right? Either realized vol is going to pick up or implied is going to collapse from these lows. And quite often it does collapse from the lows. But the other way to view this is that options are cheap in IBIT and ETH. If you think that realized vol is about to pick up here, but if you have a position, it's been a great time to generate yield off of it. So I know these are 2 very distinct ways to kind of view the market.
Well, you're thinking more on like a duration standpoint. Vol is cheap.
Yes.
Like the shorter duration vol is kind of middle range.
Well, I'm just looking at the 30-day. If we use the implied vol index, VIX style calculation, you rank that, where is implied volatility? Well, for ETH, it's at 57%. Bitcoin, it's at 41. ETH can get back up into the 70s very easily, but realized volatility has also absolutely collapsed. So I think, on a 30-day basis, there's some premium in there, but you're also looking at very low vol in terms of realized moves. You could see that change very quickly. So those options there could actually be, well, they are cheap in that sense. So a couple different ways to slice it, I suppose. But the next slide I've got for you guys here is just a quick look at relative performance as well. We know that most tokens are correlated with Bitcoin or with one another, so it's different degrees of volatility. What we're now seeing, at least over the last month, is that Solana on a relative basis has overtaken Bitcoin in terms of performance. ETH basically flat. XRP is a little bit weaker, but going back a week or two had a much larger move. But that's a quick look at relative performance there, at least over the last month, to give you some context of where we are.
It's been a good little move there.
Yeah, good little move. I actually wanted to ask you, because there was a lot of news around the kind of the legislation that's been passed around that I think was Monday.
Yeah, as the government does at times, things get postponed, the can gets kicked, so to speak. But it's ongoing. That is probably the next kind of short-term catalyst that I think supports markets over an intermediate period.
Okay.
But what you're looking at right now is 2 different committees that are going to have a hearing in the Senate. So this is passed in the House. It's in the Senate right now. There's a couple drafts of the bill. They'll get marked up. There's a couple points of contention, but I think that you will see something get done here, and you could see the Clarity Act, which is the market structure bill, pass at some point, maybe by the second quarter of 2026, though maybe more realistically, we assume just a little bit longer time frame. But that is ongoing. And you have two committees for anybody that cares, because this deals with both the CFTC and the SEC. So you have two different regulators. So you have the Senate Banking Committee and you have the Senate Agricultural Committee that are both going to mark up the bill and hopefully come to some agreement on some of these points.
Do you see it just generally as like a good direction?
Absolutely.
I imagine you haven't read every piece of the legislation, but just in general, it's a positive catalyst for crypto space.
I mean, in the name, clarity. And that's what everybody wants.
Yes.
It's not
Is it really clarity?
It's like stable coin, like stable.
The real question is, with all these, like a lot of the legislation that comes out, it almost makes it more gray at some points. Like this one, you think is like, are we on the right path is kind of my question. Because I see it on my Twitter, it's like kind of 50-50. Some of my
So your news is Twitter. I like it. I go for their news too. Go ahead. Yeah,
Yeah,
you
but
just got to
you
weed
get
out
fake news all the time.
You got to weed out the crap. Yes.
Yeah. So that's really my question. It's like, like from a, is it good?
Absolutely. There are camps that are going to argue over certain provisions, certain things in there, right? Some of the sticking points right now have been on whether or not stablecoin issuers can pass on yield, and those platforms can allow you and I to generate yield off our stablecoin holdings. You can do that right now, but maybe that changes. Coinbase is obviously pushing for that to remain.
Yeah. Because that would be the bank keeping that.
Yeah, there's a view or views around how we treat DeFi protocols, developers involved with software there. And then there's clearly the kind of anti-Trump slant, because he's been the only one to set up, or through his family, set up some organizations that have benefited really off of crypto. So there's a push to make sure that senior government officials cannot profit off of any crypto ventures while in office. Whether you agree or disagree, care or don't care, that's certainly one of the sticking points. And then again, on the DeFi side, you have the Republicans that are pushing for some protections of DeFi. You have the Democrats that want a little bit more of the AML KYC compliance. It kind of fits within the existing box. So we'll see where it lands. But to quickly answer your question, overwhelmingly positive. You go from an environment where you had to be concerned that if you did X, Y, or Z, the SEC was going to hit you with a Wells notice, to largely an environment in which for now there hasn't been any enforcement. But when you have rules, the big pools of capital, the big players will now be able to participate. Regardless of what those rules are. You might disagree with some elements of them, but now it's clear as to how, if you want to participate in this market, you want to build, here's how you can do it legally within the United States. And I think additionally, as you see in other industries, that sets the tone. You have regulatory harmony globally. And so this just pushes crypto forward in terms of adoption.
I think it's great.
Very good.
I need more. Let's get back to like 110.
Let's get 100.
Yeah, let's get 100.
Let's get 100.
100 again. We start talking about it. You get Tom Lee comes out with 2 million, price target. Let's get back to that. That was fun.
I need those $1 million price targets again.
Yeah, come on.
Good job out of everyone here. I'm going to take a quick 90-second break. What do you think here, son? E-mini S&P is down 70. Full 1 percentage point move on the E-mini S&Ps, about 6 handles off of their lows. Volatility flirting with 1907. It was just 1920 a moment ago. Flight to quality on bonds, 116.12. As bonds go higher, rates go lower. 90-some-odd% chance that there's no rate cut in the next 2 weeks. Really not until April, if anything, at all. Bonds catching a little bit of a rally. Bitcoin, flight to quality, 97.1, up about 2.5%. Just a skosh off its highs of 97.4. Gold up $23. Really hasn't moved too much, up 0.5 percentage point. Hasn't fluctuated, I mean. It's had a nice move. Silver with a great large move to the upside, almost 6%, $5 to 91.40. Net gas down 27, just near, that's 0.27, just off its lows.
I put 6,900 and an 1825 VIX out there earlier this morning. So that was.
Well, enough said.
I don't know.
What else do you want? Let's take a quick 90-second break. We'll come back. We got more Tasty Live with Liz and Jenny next.
Sounds great.
Sounds great to me, too. Thank you so much, Ryan. Appreciate it. Peace.
Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
And welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz. That beautiful brunette next to me is Jenny Andrews. And what say you, Jenny Andrews?
Looks like there's nothing happening today, Liz. SPOOs are down 67, so they were red early on today, and they've continued to fall a little bit. They've been holding steady around down 60 since we got on the floor today.
And when you say nothing's happening, she means no ruling. But there is, I feel like, a lot of action today.
There's a lot of action.
A lot of action,
but no ruling today. So what will happen? anyone in the 0 DTE, SPX trades, selling those put spreads, selling those iron condors. Maybe we'll just stay right here. Who knows?
I don't know, though, because we were down 30, down 60. I mean, we haven't bounced back from that.
I did not put it on today. I didn't want to take my chances because
not with the ruling. We didn't know when it was going to come out.
We
don't know what time it's coming out.
We didn't know what was going on. So we thought we would wait today. I was never planning on putting my 0 DTE morning trade on this morning.
Yeah, so we're kind of keeping an eye on it. I will tell you, there is a lot of more activity than typically is down here around, right? But I guess with SPOO's down 60, down 68, 70. Where's VIX right now? Just let us know before we go to that. You can see they are kind of moving around, and I will tell you, we are friends with a lot of these people, and today's one of those days we didn't get any hellos or pleasantries. It's one of those where everyone has kind of got their head down and they're all working.
You guess, is VIX under 18 or over 18?
So let me see. It was the highest I saw it, the highest I physically saw it earlier was 1790, and then when we came in, it was 1760.
And you know what? It's 1785. So it's right around there. It was up a little. We saw it up a little bit yesterday during the show, and now it's up to 1784. But it's not crazy high. It's not crazy high. I see. If you're on the chat, Liz is watching the chat, and you must see something funny coming in.
Frank is saying, that's my nephew in the green jacket. He just walked by. So he's trying to catch him, and I love it. We're trying to catch him too, Frank. He's like a leprechaun. We're trying to catch him and grab him.
Yeah, he's impossible to catch. He won't come on air. Refuses to come on air.
Yeah, Frank, you're going to have a stern talking to, but you can hear. There he is. Oh, there he is. Wait, no. There. That guy. There he is.
Oh, yeah, there he is. He waved. Frankie waved to you. Frank says hello. Your Uncle Frank says hello.
It is very confusing to me because he's on this side, right? There we go.
Yes, but anyway.
That handsome devil right there.
Because, for those of you who don't know, Frank, who is on our live chat right now. Oh, he just made his uncle's day.
He's a handsome devil, that guy.
So Frank was on the floor for many, many, many years. Now he's manning our chat. He's a professional trader from the floor. We've seen pictures of him back in the day in the pit, and he is currently in Arizona, nowhere near Chicago. So to see his nephew walk by on TV just warms his heart.
It does. And you know what's so funny is I've known Frank for years, and I've known Jeff for years and years and years, and I did not know the two were related.
I didn't know the two were related until we started this show. I didn't know that either.
I did. It was pretty funny.
Yeah, so we've both been on the trading floor. We both kind of grew up on the trading floor.
Yeah, because our frontal cortex, I will tell you, I always say that frontal cortex is formed because I've got teenagers now until they're 24 or 25. We started at 21. So we started where you're not supposed to make good decisions. Our frontal cortexes were not formed.
I don't even know if we were 21 yet. We were juniors.
No, we were 19. We were 19 when we started.
We started juniors in college. We started down here and then came back. The crazy thing is we both started down here so young, and then when we went back to school, we're like, we're just going back to the trading floor. That's the only thing we wanted to do.
So I don't think once you see this, you can do anything else. I really do.
Well, I thought that too, but we brought my daughter, we brought your son, your daughter. They've all come down and we're like, what do you think? What do you think? What do you think?
My kids love it. My kids love it. My Annabelle says she wants to do this because she likes to stand and move fast and do things for a living. Like JD likes it too. And so do the people, his friends that we brought down, they love it.
Well, my daughter, I was like, what do you think, Lily? Maybe you want to go into finance. Maybe you want to come down to the floor.
She was like, I wasn't too bored.
It was all right.
It was a slow day when she was here, though, too.
She liked it, but she wants to be a lawyer, and I can't seem to sway her.
I'm not going to lie to you. She's going to be defending us one day. We need a lawyer in the family.
Oh, all right. So let's jump in the platform and see what's going on. Here we have, I've got the VIX pulled up, 1773. I'm going to take a look at the high of the day.
Yeah, that's what I was just going to say. Thank you.
The high of the day, did it?
It breached 18.
Barely, yeah, barely. 18.
Can we see the VIX one day, VIX 1D? So the VIX 1 day is a 0 day and 1 day. I just want to see how high
I thought it was like the VIX on the 1 day.
No, it is 0. Yeah. The VIX 1 day is 0. I know they're together. It's the
0
1 day
and 1
0. Oh, we got some activity.
The last order I heard was a call stupid, where they're buy
or sell.
Like buy a call.
Well, you don't know. They just say the stupid. They give you the strike, so you have to give both sides.
Yeah, right. But I think the customer was buying them because you can see on the board. You can see on the board what the crowd did. So I could see the symbols like
Jenny can see on the board what the crowd did. They've got a camera blocking my view on that side.
But as the trades get posted, it goes up on the board of the badge of the trader and what they did. So if Wu sold it and Johnny sold it, and I could see that pop up on the board.
Do you know what's funny is that it's up there. We never had that before. We never had who did what on the board. You'd see a running ticker of things that were traded, but it didn't have the badges. Yeah.
No, but
that's new. It's a new feature on the CBOE floor.
Oh, well, I feel like back then, so this crowd is busy. Down here on the trading floor, we've got the SPX pit, it's busy. We have the VIX pit, busy. Rut pit, Mag 10, we've got lots of pits down here. They're busy, but it's not. When we were on the floor, there were, I don't know, how many traders on the floor?
Well, the SPX pit still has the same amount, but
no,
when
I know, but like with all the equities, because now there aren't equity pits like there used to be a pit for.
Well, there's equity pits, but they're very, very small. They line the perimeters, and there's maybe 3 or 4 people in those equity pits.
I thought they were all like ETFs or.
No, there's some equities out there, I believe.
Really?
Yes,
I didn't know.
But they line the perimeter. They line the perimeters just in case people need open outcry. I believe it's going to be your more actively traded stocks.
So, how many? Because you were on like the floor official committee, or do you remember how many market makers were on the floor back then?
I'm sure I'm going to be wrong.
Take a guess.
I want to say 1,000.
That's what I would have said. I would have said 1,000.
Yes, and the SPX had about 300 or 400, which they still have. And then the rest was the SPX and OEX had about 300 or 400, and then the balance was the equity pits.
And there were so many pits. Like every little pit would have 10 equities in it. Yeah. So I think back then, if every badge went up with every trade.
Well, okay. So I will tell you this: right before the equity pit went away, and equity pits went away, and before I left, they started to put all the equities together in what they called the super pit. There were I had 280 individual names with ETFs that I was. I mean, it was literally like they'd come in, and remember, keep in mind at this juncture, and people who are old will remember this, they wouldn't say Apple or SPX. So, I don't know why this sticks in my head, but say the stock was Celgene. The option ticker was LQH. So they'd come in. Remember, there was a stock ticker and then an option ticker. So not only did I have to remember,
LQH was Celgene.
I don't know why that one sticks in my head, but so they'd come in and be like LQH instead of Celgene. And so you had to be and then you had to be first on the markets. You're just like, what's happening? I would be sometimes I would have my sheets in front of me, and they'd come in with an LQH. I'd be
and I was long gone by then because I left in 2004 and you stayed till 2011.
Yeah, still 2011. Yeah. So it was at the end. It got crazy.
Yeah.
And that's why it's way better to be automated with that kind of stuff.
It's interesting. People started leaving. It started slowing down as the markets went from fractions to when they went from fractions to decimals.
People started to leave.
Everyone thought, "Whoa, we're not making as much anymore."
Correct.
And then it went from. Then it was, pennies, and then we had the PARS system, or the RAISE system.
Oh my God, RAISE. Rapid Automated Execution System.
Or you just had to log in. You would walk on the floor, log in, and you get hit on trades because it wasn't even open outcry for some of those.
And then the equity pit started shrinking and shrinking and shrinking, and then they took all of us and put us in the super pit.
And so Tom left before I did. He left the floor before I did. But I don't know about Tony.
No, Tony was on the floor a long time.
I think Tony stayed.
Tony was in the AOL pit with the Vanilla Gorilla. Okay, I will tell you, this person right there is the Vanilla Gorilla's best friend.
Where? Oh yeah,
Ben.
there he is. It's funny because I can't remember what city I was in. There is a city out there, and I don't know if it's a chain, but there's a whole line of coffee shops called Vanilla Gorilla.
Ooh.
Oh, I think in New York.
Well, I wonder if he owns it.
He might. It's in New York. I think it's in New York, if memory serves. So, Liz, what's a girl to do on a day where the decision's not coming out anymore?
Okay, so we have stayed right here. We're staying down 68. Let's pop in the platform.
We both went into our accounts and took risk off. As soon as the market opened at 8:30, we were waiting, like 8:29 logged in, market opened 8:30. We were taking risk off or putting on some protection just in case.
I'm glad I did.
I mean, the ruling's not coming out today, but I'll keep that protection on.
No, but you know what I do love about trading is I went in there and, I mean, Jenny saw me. So I pulled out a list.
She had a handwritten list.
I had to write a handwritten list because I wanted to get it all in before 9 o'clock, before what I thought the decision was coming out. And I went in and I put protection on. Now, I'm glad I did, but I can probably go, the best part about it is my account's over 25,000, so I can go in and take it all off if I wanted to. Do you know what I mean?
When is that happening? When is the PDT getting changed? Like from a 25,000 account to
I don't know, but I'm going to
account?
ask. I'm going to crowdsource this. I would like to ask Florida 7 because he seems to give us all the answers.
He seems to know
when
a
the
lot.
PDT is going to change. Florida 7 or Frank the Great will let us know when that PDT is going to change.
Okay, another big topic today.
Oh, big topic?
Take a look. Another day up another 5-6%.
What is the high? Let me see the high of.
We're close to it. We're close to it.
I can see there's a wee bit
92.
of 92.
Yeah. So we're close to it. Another day, another $5 in silver.
Yep.
And want to
But
see
$5 is not $5 in SI. That's a big.
Take a look at this. Look at Blue Wackadoo. He is swung some SIL last night for about 1,500, strapping in for the ride today. Nice
Good job.
work, Blue
Good
Wackadoo.
job, Blue Wackadoo. Blue Wackadoo is expanding. With
You
the
can see.
SPX IVR at 16.4, which is true. The IVR is so low.
And this is what's fun about these futures. They're open at night. So you could see 7:47, he sold it. Sold it again at 8:06. Sold it again at 8:34. Then bought it back 9:25, 9:23, 9:25, 9:56, 9:58, 9:59, 10 p.m. By 10 p.m., he made $1,500 and went to bed.
Yeah. Then you can wake up today and go fishing early.
Could you sleep after that excitement? Could you go to sleep after that kind of excitement?
Sure.
You know, my husband couldn't go to sleep after the Bears game. He was up all night.
Really?
Yeah. Yeah, I mean, it was so late. He fell off the couch.
Things get easier the more you do it, the easier things get. So the Bears don't win that often. So I can see.
Hey, they have a lot this year. They have this season.
They have this year.
I've got my DraftKings bet it's still alive.
Oh, yeah.
It's still alive. I bet $50 before the season on the Bears making it to the Super Bowl.
Just making it. All they have to do is step onto the field.
And I check my DraftKings account all the time. It's still there. I'll win $1,300. And a $50 bet.
It's pretty good.
That's pretty good.
Pretty good.
That's pretty good.
That's amazing.
What is going on?
Now that we're in Twitter, what do you...
Oh, I want to just say that we're taking live tweets. Put the hashtag LIZJNY. We are taking live tweets. We'll take anything. We also have an SPX study to get through. And what's your assumption?
What's your assumptions? An ironic turn of events, we will be on last call today because yesterday I had a doctor's appointment, so we couldn't make it on last call.
Yes.
And the Tasty team, which we love, thank you very much, graciously switched with us. So we'll be looking at a lot of the bank earnings that are, if you go to Bob while we're in Twitter and look at what we're going to be looking at later, so we can kind of put a teaser in there.
Okay,
I
let's
know
see.
we're going to look at Taiwan Semiconductors.
Here's Bob.
Yeah.
Here's Bob. So Taiwan Semiconductor, Morgan Stanley, Goldman Sachs, BlackRock, and what's FHN?
I will tell you. You stay right there, FHN. FHN is
Infosys,
First Horizon Corporation.
First Horizon. I was just so we have a lot. I had to film, and I had to film video, and I had to.
I didn't know if you were getting verklempt talking about the filming, being like, and then.
So it's funny because my son's in the process of interviewing for a job. He had an interview yesterday, and they said the next interview is like you log into their company website or whatever it is. I don't know how you do this, but you basically log in, and it's timed and recorded. A question pops up. You have 2 minutes to
answer it
online, with a camera. Record your virtual answer, and then then you hit enter. The next question pops up, and you keep doing that, and it's all recorded. And he is freaking out about this, totally panicking because he's like, I don't want to just stare at a screen and answer, or not talking to anyone, or even seeing anyone on Zoom. It's super weird. And I said, well, Wait, I just did it in time for Taiwan Semiconductor.
You can review my work and let me know what you think.
Let me give you some tips. No, it was. I don't like doing that.
So it is very bizarre if you are just talking to the camera. We've gotten better at it. Some people on our network just look down the whole time.
So anyway, if anyone wants a trade idea in Taiwan Semiconductor, we're going to put it on in last call today, but I did create a video yesterday with the trade idea in Taiwan Semiconductor.
Okay, so
although it might be scrapped, it might be on the cutting room floor.
It probably is. I mean, I'm just kidding. I'm sure it's amazing. But let's talk about why we want to do it in last call. Because yesterday they asked you to put on a trade in Taiwan Semiconductors, and Jenny said, if we went to Taiwan Semiconductor right now, I would even advocate waiting until 2:30 or whatever time to see what happens and shakes out in the market. Because if you're selling premium, you might give yourself some wrong footing going into earnings.
Okay, so I'll show you here. Yeah, right. Yesterday, and it's probably when Taiwan Semiconductor was around 336, so $10 higher.
Right, $10 higher. It's a different animal. It's a different. You're playing a different game today than you were yesterday.
Yeah, they're like, and go with the Taiwan Semiconductor earnings trade. And
that doesn't make any sense.
I said, well, because a lot's going to happen between now and their earnings coming out if the Supreme Court ruling comes out.
Did you say all this in your room by yourself?
I was talking to myself, talking to the camera. All this stuff could happen, so I'm not giving strikes. I'm not telling you Taiwan Semiconductor's trading 336. I'm going to buy the 337. Like, I'm not going to say this because who knows where it's going to be. So I just use deltas, and hopefully it lines up. And hopefully my deltas line up at the end of the day today.
Woo, we'll see.
But you have to. You have to understand deltas. It's a good way to come up with a trade that's consistent, that could work at any price.
Yes.
Kind of like the zebra. Buy 270 delta, sell 150 delta. Doesn't matter.
That is true. That doesn't matter.
Yeah.
And that's good that you came up with that. I don't know. Did you see Tom Preston's, the amazing TP? This is a shout out to you. Hopefully he's watching. His cherry picks yesterday.
Cherry bomb?
Cherry picks.
Cherry picks.
That was
Cherry
yesterday.
picks come out on Tuesday.
Yes.
You can get them for free. Just sign up.
Yes.
Tasty Live newsletters.
So I'm just going to give like a brief. I kind of glanced at it. I'm hoping I'm not doing it justice, but he was talking about pre versus post earnings volatility, and he was saying that the Mag 7, if I'm doing this right, the pre versus post earnings volatility in Mag 7 keeps its wings up after earnings.
That's why. Do you remember my old strategy? I had an old strategy of, and again, this is, it might violate tasty mechanics. It might, but in no realm do we ever like sell the straddle at the end of the day on earnings.
Who said the rules are there are no rules? Was that from Greece?
The rules are
there are no rules. Was that girl who goes like this in Greece?
There you go. When the car race is happening?
Yes, I think it is.
Maybe. So I used to, and I kind of forgot about this. At the end of the day, at the very end of the day, like 2:58.
You'd buy the straddle.
I would buy that end of the day. Hold on. Here he goes.
What's up, ladies? How are you today?
They just like to see your face.
No ruling. What
No
does the
ruling
crowd
today.
think? What does the crowd think?
No ruling. Earliest it could happen.
No, it's okay. We can paraphrase.
No ruling. Earliest it could happen is Friday, but that's not for sure.
Okay.
Earliest it could happen is Friday. That's not for sure.
Okay,
All
well,
right,
thank you.
all right.
You heard it here first by that.
Everybody's waiting for it.
I know. Thank you very much, Doug. We appreciate it.
Okay, so back to the platform.
It was Greece.
It was Greece. Excellent. So I used to like 258 buy the straddle, and on the open, sell it. Because either you had a big outlier move, great.
Or you didn't because the vol was still high.
Or you didn't, and you still, on the open, could still get out for like not that much of a loss.
Yeah, that's not bad.
I may go back to that. I may try it.
I mean, that was years ago.
I know.
Yeah.
I don't know why I forgot about it.
Yeah. Well, trading changes.
Trading does change. I know we said in the beginning of the year, starting January 1st, we're going to do the same trade in the 0DT SPX every day. But it changes depending on the market. It changes. Some days I might do the calendar. Some days I'm selling a wide put spread. Some days I'm selling, I'm buying the wrapped around at the money call spread. Like, it changes.
Yeah.
It changes. Can't be, like, you can't.
It's not bad, though. If you're going to get a big move, you could make a lot of money or not lose that much.
Or not lose that much.
No, you're not going to lose it all, especially if you're out right on the open.
Well, and I'm not going to do it in something where the at the money straddle is $6,000 or something.
You could lose. You could lose percentages of that.
Yes,
keep it in mind.
Yeah, well, I'm going to keep an eye on that. I am going to keep an eye on
I would just like to say this, breaking news. Remember the person in my son's fraternity who is trading and is very familiar with this, 0DTs? He just texted me, said he's watching and he would like to make a phone call about some 0DTE questions he's got.
Well, we're not taking phone calls right now.
No, he's going to call me after the show.
You can call us after the show. Question about what? His 0DTE?
Yes, yeah. Quick future to discuss some of my 0DTE strategies.
We've been hovering around this down 60 for a while. Let's just take a look. Now that we looked beforehand that at the money calendar was $8 this morning, and I know it's not the same strikes, but I'm just curious right now. Look at that, $12.50. $12.50.
It was $8 this morning.
I know. Yeah.
Huh.
That's because there was so much more premium in today.
Yes.
And that came out when they said no ruling today.
Yeah.
Yeah.
Huh.
But it wouldn't have been
no,
the same
it wouldn't have been the strike.
It
But
wouldn't
the
have
at
been
the money
same
strikes are usually typically around the same price.
But it would have been, we were down 30, so it would have been 30 points higher. So you're looking at 69.30, looking at the 69.30. So what would it be now if you bought it for $8 this morning? How much of a loss? Wait. 9.10, a winner.
Yeah.
And it's 30 points away.
Yeah, that's crazy. Okay.
Interesting.
It is pretty interesting. Okay, Jenny, is there anything we need to manage before we go? I don't think so. I think we kind of glanced at
I don't think we have anything to manage. Bitcoin is, look, you're going to like this. You're going to like this.
I know, Bitcoin's up. We have IBIT. Can we close our IBIT? We should probably take a look and see if it's through it, because it might be through it.
Okay, 97,000, teetering on 98,000, recent high. I mean, not all-time high, but recent high, because it's really been struggling lately. Is this crypto making its comeback?
Oh, yeah, I believe so. Well, we'll see. I mean, the volatility has kind of been sucked out of it, so we'll see. But our IBIT, we're crossing through. We have a Jade Lizard-esque position, and if it goes through that
it's
call...
It's through it. Look, our call spread is 54.5, 55, and it's trading 55.27.
It's 55.5, so it's not all the way through it. But yeah, let's close it. 30% is not bad. Let's close it, and we can reestablish in the 9-day. We're just going to move it.
We'll buy it back, take our $30, and reestablish... in this cycle?
In the 9-day. We'll look. We'll see if it makes sense.
Or we can go out a week and give ourselves a little more.
Sure.
Now, I will say, I have this too. I've been trying to close it, and I have not gotten
Is it wide markets? Let's take a look at the markets.
It's not wide. They're not wide. You've got 3 cents wide and 3 cents wide.
Penny it up to close, because I'd like to take $25 out of it.
Rather than nothing if it goes through it.
Yeah.
I know. Okay,
yeah, there you go.
Filled. All right, I wasn't willing to give up a couple pennies. Jeff's lurking around the corner. You made your uncle's day.
You did. You made everybody's day, Jeff.
Made everybody's day. Everyone's going to be happier today. It was a good story, heartfelt story. All right, here we go. IBIT. I kind of think let's compare. If we know we're getting about $1 on the put, it'd be the 54.5 put in the 9-day.
I'm fine with that. I don't mind chasing it up.
Or in the 16-day. It's the 53. So $1.50 lower.
I don't mind staying in the 9-day. I really, truly don't.
You heard it here?
Only because, okay, so we have to buy something because we have to do it. It's just going to give us a little bit more room to the upside where we'd probably do the 58, 59 call spread, right?
And we can't say, oh, we're going to wait for a down move because we might not get it. We don't know what the future holds. We might not get it.
No, but premium selling in this has been pretty good. And I'm not saying I'm looking at this like the Wheel of Fortune because it's a Jade Lizard type position where we're using something to reduce our cost basis. But what we can do is roll that put out in time or continue to keep rolling that put if it goes down in 9 days.
Okay, I'm going to put it in. I'm going to go the 9
And
day.
you can't time the market. You can't say, I'm going to buy it on a pullback. You can't say, no one can time the market.
And here's what we're going to do. You can't think like, oh, well, the trade I just had on, I had on the 54.5 call, and now I'm going to sell the 54.5 put. Forget the trade we had on. That came off for a win. Yeah. Now we're going to put on a new trade.
Yeah.
So let's see, 57
and it might not seem like it was that. Hold on. It might not seem like we made that much money. We've had that trade on. We made $30. We've had that trade on for 3 days.
I mean, it's only January 14th. Can I see order chains and what we've made in IBIT since the beginning of the year? I'm going year to date. And we're gonna do this week. And
Oh,
go and
81.
watch-
I was like, is it only 29? You have to go up one more.
We're gonna watch this year to date.
So when you talk about, like, I'm just using Matthew or my
We're
son
only-
or something of that matter. We used, how much money do we use
Like
here? Probably $200.
yeah.
$200, and you just keep chipping away at it.
So we'll keep an eye on this.
Yeah.
I'm gonna sell this call spread for 20 cents, use that 20 cents to buy this put, and sell the 54.5 put. We're getting $1.04. We're getting $1.04. If someone wanted to be a little more conservative, you could move your put down a little bit, but then you have a little risk on the upside, to the upside. But I don't mind this. Our risk is 297.
I like it.
Honestly, you could cut your risk down if you wanted to. Like, here's 93 cents, and then our risk is only 200.
It's fine. All these are versions of the same trade. None of this matters to me.
Yeah.
I'm not saying that. You're doing a great job. But but when you're trading them, it's just like, sure, just press the button.
Okay.
Like, and that's the one thing that I do love about trading is it does create quick decision making. Like this morning on the train, I did different things with all my positions, opened them up, done, moved on, because you don't, if something happens and you don't like this, you can close it.
Yeah, you can't just sit there and like hem and haw over your trades.
No.
You need quick decision making.
Make a decision and move on.
Market opened at 8:30. By 8:40, we had zipped through our portfolios and made all the adjustments.
I made 35 trades in 5 minutes.
Yeah. Okay, so I'm working that. Liz, I have a question for you. That's working. Since everyone knows, like, you're a real Prosecco drinker.
Yeah.
Do you ever eat chocolate with your Prosecco?
Never.
Never.
I would never put those two together.
And I know there are people who put together champagne and chocolate. I just got a text saying champagne and chocolate event.
I don't think Prosecco is champagne.
What?
I don't think Prosecco tastes like champagne.
Well, it is. It's just the Italian version. Like Prosecco's the Italian version of champagne, which is the French version.
But I don't think they're not. They do not taste the same.
My professional shaking
They
his
do
head
not
no.
taste the same. Thank you, Matthew.
And my professional shaking
It's not.
his head.
And she won't take my word for it, but I only drink it by the gallon.
Well, it's sparkling. Prosecco's
never.
like Italy's sparkling.
I do not.
Champagne is like France's sparkling.
I don't know that I would even drink champagne. I don't like champagne as much as I like Prosecco, number one. Number two, I would never eat chocolate with it.
All I know is I just got a text inviting us to a champagne and chocolate walk. Would you like to come?
No, thank you.
Matthew? Back to the platform. We are filled on our new IBIT trade. We are filled.
Oh, good. I'll push that
So
through.
push that out. Get that pushed out.
That is something I feel very strongly about. Do not go on that. I'm just kidding.
I'm going to write back. Sorry. Liz said it's a hard no. It's a
She won't
hard
let me.
no.
Yes.
Okay. I will give a warning. This silver spread has been marking crazy all day. This could only be worth 0.25 and it's marking 0.339.
Now go in and explain why, because if you're new to silver, this could cause you heart palpitations. But we understand that it cannot be worth more than that.
We know our max loss on this is not $1,200. It was like $700 or $800.
I think it was eight something. But so go into the markets and go to each of those. Let's go to the trade page, which is super far on the money.
The rank, IV rank in silver is 124.
124.7. I've never seen anything like that.
These markets, and where is it?
Keep going. Keep going. We're in the 60s.
Wait a second. It's not in the. It is in the 13
Yes,
days.
it's in the 60s.
No, we're like 73.
I think you're in the 60s.
No, I think it's 73.
I think you're in the 60s. Oh, there you go.
There you go. 73 and a quarter. The markets,
those markets are wide. So this is a big animal. Silver futures are a big animal. So those are wide markets. There's one volume 26 open. It's us.
What?
There's one volume and 26 open interest. It's us.
Why is there not more activity in silver options?
Well, that's not near the money.
But it was 5 days ago. You know what I mean? Like, they're near the money now. Look, where's the action? Where's the action in silver?
Keep going to the at the monies. Keep going. That's insane. There you go. You've got 177 on the 92. They add those other strikes in. So 92, 91.
But
92
it's still
and 91
not.
has.
I mean, the 170. There's not a lot. Like,
But that's a big animal. Like, it's there's a lot of times you can't do naked options in it.
I would personally think there'd be a lot more action in these silver options than I see.
Yeah.
You know?
Not down there.
Well, it was down here. Like I would think like for people who have been trading these for a while, there would be more open interest down here where it used to be.
Do I need to send you my open interest video? If Jessica opens it and Jessica closes it, the open interest goes away.
Yeah, like here, the 70 line. It's got 1,000 and 1,000. That's the biggest line I've seen so far. But it's crazy.
Spoo's are only down 47.
I know.
There's a rally in the alley. It is a rally. It went from down 60 to down.
Whoever put that stupid trade on, buying calls, buying SPX calls.
Yeah.
They could be closing them right now.
They could be. All
right, do you want to get into the study?
Sure.
All right, let's fire it up. And fire it up. Here we go. Market measures. Another amazing market measures sponsored by the SIBO.
This is the Zero DTE Breakdown 2025 In-Depth Analysis. I wasn't sure if the title was correct, but we're going to keep going forward.
I think so. Here we go. Wait till you see. Today we're talking about iron condors.
And last year's iron condors. We're not talking about today's. We're not talking about 2026. We're talking about last year's.
We're talking about 2025 iron condors and their performance. And 2025 was kind of a crazy year. We had that big sell-off early on in the year. And so let's see how these performed. 2025 has been tougher than most years with added uncertainty from politics. Implied volatility briefly hit its third highest level since 2008, and SPX had its biggest one-day move in nearly 20 years. So how did our zero DT strategies perform, especially the 20 delta $20 wide? If you're doing 20 delta $20 wide, you're taking a lot of risk.
20 delta $20 wide, you're probably collecting $3, I'm going to guess.
And you've got $1,700 in risk.
Right?
Yeah. So you've got, say, $1,600, $1,700 in risk, and we had a whole, 2 months in a row where you were probably tested on those puts day after day after day after day.
With the big down move in, what was that?
That was like
January?
March, April,
yeah. True. Okay, so let's take a look. This is just the VIX one day, the SPX up and the SPX down. That's it. That's all it's on the chart.
Okay. All right. What do we got going on here?
So now here is our SPX trading range. The 2025 intraday ranges, total upside and downside, are above the 10-year mean, but still below the post-COVID period, 2020 to 2024, when higher IV pushed moves wider. This lines up with the volatility environment. One standout in 2025, stronger upside follow-through, even with very large down days. So stronger up moves.
Was it a stronger upside follow-through than COVID year?
Oh, yeah.
Really?
Way stronger, because COVID bottomed, and then it was always stronger upside.
No, COVID year, yes, but like this year when we had the February, March, April.
So this is what they're saying. I actually think the put spread was my go-to. I did not like the iron condors.
But I think this is.
But
this is looking at 1 year. So every year is different.
It's looking at 1 year, correct.
And this all, the chaos last year started with the tariffs.
Yeah.
That's what started the down move.
Correct.
Okay. So 2025 has been especially strong for the 20 delta $20 wide iron condor, taking your profit at 25%. So that's 25% profit target. No.
Don't know what that means.
Stop loss.
Oh, good job.
It just came to me.
It beat the long-term results across every category. The bullish 30 delta, $30 put spread, no management, also held up, but was the best performer with the non-managed exits. There's a lot of information in here.
Okay, there is a lot. Still, its results were mostly in line with or slightly worse than long-term averages, likely because 2025 had faster downside moves, which hit bullish positions more.
Correct. Now, this doesn't take into account, take things off at noon. So there's no stop losses in there, just a little
No,
FYI.
and so if you look, we're comparing 20 delta, $20 wide iron condors, and then the 30 delta, $30 wide put spreads. So you have a lot, let me look at the CVAR. CVAR 2,500 on those put spreads versus 1,400 on the iron condors. You have a lot more risk on those put spreads. So I wonder if they compared apples to apples, 20 delta, $20 wide put spreads to the 20 delta iron condors.
So we've had studies before where they compare apples to apples, and that call spread doesn't do anything for you.
Yes, so that's what I'm wondering if they compared apples to apples, what these results would be.
Correct.
But here you're showing, average P&L in 2025, $53 on the iron condor, average P&L $36 on the put spread. But that was for 2025. If you look at a longer time frame, you've got the put spread beating the iron condor.
Good eye, because that took me a second to find.
Hey, I got 2 good eyes.
I got 1. All I saw was the 39. I was like, what's happening? Long term?
I got you.
I was like, the put spread looks like it's winning. But I was like, the verbiage did not say that.
Yeah.
Okay.
Yeah. And the put spread has a much higher C-bar. I have been trading 0DT SPX.
Yeah, but I do think you have to keep it apples to apples. You can't say, I'm going to trade a riskier one. Does it work? Because if they lose, they both lose.
Maybe I should put you on the research team.
So when they lose, they both lose. If you're looking at something and you're losing to the downside, you're going to lose the maximum if it goes down.
And you're going to, on those big down days we're having, you're going to lose a lot more. You can see that C-bar is higher. That's the conditional value at risk. C-bar is higher on that $30 wide.
Correct. If you keep your C-bar to C-bar, how about that?
Yeah.
Not apples to apples. C-bar to C-bar, I wonder what the results would be.
I think there's a lot more risk on that, that put spread. I have been liking less risk. You have always touted like less risk on these 0DTs.
I have.
I've been liking the less risk.
Yes. Welcome to the dark side.
Because it doesn't take so many wins to come back from a loss.
That was my favorite study. It takes 3 or 2.6 wins to come back from a max loss if your C-bar is lower.
So far this year, when I've had a loss on my morning put spread, I have scratched my way out of it by the end of the day.
Scratching and
yesterday
clawing
on the
your way
train, I scratched my way out of our morning put spread loss.
Oh, good.
By the end of the day.
Mine closed.
It did it?
Yes.
Nice.
I tried to, remember, I only did very, 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 very small. I tried to get $50.
Yeah, small profits on it.
I tried to get $50 and it was closed.
So mine had not closed, but I scratched my way out of it by the end of the day.
Good job.
Yeah.
Hey.
Trying to turn every day. I'm channeling blue wackadoo, trying to turn every day green, if possible.
I like it. Okay, why iron condors did better in 2025. Most upside moves were small, even though call side breaches happened more often. Most positions eventually become profitable when the market swings back down. The iron condor reached the profit target faster, 7 minutes sooner than the long-term average, and downside drops were quicker, which hurt puts or put spreads more because there was more conditional value at risk. You had the 30 delta instead of the 20 delta.
Well, and we had so many. If I
was it 30 delta, $30 wide?
If I go to the platform and you go to 2025, I'm just going to go to SPX.
Do a 20 delta, $20 wide, and a 30 delta, $30 wide, and let's show something.
What I just wanted to show was 2025. Here we go. Where is it? 2025. Like this period of time, you've got
everything would have lost. You've got your iron condors and your puts would have lost.
You've got so many down days where you're hitting losses on those put spreads, and here you're max loss. Like you've got so many days where you hit that loss, which if you're hitting $2,500 on a loss on a put spread where you're collecting $2 or $3, it's going to take you forever to get that back.
Hold on. And a lot of times, we're just talking here. Just keep it in mind. The research team does a great job. They're handcuffed with putting parameters around things, and I understand that. I want to be very clear. I think they're doing a wonderful job. But even on, I've been a put spread trader. Even on down days, I can get out for a profit. It doesn't necessarily mean open to close. You can even a very significantly down day with a very large bar. Sometimes it's up from where you put it on.
Watch what I'm going to do, Liz. I'm going to go into the back tester. Here's a little back testing tutorial. I'm going to go in the back tester.
You can't because you can't go to 0DTE.
Oh, yeah, the 0 day.
So just get out of it. We tried. But so that's what this is what I want people to realize is when you are not taking that, huge conditional value at risk and you're taking small profits, which we've learned from Jacob. You put them on and you take 20%, you put a GTC in for 20%, and even on down days, you can get out on put spreads. Now, when it's both sides, you can't do that easily. They're riling back up. They're down 55.
Yeah, all right. I'll come back.
Yeah, you
to
can't
this.
do the put spread.
I won't do my back testing session now. I can test
because you can't.
The 0 day. We need the zero. We need more 0 day information. In that our team has a specialized back tester.
Correct.
Well, got to join the research team, I guess.
I don't know they'd want me.
All right,
Jenny is my back tester, so I was like, Jenny, can you do this for me? Jenny, can you do this for me?
Hey, I like back testing.
You do. You're good at it.
All right, average daily P&L. So 2025 had stronger daily returns than the long-term baseline in most months. The long-term history includes 5 months where the average day was negative, while 2025 had only one, February. April stands out. It was the most volatile month since COVID.
Okay.
All right, so here you can see Here's you've got this big down move in April and February
and December.
That's the long-term average. And the green is 2025. So it's weird. In 2025, the only negative was February.
Yep.
Yeah.
All right, let's go to 6. Let's keep going with this.
And this Iron Condor, this kind of just solidifies what Jack Tucker's doing, because it's very similar to what Jack Tucker's doing.
But he has no stop loss, and Jack Tucker defends. He's defense.
Defense.
Just like the Bears. Okay, win rates stayed fairly steady across months, even with changing volatility. This supports the idea that selling premium with consistent management can produce reliable results over time. What I love about this study is you can do this. You can, if you just want mechanically set it and forget it, no stop loss, 25%. This is what it's saying.
No stop loss. Now, I'd love to see another study because we did have some studies that said if it doesn't work out by noon, close it at noon.
Yeah.
Close it at noon. If it doesn't work out by noon, close it at noon.
Then it's never going to be full loss. Then your CVAR is never going to hit. Minus crazy moves.
And as far as management goes, and we've been on the road and we've seen people do these live, and we've seen management, right? Management of these. But when we're doing the study, it's hard to say like, oh, if this strike gets breached, then roll
this
that.
down.
It's hard to do that when you're back testing.
Right.
Okay, 2025 stood out for better drawdown control. In most months, daily CVAR was equal to or better than the long-term baseline, including April, despite extreme market swings. I'll never forget those extreme market swings. I mean, I'll never forget like April being out of town for something and looking at my account and calling you and saying, when is this going to stop?
What the actual hell is happening?
When is this going to end?
Well, and keep in mind too, but that was not about SPX. I will tell you, we weren't losing in our SPX trades. When we were talking about April.
No, we're just the market. When is the market falling going to stop?
So, and when you are trading these, when you're trading longer dated options and you have some premium selling in there, it's a 1-2 punch when things go down because you are short premium, it's going against you, and implied volatility is getting higher.
And I will say, like, this move is there's something to be said for these 0-day TEs.
If you're in the 0-day, your risk would have been much less in all of these.
You don't have the overnight risk.
No.
You don't have the overnight risk. You're not waking up, looking at your account and saying, "Oh man, another day."
Yes, you decide. You're the decider. You decide that day if you want to be in or out. And if you've taken too much pain, maybe you sit it out until you see it turn around.
When you look at this and see that the only losing month was February, that's pretty impressive.
Yeah.
That was the only bad month.
Yeah.
So
interesting. Okay, let's give the takeaways in this.
All right, here we go. One more slide before the takeaways.
Okay, return volatility in 2025 was mixed. Overall, it wasn't unusually high, but a few months saw larger swings than average. That isn't automatically a negative in 2025.
No, it's not a negative.
It's not negative. Moderate swings paired with strong loss control helped performance, since trades could be closed earlier at the profit target.
Okay, so takeaways. 2025 was a tough market overall. If you survived 2025, kudos to you. I'm going to give you a pat on your back for surviving 2025, coming out in the green.
So I sort of feel like I need a pat on the back for surviving 2017. Go for it, because I survived that one too.
What was 2017?
I don't know, where was no volatility in
Oh
here.
gosh, yeah. Can you take me back to the year when VIX was 8 and pat me on my back for surviving that? Calendars every day.
Yeah.
Every day we would call each other and say, "What are we gonna do on the show today?"
Are we doing a calendar again?
Another calendar.
Yeah, that was brutal. But so, we've gotten, I would say 2025, in my opinion, was my most violent swings in both directions.
2025? Oh my gosh. My account has never had the swings in all of my history of trading as big as it did in 2025.
Correct.
In 2025.
It was the year of swings.
It was up a lot, it was down a lot, it was back up a lot, and then it gave some of it back. Had crazy swings in 2025. It was a weird year.
It was a weird year, yeah.
A weird year.
Yeah.
But the nice thing is that
I'm gonna go back to our takeaway.
Oh yeah, if we have to. I was gonna just forget about it.
Yeah, go to the platform. Go for it.
All right. So the nice thing about 2025 was that it did kind of bring some volatility back. Now we've got the volatility teetering on 18, which I'll take it.
18, that's a number I can live with.
Hey, that's nothing to shake us to get.
Yeah.
So there were years we were begging to get back to 17, 18.
I don't, And to me, this is, I'm okay with the swings. I'm okay with a little inflated volatility. I'm okay with SPOOs down 62. We are at all-time highs. So that none of this affects us as much. And I do like looking at those 0 DTEs because I think you brought up a great point. Your risk is off. You're not
You have
sweating
no risk overnight. If you're just trading these 0 DTEs, go to bed, sleep like a baby.
You wake up and you're like, oh, maybe I'll put it on, maybe I won't. If I'm busy, you don't put it on.
If there's something going on, if the Supreme Court's going to announce about the tariffs, then maybe you don't put it on. But today, they might get paid for doing it. Yeah, would have worked.
Now, it would have worked. I don't know if the Iron Condor would have worked.
Well, you could have gotten pretty far this morning. There was a lot of vol pumped into the day. You could have gotten far.
But the market has moved since the open. But yes.
Okay. All right. I am going to, number one, just pop into Twitter, make sure we're keeping up with people.
Yep.
We had Frank's economic calendar, got that. And if you want to know, yesterday, we had, what did we have? Tuesday's option volume, 63 million contracts, 8% above recent levels. Calls leading puts, 11 to 8. Calls leading puts, 11 to 8.
Calls, it's been calls over puts for a long time.
That's why we'll see what today is.
You know what else I think changed in 2025? I think the call skew was so much more predominant.
Oh my gosh, call skew. Crazy.
Call skew is the word of 2025. There are 2 words.
How are you going to remember 2025?
Call skew. Yes.
All right, Fabio came in. Hello, Fabio. Good to see you. Hello, ladies. What do you think about being bullish in ZB, Walmart, or Costco?
So I'm bullish in Costco right now in my account. So I can say that Walmart is just being put into the NASDAQ.
Okay.
Isn't that weird?
Yeah, no, I think it's, I
know it is, but I mean, I was like, when I was on the trading floor in the Walmart pit, if they would have been
in the old days.
In 20 years, Walmart's going into the technology.
Yeah.
It is. So
Hey, you know what? Walmart.com was one of the only places I could find Guitar Hero, and it connected me with used Guitar Hero.
I totally forgot to look at it for you.
It wasn't even from Walmart. It was from some other used seller. So I get it. Okay. Bullish, ZB, Walmart, or Costco. If the Supreme Court decides against the tariffs, retail companies might ask for refunds, which could add to the national debt and require more financing through bonds. Does this sound reasonable? Let's take a look at ZB, Walmart, and Costco.
And Costco's up today. Costco's up a little bit.
Costco up 307. It has had quite a run just in the last 2 weeks.
So it got decimated, So it got decimated after earnings, and earnings just kind of took a plunge. But yeah, it's rising like a phoenix from the ashes right now.
Yeah, it really is. So bullish Costco. I hate to get bullish something that had this kind of run over the last 2 weeks. You're in it.
So I've been chasing it up with diagonals. So when I say I've made money, I haven't made that much money, but I'm chasing it up with diagonals because I've already got them. And by chasing it up, I mean I'm closing and reestablishing, closing and reestablishing. And right now I'm in the 2-day, 9-day in Costco. I thought about closing it on train today, and I didn't because I was like, I'm already up so much in it.
To me, Walmart seems like a good Jade Lizard candidate to just, it's bullish to neutral. You take in premium every month.
Right. Now, take a look at this. So Walmart is up higher. Costco is down lower than where Walmart is, but Costco is a lot more expensive.
It's tricky because Costco is very expensive.
It's very hard to sell premium in Costco because it's so expensive.
Like if I go to Walmart and I want to do
$5 white stripes.
Can you believe it's $5 white stripes?
And not a lot of volume.
No.
Yeah.
No. So honestly, if I were to do something in the 17 rank, it makes it tough. That does make it tough. I think maybe you could do it. We could do an earnings setup diagonal in Walmart.
Ooh, I'm in. So you can do a diagonal here for much cheaper than you can do the diagonal in Costco.
Well, if I buy that at the money in the earnings cycle,
it's $4. That's not bad.
And go 1 week before,
you'll get $1.
And go get $1 at the 125. I have a $5 wide diagonal for just under $3, which seems like a lot, but
and you can sell. You can then go into the earnings cycle and sell this option too, which would create a spread. But.
Right. So our risk in this trade is $393 debit, $293 debit, $293, but we'll have that long for earnings. And like you said, we could sell something else.
I'm in it. I mean, I don't
That's
mind
Walmart.
it. I don't mind Walmart either.
So I don't mind this. I'll $295. I'm going to risk $295 in this diagonal in Walmart and it's going to go. Our long will go through earnings.
I like it.
That to me isn't bad. Costco I struggled with because what are we going to do? It's only 15 rank. I don't
And the
want to sell.
diagonals are very expensive. You're spending about $900
Yeah,
on it.
diagonals are expensive. Here, look, if you did a similar trade in Costco, it's going to cost you $3,000.
Yeah, it's very expensive.
So I'm going to pass on Costco and ZB. Was it ZB?
We haven't looked at bonds in a while.
Well, we have our TLT, don't we?
No.
What happened to our TLT Zebra?
It's been a while.
I still have mine.
Take a look at when we took it off.
Bonds at 116. They're rallying today. Let's see. What did we?
116
TLT.
isn't bad. I like them.
I like it 113 to get short put spreads.
Yeah.
114, 113 with this rally today. We had a TLT Zebra, I thought.
I don't remember. I mean, unless I took it off when you were gone because something happened.
Activity.
7 days, no.
TLT in the last 60 days. Yeah, here's our Zebra.
But it was December. This was a while ago. It was December 8th, and we took it off on December 11th.
Oh, so we took it off so we put it on for 368, took it off for 435.
Yeah, I mean, this was a long time. We haven't had it on in over a month.
The crazy thing is, this was put on December 8th.
And where was
and it's 88, and it's trading 88.39. I still have mine.
That's probably, you never got out.
Well, I must have rolled mine because mine's in Feb now. No, mine's in this Jan. I have mine. It expires this week, and it ends this week.
Okay, so yeah, you get it's
still,
exactly where it was.
It's still here. It's like, when is this thing gonna?
If we took ours off, locked $100 in. Let's put another one on.
Well, I don't want to. I don't want to just get bullish here, this one little move, but I'll sell a Jade Lizard.
Sure.
Although
I don't
the
like
rank
selling.
is 2.
It's a 2 rank. I mean,
It's a 2
honestly,
rank.
that's why people are looking at the metals because there's a rank that is through the roof.
SPOO's down 76.
Oh, we're back down 76.
Yeah, back down 76. We have 4 minutes to go. I want to make sure we get to all the tweets. I don't think we're going to get to what's your assumption.
Go top down with the tweets.
So bonds.
Hey, but we'll be back on in a couple hours.
But anyway, bonds at 116 in a low rank. I don't know that I'm diving in.
No, so I wouldn't be selling premium. But if you do want to get long because there's a low rank, it is easy to buy things. Like you can wrap around. I know we did a Zebra, but you can wrap around the at the money debit spread for whatever risk you want with the 2 rank.
Okay, Ajit coming in with the trade in SPX.
So yesterday he did it. Remember, he did an SPX strangle.
Ajit, out of control. Short Iron Condor, 0 DTE.
Fine, Jenny. I won't scare you anymore.
Yeah, thanks, Ajit. The naked strangle in SPX yesterday did make me nervous. I won't scare you anymore.
She started sweating immediately.
Well, you can define your risk really for very little in the 0 day.
In the 0 day, yeah.
10 cents on call, 20 cents on a put. But maybe not today.
$30. I don't know.
But anyway, net credit $30, and how wide is his? $20 wide, $20 wide, just like the study.
So he's collecting $330. Yesterday on the strangle, he was collecting like $450.
Yeah. Okay. So, as far as the market goes, SPOO's down 76. Is VIX has got to be over 18 now, I bet. No, 17.95.
Weird.
It's just kind of sitting here.
It's up 12%, which I know when you say that's what I'm saying. Sometimes, remember when the percentages first got there and I hated it? Now I'm always like, it's up 12%, but it's really nothing.
We've got, average of the VIX over time is 18, right around 18. So we've got.
At least it says so in the commercial that she filmed. And I can't wait till it gets back there.
So if average VIX is around 18, we've got VIX hanging around 18, and with the Supreme Court ruling pending maybe Friday, you would think VIX would be higher. It's not.
I do think it's, okay, this is an opinion. I know nothing. But so they keep delaying. The market has taken a wee bit of a turn. The VIX is going to stay wrapped around here until Friday, is my guess.
Until the market moves. Mm-hmm. And either the market's going to skyrocket up and vol's going to come in and VIX will be back to 15, or something's going to happen and we'll have VIX back in the 20s and the market will be falling out of bed. Who knows?
Right.
Who knows? But all I know is this morning we protected all of our positions for the most part.
Most of them.
And the little ones we didn't, but most of them we did.
Yeah.
Yeah, most of them we did, just in case. I'll give up a little money for a week to protect my positions. If they keep extending this, it's going to cost too much.
It's going to cost us an arm and a leg. We're gonna need a verdict here soon.
All right, we are out of time, Liz. We are
out of time. Okay, Jenny, we will be back on, and everybody out there, we will be back on Last Call, and we are going to play some earnings trades. I know that it's exciting when the.
Hey, I know you're super excited for my Taiwan semiconductor trade.
I can't wait to see if it still lines up. I would love it. I'm saying this to our production crew. Can we get the commercial played right?
No.
Please.
Please. So I will not ever watch that. I will never watch it. Don't play it for me. I don't like to film something and then watch myself. I'm not watching it.
We'll all watch it. You cover your eyes and ears like Colleen.
I'm not watching it. I'll tell you the trade. Tune in at 2:30 today in Last Call for my Taiwan semiconductor earnings trade.
It's going to be amazing. All right, everybody, good luck with your earnings trades. We'll see you at 2:30. And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you at 2:30.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
the show. Watch me go, 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 go. Watch me go, watch me go. Start the show. Start the show. Watch me go, 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 go. Watch me go, watch me, watch me. Start the show. Start the show. One foot in front of the other, put your best one forward. You've got everything that you have ever wanted. It's already the best day. It's only the rest of your life. You've got the hair, you've got the style. Don't even care, you'd walk a mile in those high-heeled shoes and your velvet suit. Two eyes on the prize. Once you win it, then it's yours. You've got all the time in the world to make a score. It's already the best day. It's only the rest of your life. You've got the hair, you've got the style. Don't even care, you'd walk a mile in those high-heeled shoes and your velvet suit.
What's up, everyone? Welcome back to the show. This is Options Trading Concepts Live. My name's Mike. I'm here with Jamal. And of course, Glenn Freiberger. It is Glenn's day. A beautiful, beautiful Wednesday here.
Is it?
Well, not in Chicago.
Wow.
Blizzard outside. I was like walking, squinting like this, get to the office, elevators are down, walked up 7 flights of stairs, covered in sweat.
Horrible.
It's a great morning.
Yeah, I mean, wow. Welcome to Chicago. That's how it goes.
man.
I will be thinking about this when I'm in Miami on Friday. I will be thinking about this day and be like, yeah, I remember that.
God, that's going to be pretty nice. It's pretty good.
Pretty nice.
Yeah,
Well
it makes
done.
you not complain about it too much. It's cool to have a little bit of snow. But yeah, wow, what a change from yesterday. Pretty crazy. Just like markets a little bit, I guess. A little bit of change, a little bit of seriousness. But yeah, I'm still hyped up. I just got to say,
I mean, your brain is not here.
Yeah. I'm hyped up. I am hyped up for that. But I'm hyped up for my kid. I was kind of alluding to this. Wisconsin won on a buzzer beater last night in Minnesota, and my kid's there. You can see him. Like, I just see the joy on his face. It was so hype. It was dope. He was really hyped. We talked last night. He's hyped up about it. It's cool.
I love it.
Yeah, it was cool.
Sweet.
I know he's like in all these videos that they keep showing because they showed the whole bench and everything. And as I was telling Glenn, one of the things that the managers have to do, they got to grab the game ball at the end. So like imagine in chaos and everybody jumping, that you have to do your job. He did his job. I'm proud of him.
It's pretty good. Do you look like prime Reggie Bush out there through the crowds?
I didn't. You know what? I didn't see the whole entire video. You just watched it, and they show Blackwell hitting a shot, and then he's running around the court. And when he comes back to the bench, my kid already has the ball. So I don't know. He just did it quickly. Clearly, he was on top of his game.
Knew it was going in.
Yeah.
Nice.
Yeah.
He's like, we're probably gonna need this ball.
Yeah. That's what they have to do. That's part of their job. Like at the end of every game, you got to go and get the game ball, no matter what's going on. That's how it goes.
Love it. I love it. Yeah, lots of fun sports action going around. The Bears playing Sunday. Your Canes playing Monday.
Yeah. I know. It's going to be a weekend. It's going to be a real weekend here. I I don't know what to say. I really don't. I mean, of course I want both of them to win. Is it possible?
Yeah.
Oh, jeez. I think both are underdogs.
Yep.
Oh, yeah. I mean, we have to take down the best team in the NFL.
We have to.
That's our objective on Sunday.
In the cold.
In the cold.
I just hate how like latched on everyone is to that. It's like, oh, dome teams don't play well. Like, we're good. It's like, oh man, no, you can't. They're still pretty good.
Yeah.
Yeah. I think the number one thing that has to happen is we got to get a pass rush on Stafford. That's it. Period. End of story. I don't care about this dome team crap. If we don't get a pass rush on him, we are done.
Yeah, because secondary's a little leaky.
Somebody's got to step up. That's what it is.
Four quarters.
I mean, who's on the other side of the NFC? The Niners, and then who else?
Seahawks.
Niners and Seahawks. Yeah. Yeah.
But there's still a chance that win this and it still stays through Chicago if the Niners win as well.
Well, there's two teams that are left on the NFC that have been to the Super Bowl very recently, and one of them we play, and the other one's the Niners. So
I think Houston's the most, outside of our team, Houston's the most interesting team because their offense is absolute trash, and Stroud is just throwing picks left and right, but their defense is carrying them
so hard
through and through. Like, it's insane.
True.
It's so visually clear how insanely good their defense is.
Yeah.
It's nuts.
Yeah. Yeah. They're scary.
Yeah. But, yeah, there are things going on in the markets too. Bitcoin catching a nice bid here, 32.85 to the upside, up 3.5%. Ethereum up 5%. Love to see that. Equities, on the other hand, down 70 points in the E-minis, down 400 in the NASDAQ, the Dow and the Russell. Dow to downside, Russell kind of flat, interestingly. But we look like geniuses because we saw JP Morgan go to the downside. We were like, oh, if this bank go down, then other banks go down. And we placed an earnings trade, smashed it. And literally all the other banks went to the downside.
Good work.
Citibank down 5%. Bank of America down 5%. Wells Fargo down 5.5%. That's what we did. We chose Wells Fargo just because they had some shady business going on a couple years ago. So we're like, yeah, we might as well just, hammer this company. But kind of crazy to see a blanket sell-off here with these bank stocks. What do you all make of it?
I mean, it's again, I think they had good earnings, so it's not. I don't think that's part of it. I think some of this other stuff is starting to creep in. That was on main. I don't really watch the news as much, but I casually saw the headline on the news about the interest rates. It's seeping into mainstream media. That tells you a lot, right? Once it starts happening there. So I don't know. I mean, again, all of these are down. Even AXP is down today. I mean, obviously the market is down. Well, I don't know. I thought yesterday we were talking about this. Some of this stuff's going to add up. All these headlines are starting to stack up a little bit, and now you're seeing the market react, I think, and it's not really that surprising. Vol is up a little bit here, so it was only a matter of time, but this bank story, I think, might actually have some legs.
Yeah. I mean, it's when you think about it, let's say, most people have credit cards. Let's say you're using your credit card, you're paying, whatever interest. If that is now 10% max, you are now paying, if you're holding a balance, you're paying significantly less in interest month to month, which gives you more capital month to month to deploy in other assets or other aspects of our economy. And it could be a little boost, nice little boost. However, it does take away from these mega companies, but who cares? More power to the people, right?
What's the equal weighted? The equal weighted S&P? What's that doing today?
RSP?
Yeah.
Slightly up. When I look at the heat map here, it's a little weird. I mean, a lot of the tech names, of course, are down, and then you got the banks that are down. You got oil names that are up. You got a few of the consumer defensive names that are up. Walmart's surprisingly down. It's a little bit strange. You got a few healthcare names, but yeah.
That would be your play then, right? If you think it's a shakeout from the top, but overall maybe bullish in terms of consumer spending. Maybe that equal weighted stays afloat. But the thing in my mind that, I'm looking at most this morning is the good sign for crypto bulls that NASDAQ getting shaken out pretty good and crypto still up. Haven't had that in a very long time. As you know, we've had NASDAQ just kind of a bellwether for risk off across the board. Not today. So it's a positive sign. I know Ryan was on here earlier. Didn't tune into what he had to say, but hopefully he was spreading the good word.
Yeah, I mean, you're right. As much as I don't want to see it for my year-long MNQ trade, it's working well for my MicroStrategies trade, and it is not something that I would have expected for Bitcoin to be up 3.5% with the market heading down. So I think that's telling you something.
Yeah. This is really the first painful day we've had in our year-long strategies, but I think this just speaks to how nice these strategies are, because if you are positioned to where you can literally absorb a 40% down move in the E-minis this year, if that were to happen, and you can ride it out and just keep collecting premium until the market reverses, like it's a nice feeling for sure. Like this move today doesn't even affect us in these year-long positions because we're still significantly out of the money. Seeing a little losses today, but we've offset that with how long we've been in these positions. And I think today, if you were holding on and you had the near-term cycle, we already rolled into ours last week. But if you didn't yet, today is a nice day to consider doing that, because you're getting a nice little vol pump into the market here with this small sell-off.
I'm going to reiterate this silver situation. This is not good, man. I'm telling you.
No, seriously.
This shit's going to be down like $20 to $30 in like a 2-3 day period in the next couple of weeks. This is not good. I just don't think this is normal.
Do you think how, in terms of how public an idea this is, obviously silver speculation getting very mainstream now, but the actual knock-on effects you think are still not even sorted out from any sort of how priced in do you think the knock-on effects are of a silver this high?
Well, I think the interesting thing has been that it has had that narrative flexibility. It's continued to go up for whatever reason. Insert the reasons, because of Iran, because of what's going on with the Fed, because of whatever, and it just doesn't make sense. I mean, this move just does not make sense. It is really extended. It is continuing to get bought. And at some point, for whatever reason, I just don't know if it's going to hold up. I mean, it's going to be a pullback. I don't know, maybe $20 to $30 is an exaggeration, but it's not. And honestly, that would put it right back probably at an acceptable level. I mean, honestly, it's just a little crazy right now.
We've seen this chart before.
Yeah, we have. I mean, that's the thing. Like, we've seen this before. This happens in markets. It's been different stuff, GameStop, things like that. I mean, we've seen this happen in markets, and this just, to me, feels like something's broken.
It's always an interesting, when markets behave like this, always an interesting call out or exercise for active traders. Obviously, now we have some time baked into it of a lot of people presumably burned by this move. But if you're looking at silver now, maybe for the first time, are you taking action there? And if so, what kind of what's your thought process around product or entry kind of criteria in terms of option strategies? Futures obviously very dangerous. What do you
125 IVR, you don't see that every day. And such a massive product. I mean, this is one of the top 5 largest products in the whole entire market. I think it passed NVIDIA the other day as far as market cap size.
Wow.
This is massive. And so whatever you're doing, it should be risk defined, right?
Yeah.
I mean, it has to be at this point. There's plenty of opportunity. Again, volatility equals opportunity, so there's a lot to do here. I hope I'm not sounding like, something's dying. I mean, it's actually, I love it. First of all, this is fun. But just be risk defined. Be careful. Don't get carried away. Start trying to find ways to take a little bit off the table if you've had a good run here. I think you should. Don't get greedy, man, because this type of stuff always ends ugly. Always.
Yeah, we've just been trading SLV, super small, defined risk. We got into this upside call calendar, long May, short Feb, paid $245 for it. It's trading for double that now. I think this could be a nice exit point if we wanted to try and paint the top. But to Jamal's point, 125 IV rank tells you that the current implied volatility on the 30-day aggregate here is significantly higher than the previous year's range. So if you see an IV rank over 100, or if you see an IV rank under 0, it tells you that the current implied volatility is setting a new range. So a huge premium there.
Honestly, I'm surprised it's not higher.
Yeah,
but I guess last year was run up as well.
Well, and you know this, like gold and silver. I mean, a friend of mine said this best: like they're part currency and they're part commodity. And so, gold certainly, when you see that IV, I mean, typically they're around, close to single digits almost.
Mm-hmm.
It's like maybe 12 or 13 or 14 implied volatility. Silver typically is a little higher in the 30s or 40s. Obviously, you see it's way up there now, 70s, almost 80s. I mean, God help us if we get 100 implied volatility in silver. Like, holy cow, that's biotech territory, man. I mean,
literally.
And if we keep going up the way we are, we just might. We just might. Well, I'm sorry, SLV. What is? Yeah, that's what I thought. SLV and SI have similar implied volatility. That's what I thought.
Yeah. But yeah, the premiums here, like you can get into some really cheap diagonal spreads here, like a 10-point wide to the downside with the 80-70 long March short Feb, paying $6 for it. That is a nice low price point to where, regardless of implied volatility, if you get that down move, you're going to make a couple $100 on this because your max profit is upwards of $500 if you hold this to the short Feb expiration and you're below 70. So if you're trying to play for downside moves, could certainly be a case there. But I think I'm not going to be greedy here. I think I'm just going to take this. I mean, this rally has been nuts.
It has.
And it can continue. It can continue.
It can.
But we are at a point where, like, if it does continue, implied volatility is so high, if we do keep ripping up towards 100, the short option is still going to keep exploding relative to the long. Like, I'm probably not going to make much more than this. Maybe I make 50 cents or $100 more, but if we sell off, all this profit goes away.
All gone. Yeah, I know. You're right. You're absolutely right.
So yeah, let's just 211. What a weird order. Why did I do that? Let's see if 210 is the number. Let's just let it sit there. I'll let that simmer. But yeah, crazy moves. I mean, I'm shocked that it still hasn't come down yet. Like it's just kind of wild.
So crazy.
But yeah. Glenn, I'm pleased to say that we are almost out of the woods here. I'm still aggressively long the dollar franc, but this P&L, what used to be minus 300, now it's minus 80. And once we get out of this, we'll be golden. I'm interested to see how much I've collected day to day being along this pair.
100%. Yeah.
I can probably total it up in my transaction history.
Yeah, you might have to do from the web. You might have to go to transactions, export it as a Excel file, and then it's very easy to filter.
Yeah.
And yeah, you're probably pretty good. Yeah, that carry not going anywhere anytime soon. It appears.
Mm-hmm.
Still long the euro, looks like. Mm-hmm. Need a little bit of a reversion there. But yeah, today, well, there you go, filled.
SLV filled, $215. Double the money.
There you go.
Love to see it.
Yeah, I mean, interesting move in currencies today where, yes, perhaps a little bit risk off when you're looking at a big move down in US dollar, Japanese yen from its highs, which is nice to see. I'll get into that in just a second. But Swiss franc, also a little bit of demand today. Everything else pretty unchanged. I'm surprised that the dollar hasn't gotten a little more traction in some of those Australasian pairs like Australian dollar and New Zealand dollar, which have over a 3-month basis a 0.5, 0.6 correlation, positive correlation to U.S. equities on that kind of risk barometer. Not a ton of traction there for the dollar, but all things considered, holding in when you look at, look no further than just the euro dollar, a pretty tight range today, which for active traders is tough to see, but not weakening to a major degree, as we saw similar kind of dynamics cause a huge slide in the dollar. That story from earlier in the week around Fitcher Powell and the president or the DOJ not really coming to fruition in terms of a wide-scale sell America trade as it looked to be Monday morning. So some positive sentiment out there for the dollar, but not a ton going on. So today I wanted to take a look at the Japanese yen, if you'll allow me.
Please.
Yeah, please
Let's go over to the slides. Prepared a little something for you guys. The mover of the day and the storyline of the week, in my opinion, the Japanese yen hitting new fresh lows, US dollar, Japanese yen, that exchange rate hitting new highs earlier this week, above 159 in the spot market, which are highs dating back to July of 2024, blowing through those 2025 highs. So wanted to take a minute to just kind of prepare and package a little thought experiment around what it would take for the yen to recover, because there's so many pieces around this currency right now. So let's get into it. And this could, formulate some trade ideas for you across multiple time horizons, because there are multiple potential opportunities for both sides, long and short, the Japanese yen. But here's a little look at the price action today. A pretty notable sell-off of a little over 0.5% in this dollar yen off of its highs. But yesterday, a lot of alarms sounding in the Japanese hemisphere, because not only is it this US dollar Japanese yen exchange rate, but we can look to all of the yen crosses that are offered at TastyFX, like the euro yen, the pound yen, even all the way down to the Mexican peso yen, to see that this yen weakness is broad-based, not just a US dollar story, and has a ton of moving parts around it. But the 160 level that we hit back in July of 2024, we'll take a tighter look at it in a second, but that's really the only time in the past 30 years that we've been at this 160 level. And at that point, and even in some instances before that, we see some Bank of Japan direct intervention to try and regulate this. So we'll look into that. But the main call out here is that even though that might be the headline, 160 possible intervention, we take a look at the left of this graph and you see that it was above. This is a daily chart, so each candle representing one day. We spent multiple days above 160, pressing all the way close to 162. So even though if you are a contrarian, you could say historically this is at an extreme. When you're trading leverage products, it's also very important to note that even if a change is inevitable in the long term, it could press even higher and stay there for an indefinite amount of time. So let's look at, let's zoom in on the next slide and take a look at the intervention risk in particular. Last time we were here, July 2024, we've had some recent headlines from the ministers of finance saying all options are on the table, not counting out possible intervention. And as we know, the main drivers for them to try and step in and regulate the exchange rate, try and bolster this yen, is not the absolute price level, but rather the velocity that the yen is losing purchasing power as a main driver in terms to step in. But here, looking at this graph of July 2024, you see that from a trader's perspective in the moment, it's not as clear-cut a story as you might think, because looking here, when we were at near 162, we started to get that yen sell-off that lasted about half a month there and took a ton out of this US dollar, but we didn't get until the end of July here an official kind of statement from the BOJ saying that we've pumped billions into this market to try and regulate the yen. So it can be very opaque in terms of real-time intervention risk, because they might not disclose it for multiple days, and the actual intervention can be conducted over multiple days. So you're really just looking for huge moves quickly as a ton of capital is injected into these markets, and you won't really have that confirmation for some time in some cases. So it's important just to know that even though intervention sounds like a one-off move, it can be distributed over time, and is pretty opaque and is designed not to, reset markets, but really slow momentum and give some of these other fundamental aspects time to regulate this market over the long term. So on the next slide, let's look at what actually could cause the yen to recover long term. And that's, less to do with big players in these spot markets, but more to do with the narrowing interest rate differential. As we know, the U.S. is coming down, but what's pressing the market to new highs right now is, the data that's coming in isn't spelling the narrative of, okay, we're safe to keep coming down. The kind of base case for murky data or data as expected is just keeping rates as is until we see something shocking to the labor market or inflation coming down more than expected. And the main driver from the Japanese side is the Bank of Japan supposed to be hiking, but not doing so right now. And we'll get into that in the next slide. But then aside from all of the risk premium from a political side is just that carry dynamic as well. And that's not a fundamental driver, but can really reset these markets in terms of magnitude. Once you get some of these leverage positions unwinding, we can get larger moves than we would get to the upside in this market and help the yen recover long term. And so here's just a snapshot of U.S. overnight interest rates and Japanese overnight interest rates. And you might be caught on, the absolute values here of, okay, we need the Bank of Japan to hike a couple more times, but that really only gets us to 1%. That interest rate differential will always be there. But in terms of, the carry trade and financing larger positions, it's really about when this differential is at the apex and when it's condensing. You don't want to put on, new financing trades when this differential will squeeze tighter, even if it is always there to maybe 2%. And so this is just one to watch. And from the Japanese side, it really is down to sustainable economic indicators. So even though it's not normally a high level economic data release, for Japan, looking at wages and wage growth in particular from a country that, imports a lot of things, also services, inflation, getting some of those indicators to a sustainable level and getting the kind of hike that spurs from economic growth and more sustainable certainty can really add some flows back into this yen. And again, that Fed timing, because it's so important for not only the U.S. side of things, but Japan being a large U.S. debt holder, that kind of correlation tends to be a lot higher in this pair as well. So looking for any sort of rate cuts priced in more than expected, more than the 1 to 2 over 2026, could start to shake this pair out more long-term from a fundamental perspective. And then, of course, on the next slide, there is, how do we get here? And the potential upside case for it is this new Japanese political regime in which now the buzzword is the Takaichi trade, which, of course, is the Japanese prime minister. And that's how we got here from, the likes of 150 all the way to perhaps 155 was on the election of this new prime minister, which, if it had their way, would lead to a lot more fiscal stimulus and a lot of policies that would, in theory, weaken the yen and strengthen equities, as would be good for them on the domestic front. But this is really taking a leg higher because of recent developments from this snap election, might be called. Whatever the political nuances are, there's a chance for the political regime to get even more power, a stronger majority in the coming future. And so traders latching onto this weaker yen in recent weeks on the perception of this trade getting some more legs. So if that legislation's passed and this government wields a little more power, there's also risk to the upside for dollar yen. And like we said with the intervention, that could slow momentum. But from a fundamental perspective, we could see this go through to new highs as we enter, a regime from the U.S. side and the Japanese side that perhaps we haven't seen before. So historical context out the window for those that are predicting a higher U.S. dollar, Japanese yen. But that's what I'm looking at. Kicking it over to the key takeaways. Obviously, for short-term traders, looking at that intervention risk, being attentive to when moves can be more aggressive to the downside than the upside from some of these liquidity injections. For those bold enough to trade intraday, perhaps some opportunity to the downside playing on some of those moves, but then zooming out to those fundamental indicators for long-term plays of, not only calling for the yen to get stronger just because we're at historic lows. If you're trading that, you could expect to be in that position for a lot longer than perhaps anticipated, because the fundamentals right now don't necessarily dictate a V bottom for the yen. But of course, all that could change with some of these economic indicators that come out, and even from the U.S. side, if U.S. rate cuts are to come, could help regulate this yen over the longer term.
Yeah, that one chart, I mean, that's the one, right, where you show sort of what's been going on with our rates and what's going on with their rates.
Mm-hmm.
It's kind of, I mean, everybody, I mean, risk of sounding elitist, it does always feel like everybody sort of is paying attention to what the Fed is doing. Everybody's paying attention to what everybody's doing as far as interest rates, obviously, because of trade and all that. But I mean, at some point, what if we're gonna? It looks like we're gonna sit at rates that they are for a while now. From what I looked at in the CME Fed Watch tool, doesn't seem like there's a chance for any change in rates until maybe even July. So you wonder when, but it almost seems like every time, not every time, but most times after we change rates, then they start talking about in Japan changing their rates. So they're paying attention.
Exactly.
I just wonder when that's gonna take effect.
Yeah, and there also is that's a pretty long time horizon, for a potential cut here. But Japan could see some of their domestic indicators pointing to a sustainable rate hike even before that. And as we know from the fall, coming into last year, had a lot more cuts priced in. Those got pushed out. But even for as telegraphed as the Fed can be, we're seeing these rates oscillate in terms of projections for cutting or no cut, even within the month up to. And so absolutely no reason to think that July is necessarily going to be the first cut by any means. What we do know is it would be very unlikely for it to be January and increasingly unlikely for it to be March. So I think there's an April meeting in there too, right? Yeah, April, June. So even though not likely, crazier things have happened in terms of those odds adjusting in real time, and that's the tricky part for trading spot FX as well, is really the number, the decisions, even though they are volatility events, it's all in the months ahead and the perception of where rates will go over the coming months.
Yeah, strong probabilities all the way through June. June, you have a 47% chance of a 25 basis point cut. In July, reflecting arriving at a 25 basis point cut as well. So maybe in the summer, but maybe. I've already smashed the long. I'm buying the high here.
Okay.
But I'm not holding it long term. I'm looking for just a little bit of a
little jump.
Little exuberance.
And you're timing it on a one of the bigger down days in recent memory. So if this is just a sputter on, maybe a one-off equity shakedown, if risk sentiment turns around, you're looking back at the last 4 weeks here, and only once have we had more than 2 successive down days. So. All the best for you.
It's a trip how much that relationship has changed with the dollar in the markets. I mean, 2 years ago, a day like this in markets the dollar would definitely be up.
100%.
It's just funny to watch that relationship change over the last couple of years.
Yeah, it's a tough one.
Yeah.
Craziness. That was pretty spicy.
Thank you.
Any other non-dollar spice before we let you go? And before that, I want to say congratulations on your use of risk premia in the
Thank
slides.
you.
That's a very rare sight.
Thank you.
Smart man over here.
I try. Every once in a while, I bring it for you guys.
At the Northwestern Education.
Still paying for it, so. I don't know. What's interesting to me, I checked correlations across my board. And dollar South African rand over a 0.5 correlation to gold. So I didn't check silver, but the narrative there being reliance on exports, metal exports in South Africa, and getting a leg higher there. We're getting a softer day for U.S. dollar, and gold is still up, is it?
Yeah, it's still positive.
Yeah, so a divergence there today on the daily candles for that trade. But, historically, that's not one of the stronger correlations like gold and silver. That's a clear pairs trade. I'll get into that sometime because that is interesting. You have U.S. dollar, South African rand, which, similar to the peso we talked about, is very reliant on risk atmosphere. But also when you factor in the positive gold correlation, it's like, oh, well, is it spiking gold for what reason, or because it's a risk off move? That seemingly, in theory, spells fewer days where the rand would get a lift from positive gold action. But over the past 2 months, we've got South African rand higher by 5%. So something there is driving this rand demand. Maybe I'll take a look.
Should coin
rand
that.
Demand.
You should coin that phrase. Yeah.
Rand demand.
Rand demand.
Rand demand.
Rand demand.
Mm-hmm. Well, Glenn, there you go. Yeah. G Money out.
Out of here.
Enjoy lunch.
Thank you.
Appreciate you. Got long the U.S. dollar. I'm aggressively long the U.S. dollar. I mean, what am I gonna do? And I'm fine with it.
Now you pray. Now you pray to Jerome Powell. That's standard order of operations. Hey, Jamal, have a great time in Miami.
Thanks, buddy.
Go get him.
Appreciate you holding up to you. Thank you.
You're welcome.
Appreciate it.
All right.
I'm going to follow Glenn on the Twitter sphere. Glenn Freibarger. Give him a shout. E-minis, NASDAQ, haven't changed much since we started the show. Down 75 in the E-minis, down 440 in the NASDAQ. Bitcoin selling off a little bit, down to just up 2,500 now. Have you done anything else in your portfolio over there?
No, have I? No, I haven't today. No. Besides closing the calendar and this LV, I haven't put that up yet, but no. I got a lot on right now, I feel.
Yeah.
And there's some things I want to give a little chance to work. Like, for example, I really don't know what to do with this MicroStrategy Super Bowl. I feel like now it's just finally turning.
Yeah.
And I have done this in the past. I take stuff off as it's finally turning, and then it keeps going. And so I'm like, nah, I'm going to leave that on for a little bit.
I mean, look at this mountain you have. You could get this thing way up there.
I just need it above 200. That would be nice. How about just above 200? That's not asking for a whole lot.
It's really not.
And it's the time. So I got a bunch of different positions that I'm not getting paid on quite yet, and I want to just let them work themselves out.
Fair.
There's nothing I feel like I need to take off.
Like it. Yeah, we got out of that silver calendar. I've got this put diagonal on. So it's interesting. Like I could throw on another one closer to the current price. I would go long March, short Feb for sure. Just because you're getting a ton of premium in Feb. And this 10-point wide is $6. You could even make it wider if you want to give up some of that premium. 15-point wide for $7. Lots of downside profit potential if you do get that move. But what's interesting is like this one I have on now is already March Feb, and it's at 65.55. It's trading for $200. But if you do get that big sell off, like this will be a scratch in no time, really.
Yeah.
So yeah, I might just leave this one on, and if this really gets out of hand, like if we go up to 100, that's when I'll start to layer in more, or at least above 90. I'll start to layer in some more risk there because that's when the sell off can really be like a huge liquidation if it happens. But still, defined risk, keeping it under $1,000, giving myself time for it to work out. Those are the three components of trading silver for me.
Silver's making a little fall here as we sit and talk.
Mm-hmm.
$3 off the highs now, SI. So, I don't know. It's getting crazy out there.
Mm-hmm.
Look, I mean, I would like to see it go to 100, right? Like you just said, because then the move is going to be even crazier at that point. I mean, you can't just go straight from 70 to 100 in a couple of shots in a couple of days and, less than like 2 weeks. Come on, man. That's going to be wild. Here for it. Great story.
Copper ripping up there. I saw a hilarious tweet. Someone was like, I sold all my Bitcoin. And I have like a warehouse of nickels now. They're like, because nickels, copper and something else. It's copper and nickel. But like there's copper in nickels. So he's like, if a nickel stays a nickel, it's still flat at 5 cents. But if copper explodes, I can melt this thing down. It's like, this is where we're at. People.
Yeah, this is where we're at. Exactly.
People are posting about their basement storage of nickels. That might be the top.
This is where we're at. I mean, if you just type in silver, again, this is just in Google, 1 million articles come up.
Yeah.
I mean, that to me says a lot.
It's nuts.
Credit card interest rates.
Yeah, silver, credit card interest rates, top 2 hits of the world today.
Okay.
But yeah, we're streaming live on the YouTube channel. If you want to stream, join us there. We're on Tasty Live. Just head over to the homepage. You'll see this video streaming live. You can throw in your trade ideas, questions along the right-hand side chat. I've got the referral program pinned to the top of the chat. If you bring a friend to Tasty, you both get $100 if they deposit $2K or more. But yeah,
I mean, this is actually one of the main reasons I love doing what we do, and I've been in this for so long. You just feel so knowledgeable about some of the things that are happening in the world, and right now, silver is a big deal, and credit card interest rate cap is it's a big deal.
It's nuts. The market can stay irrational longer than you can stay solvent. Yes, the old adage. But yeah, this is why you got to stay small. And regardless of how strong your assumption is, you can be wrong. You will be wrong. The more trades you have on, the more wrong you will be in terms of quantity of wrong trades. So always got to keep that in the back of your head and just have a plan for it. Let's see. Would you consider setting up some Friday, Monday calendars if the earliest we could provide a ruling on tariffs would be Friday? Yeah, I mean, I think you can base your time frame on the implied volatility of the market. So if we're just looking at like SPX in general, you can see kind of flat. You have a boost in implied volatility for the 16th, 16%, 60-point expected move. And then next week, you got 80 points for Monday, just 10 points higher for Tuesday, just 10 points higher for Wednesday. And then it trickles off until the following week. It's like, yeah, you could inventory premium anytime next week. If you want to give yourself more time, it's going to cost you more, but you're not really paying much more implied volatility between the 80-day Monday, Tuesday, 80-day Tuesday, 80-point Tuesday implied volatility and the 110 Friday implied volatility. So, but yeah, selling the 2-day gets you that boost because you're looking at 16.5% for the 2-day cycle, 60 point implied move, and then sub 15% all the way through next week. So yeah, I don't mind it. I don't mind it. Let's see. Gold calendar, call calendar, Feb Jan for the 420 strike. Nice. Short leg extrinsic has been going up for the last few days. Is that possible? When should I close? Yes, it is possible. So yeah, this is why I don't really focus on theta too much, because the main drivers of option premium is going to be delta based on the product move that you're trading and implied volatility. Those are the top two. So gold, implied volatility creeping up slowly but surely. If we look at GLD.IVR, what you'll see in this chart is, a couple days ago, we were looking at much lower implied volatility. I should say end of last year, much lower implied volatility. Now we're in the 50s. So yeah, and you can see that if you're seeing premium increase in your short option, it's likely due to the fact that gold is increasing in price, of course. But if implied volatility increases and the price increase, you're going to see a marked extrinsic value loss. Similar to my SLV position that I just closed, my short option had exploded, but my long option still gained more than the short, which is why it was a net profitable trade. But even if that happens, you just have more extrinsic value to decay in Jan relative to your long option in Feb. And you're seeing a ton of value here. Over 2 days, $300, $200 in extrinsic value to still decay and go to zero if you have, even if you have an in-the-money one. There's $200 of extrinsic value to decay in the 2-day if you're short Jan. So this means you will see a similar P&L even if gold drops to 418 because you're protected above 420 if you're long the 420 option here in Feb, and you have $200 of extrinsic value, which would offset a lot of that premium going out of the money if you went to 418. So if we're at 418 on Friday, you'll probably see a similar P&L. What do we got? I need a little end of day SPX pump like we had yesterday. You could see it. Kind of seeing it now, only down 65. NASDAQ catching a bid too.
I don't know. I'm kind of worried about markets falling. Personally, I'm a little worried. I'm a little worried for the end of the day here. We need a little bump up, but I don't know.
People buying silver on credit cards right now.
Yeah. There's the ARB. That's the ARB. That's it.
The ARB. Max out the credit card, get the points, get as much silver as possible, and watch your rate go down. That'd be insane. Shorter credit spread on Carvana, 480-500 for Feb. Carvana, down 13 points.
Seriously, though, am I supposed to be selling my silver bars right now?
Yeah. No. Maybe.
All right.
It is interesting if you're a jeweler. If you have a jewelry store and you have all this stuff on hand, what are you doing right now? Are you hedging? Are you hedging the cost of silver by putting in tons of short premium? Similar like farmers, if you have a crop and that crop just rips higher, you're selling futures to hedge in your price.
I wonder. That's a good question. I mean,
what?
I don't know if they typically do, but you typically don't have this type of situation happen.
Yeah.
And you could make a nice. I don't. Jeez.
What do you do? I just don't.
I mean, more than likely, they're not going out there and selling futures. But I wonder. I mean, you figure there's some jeweler that has come up with that idea to try and do that. Because, yeah, they do have massive amounts of it on hand.
It's got to be something. It got to be something. I got to look into this.
Yeah.
Got to look into this. But, yeah, Carvana, Feb, 480-500. Taking some premium out of there. Nice. Yeah, down 13 points today. So this was right at the money yesterday. Now you're out of the money. But yeah, nice trade if it's profitable. If it's not, you can hold it. You now have 25 points of wiggle room to the upside before you can still roll this out for a small credit into March. So don't mind it, but as you can see, you're in the earnings cycle, so this is not going to decay much more at all. I mean, of course, if you get a downside move, it will, but if we stay right here, you're probably going to see this hold on to premium until after the earnings announcement in Feb.
Most jewelers are raising prices in response.
Yeah. But then at one point, are people like, I'm not buying this?
Yeah, for sure.
Is that a
yeah?
Is it an extreme level? But yeah, any other earnings trades? What do we got for earnings today?
Good question.
We're in the heat of it.
Sure, some more banks.
Yeah, Goldman Sachs. Let's do this again, shall we? Can we do this again?
I know. I mean, I tell you, if it happens again, I think the levies break a little bit. Goldman drops like $20 or something.
Yeah. It's so expensive.
It is.
God.
Yeah.
Even a Feb weekly. Oh, you know what? We could do the micro spread. Let's do that. The 900, short the 900 2-day, long the 900. It's still expensive. $300.
I know.
I feel like this is the trade though. None of these have gone up.
Mm-mm.
They're just getting eviscerated. I feel like we have to do it. But it is interesting that it's still very expensive. Like we've done this before many times where we're collecting 80, 90% of the cost basis on the long option. This is still only 60%.
Yeah.
But if we fast forward this to Friday, and then we assume, let's say, 10% crush, which would be on the higher end, you're looking at $200 on your $3 debit. If you get less of a crush, that's going to be great for you. Now you're looking at $500 on your $350 debit. And because of the state of this market, you probably will get a little bid or have this 9-day option stay bid. So yeah, I'm gonna do this. I'm gonna get into this. 365, instantly filled. I hate it. Oh my god, 350 price improvement.
And with you. Yeah, that means that's weird.
That's weird. 15-cent price improvement. That might be the most I've ever had. So yeah, be careful with those markets in there.
Yeah, is it because of the? It's probably because of the.
It's got to be. Yeah.
It was the weekly. It was the 9-day.
Either way, in with a 900 strike put calendar.
Do it.
Long the 9-day, short the 2-day. If we get a downside move and a vol crush in the 2-day, which will happen, and vol stays bid in the 9-day, it'd be a nice trade. Last question here. What do you think about a Feb March coin downside butterfly? 210, 230, 250. So a crab trade.
I like that it's 20 points wide.
Yeah. 250, 230, 210. Long March, short Feb. I think I might go to the Feb weekly just to make it an earnings trade. But it's tough to see where they're pricing it in. They're pricing it into the 30-day, but it's not confirmed yet. But yeah, if you just go to the Feb monthly, that's where you'll have your higher liquidity for sure. So yeah, 20 points wide, paying under $10. It's a nice risk reward, and you have that downside move potential for earnings, even if it rallies prior to earnings. So yeah, I don't mind the trade. I like it. But I'm going to wait till this is confirmed, because if we do get this confirmed, we can then just sell the weekly cycle and get that immediate zap of implied volatility and premium for earnings. So yeah, I'll wait for that. We should probably get it in the next couple of days here. And that's that. SanDisk earnings at the end of the month. I'm going to wait for that. Yeah, we're out of time. Thanks for tuning in. If you have any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. And Glenn is at Glenn Freibarger with an A. Go send him a follow. TastyFX, give them a follow as well. You can check out tastyfx.com. You can open an account through the Taste Trade platform. Lots of ways to do it. But yeah, plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned, and we will see you from the SIBO floor tomorrow. See you then.
Be safe out there.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Taste Trade account today.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home. Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
What is going on, everybody? Good Wednesday midday to you, and welcome back to Risk and Reward. We got all kinds of interesting activity in the market today. We got crypto rallying, silver just continues to fly, and we're going to talk about all of it. But before we get into that, as always, I'm joined by my wonderful co-host, Errol. Errol, what's going on? How you feeling?
Good, feeling great. Hope everybody else is doing well. Was a little bit shocked by the tariff court decision not going through today. That got pushed a little bit, so that was something I was looking forward to today, but didn't pan out. But other than that, good. Can't complain.
Yeah, punts, baby. They punt. It's just kick this can down the road. Yeah.
It's like we're about to pick it up and then kick it. Yes. It goes a little bit further.
Yes, exactly. Feeling pretty good myself. Annoyed with how difficult it is to schedule medical things. I'm trying to get some imaging done on my back. I got a referral as I had a little back issue, and I just spent 20 minutes getting put through gyrations and never. I talked to a real person for like 30 seconds who said, "I'm going to transfer you over here." Hold was too long, had to hang it up and hop on air. So I'll pick that back up after we get off. But yeah, not surprised by the tariff. I'm not necessarily surprised by the tariff decision getting kicked down the road. I am surprised that we didn't catch a little bit of a rally off of that, though. It kind of felt like the little drawdown we were seeing in open might be trying to price in, potentially negative decision happening there.
Yeah.
And then it just continued after that was officially punted. So interesting situation there. Our main topic for the day is going to be bull slop, one of our favorite topics, because we actually have some good talking points here. As Chipotle's president has stepped down, he's running from the grind. Errol and I take not entire responsibility, but I'd say nothing crazy. I'd say we were like 50%,
like 80%.
Yeah,
50, 80. I'm looking forward to the topic, though.
Yeah, this was mostly us, so we can dive straight into things here. First of all, Chipotle's performance last year, it was bad. To quantify it more exactly, about 39.7% loss. Yeah,
that's rough. That's
rough.
rough.
Levels marked here. It is.
That's rough.
It is
That's
rough.
tough.
Yeah, not what you would hope for. And I am not a believer that the reasons that they are citing are the actual reasons for this drawdown that we're seeing. Yeah, thank you, Jared. I appreciate the corroboration. What's going on, everybody? What's up, Greg? Jambo life? What's going on? Happy to see you. What's going on, Allison? But yes, Chipotle having a bad year. A moment of appreciation for my slide title, please. I'm very proud of it. Chipotle Mexican Chill. I thought this was very.
I like it. That was fire.
It took entirely. Thank you. It was nice. It's my wonderful fans. But anyway, yeah, bad year for Chipotle. Opened over 61, closed under 37. Not what you want to see.
No.
So if we can go next slide here. Talking about the current events going on today, President and CBO, 5 seconds to submit your guess for CBO. Chief Brand Officer Chris Brandt has stepped down after 8 years. He's the lovely gentleman in that picture on the top there. CLO, 5 seconds to guess CLO. Chief Legal Officer Roger Theodoridis have both stepped down. And former now President and CSO, any guesses? 5 seconds.
Strategist.
It is. Chief Strategy Officer Jack Hartung stepped down less than a year ago as well. So they are running through presidents
making a lot of
quickly
moves
here.
A lot of moves, a lot of changes. I know Chipotle was in a lot of the headlines over the last year too. So while all those changes is going on, it's looking like their stock was getting absolutely globbered. But that's a lot of changes and big changes in a small time frame.
Yes, things turning over very quick. So we now have Stephanie Perdue, who is current VP of Marketing at Chipotle, is stepping into Brandt's role. And to my knowledge, that is all sources say she's filling Brandt's role as CMO. That's not either of Brandt's two roles, but she is going to fill in, at least in the interim, for all of his responsibilities. Eileen Eskenazi, current head of HR, is going to take over Theodoridis' role as chief legal officer. That seems like a much more, linear transition upward there for her. So yeah, they are filling these spots. Oh yes, and Roger Theodoridis, obviously the lovely gentleman in the second picture on the slide here. So yeah, major shifts going on. They are throwing stuff at the wall and seeing what sticks.
I'm curious, like how many things can you throw at the wall for this business model?
Yes.
Like how many type of changes can you make? Like I know there's a lot of internal structure shifts going on in the company, but now that I think about it, how much can you really change from the outside? On something like the bowl slop, something like Chipotle, something that's felt consistent or seemed consistent. I know there's some tweaks here and there, but it makes me ponder a little bit.
I agree, and they want to put a much greater emphasis on marketing is part of this. So that's why they're elevating the marketing VP up into these higher ranking roles, is that they're going to try to be more aggressive with their marketing. And to their credit, I will say, tangibly, at least in my lived experience in the last 3 months, Chipotle marketing is up. I see their commercials a lot now.
Yeah, I see everybody's tattoos. Their marketing is up. I see the Chipotle bag tattoos everywhere with our generation.
Yes. Pete Davidson has some Chipotle bag tattoos going on.
Marketing is up.
Yes, for sure. And they've always done kind of cool, creative marketing things, but in the past they really leaned into leverage with influencers and celebrities, even just mainstream celebrities. The Chipotle lifetime cards are a big thing.
Yeah.
Actually, just saw a sidebar that Juice WRLD's unlimited McDonald's card just got sold on eBay the other day.
no way.
You haven't seen that?
I haven't.
I think it was $2,300 or $2,400, which you could extract that value out of that if they will let you use it. But I don't know what happens if you walk into a McDonald's with Juice WRLD's McDonald's card.
I didn't see that.
They'd probably say GTFO.
They
What are you
probably
talking about?
Yeah, come on, buddy. This is 2026 now.
Yeah, I don't know. But I mean, if it's like a scan thing, I don't know.
No, but I mean, I see the point with the passes, with the Chipotle passes in the gym culture. I think that kind of was intertwined a little bit there, which was nice for Chipotle brand.
Yeah, I think it's fascinating that Chipotle gives those passes a lot of the time to NBA players are actually the main clientele I've seen receive those, and it's like they don't need them. Like the guy that did the Chipotle.
I'm actually not too familiar with these Chipotle passes. Is it something that they give to like their more notable figures?
It's basically like if you are a Chipotle ambassador without ever being paid. If you're just if you have a large following and really love Chipotle and preach that, they will give you a little wooden. I don't know if it's actually wooden or just wooden looking card, and it's unlimited Chipotle. And I believe there's even something tied in where like your order at Chipotle is baked into that card, so that you just scan it and it.
Okay. No, I wonder if they targeted like the kind of the fitness kind of industry first, or if it was the other way around. They noticed this demographic usually comes here, or I wonder what it was, whichever came first, the chicken or the egg. Nonetheless, doesn't matter. Chipotle's been beaten down, but they're making a lot of changes here, I see.
Yes, absolutely. R.I.P. Juice WRLD is right, David Martinez. I was fortunate enough to see him before he passed away far too soon. Anyway, so we can dive into the next slide here, and we'll talk Chipotle's reasoning for their explanations for why sales have declined. So Chipotle says there was a decline in Americans eating out, and that's responsible for their decline in sales. Their same-store sales declined in 3 out of the 4 quarters last year, and Q1 of last year was the first time that they had a decline in same-store sales since COVID. So a significant thing there, and then they did it in 75% of last year's quarters. Okay. Americans did eat out a little bit less. Per multiple sources that I found, 6% is a pretty average number. Estimates range 4.5 to 8, sometimes as high as 9%. Less frequently on eating out, and that's expressed as cooking dinner at home is usually the question that people are asked. However, per Yelp, searches for meal deals and cheap eats were way up. I feel that should lend itself to Chipotle. And also, my public school math tells me that 36% is greater than 6%. So if this really were just purely due to the decline in Americans eating out, you would expect the decline in Chipotle's stock price to be at least, relatively correlated with that.
Exactly.
And aligned.
They're giving us a little bit of a cop-out here. Just a little bit of a cop-out.
We are orders of magnitude higher.
Yeah.
This was an interesting study that I found from Yelp here just on search trends last year as they pertain to food. So meal deal and sweet treat, which that became like a trend in the middle of last year, right? Like, little sweet treat thing. Those were up 2x year over year. And then value meal and cheap eats are both up over 20% year over year. That's 2024 into 2025. And like I said, I feel that these things should actually lend themselves to Chipotle. Chipotle should probably be leaning more into value and loading you up, giving you 2 meals worth of food. That's what Chipotle used to be. You go in there, you get $80.
And I was shocked by the massive burritos when I first learned about Chipotle.
Yes, absolutely. Yeah, and it was like $8.50 more food than you can eat. 2 meals, take half your bowl home, eat it later. And it seems that they have strayed a little bit from that, both in terms of quantity of food given and the price that they are charging for that food.
Yeah, you hate to see it. It's we see it a lot with a lot of industries, a lot of companies. Like, things are really nice. Now we're very popular, very successful, very revenue driven. Now we got to cut back a little bit.
Yeah, the way I see it, you can shrinkflate me if you want, or you can inflate me if you want. You don't get to have your cake and eat it too. You can't inflate the prices while shrinkflating.
That's what I'm saying. When you keep things the same, depending on the portion you get, you might get shrinkflation or inflation that day. You don't know what
That's true. That's true. Sometimes,
which is the gripe that
sometimes
you
you might get the 2014 Chipotle Bowl and think it's the greatest day ever.
But that's the gripe you've had the whole time.
Precisely.
That inconsistency.
Yes, and this leads us perfectly into the next slide. We can go ahead and jump over. Now we're going to dive into my opinion on the situation, and I've been wanting to be able to show this chart on air for a long time. This is a study where a Wells Fargo analyst in New York City went to Chipotle 75 times, made the exact same order across 8 different locations, distributing his visits relatively equally to each location. This chart here shows the bowl weight on the y-axis, and the each bowl obviously is a bar on the x-axis. So as you can see, the largest bowl was twice the size of the smallest bowl in terms of weight, and the smallest bowl was 3 standard deviations from the median size of these bowls. And to Chipotle's credit, there is a lot of consolidation in the middle of this chart, but there's also way too much skew for a chain restaurant where consistency is kind of what's preached in the first place. You know, I mean, that's why McDonald's became so successful in the first place, was because it's the exact same experience no matter what McDonald's that you go to. And I think that still holds up with McDonald's. With Chipotle, I feel that this is really what's scaring off consumers a little bit more, is you can't be certain of the value for your dollar that you're going to get when you go there, because it is all in the hands of the high schooler that is scooping the steak into your bowl.
That is true. And I mean, if he's got a lot of gains, you might depend the strength of that scoop that you're going to get. I like this visual, though. It really puts things into perspective so far.
Yes, exactly. And we're probably, I mean, this is just me eyeballing, but I would think we're like 1.5 standard deviations above the mean.
It's going to be my next question. I was like, where do you think we're sitting right now? Are we near the value area high? Do we start getting short these bowls, or do we get long? Are we near the value area low?
Yeah, that's a good question. And you could definitely establish a value area here based on.
I mean, you definitely could.
We are. I mean, volume is, well, I guess weight is our metric. It's not volume ounces; it's weight ounces.
But the volume is number of times. We could do number of occurrences.
Yes. Surely, yes.
Depending on, I like that though. I like that. It definitely puts things in a little bit of a perspective. But the 2 down there with the 2 bottom ones, that's a disgrace. That's a crazy.
And I would even say, I mean, the two next
crazy
to them as well. Yes, like the last 4 here are the tail risk that you take every time that you go to get Chipotle. And there is tail risk to the other side. But what I also notice about this chart is that just in general, there seems to be more right skew happening here. Obviously, we're talking 3 standard deviations from the mean on the low side, and there's not a perfect arrow drawn here, but we're something like 1.5 to 2 standard deviations above the mean on the high side. So you're getting skimped a little bit more aggressively than you're getting blessed at Chipotle. So yes, this concludes my thesis, but I just think Chipotle needs to realize that I believe this is the core issue. This is always what I will see complaints about on social media is, I went to Chipotle yesterday and it was more food than I could eat, and now I'm still hungry after I finished my Chipotle today.
Yeah.
So yeah.
That's valid. I will say my main gripe is usually like the quality was kind of poor this day rather than this day. That's usually kind of my thing that crosses my.
Yes, and to Chipotle's credit, they are trying to lean into the value aspects that I aligned with that Yelp study on the second slide. They are rolling out right now. You get free double protein on Tuesdays if you order in the app, which I think is an interesting deal. Their market research indicates that Tuesday is the main day that people work out in the United States.
Okay.
Which,
if I had to guess, though, I feel like Tuesday or Thursday would have been my guess. More so Tuesday, I feel.
I think so.
You just had to really, if you thought about it, like Monday.
Yeah. I think Monday, I think there's a spike on Monday when people say, "Oh, I didn't do anything all weekend. Let me go get after this." And then there's an even bigger spike on Tuesday for all the people who still didn't go.
Completely, but it's still early enough in the week to make up for it and to still feel good about yourself.
Yes, exactly. So I think that probably tracks to me. Yeah, Tuesday, Wednesday, Thursday is probably what I would have guessed there. You're tired after Monday. You want to go out on Friday. It seems like those midweek days are probably going to be primed. But yeah, so I'm not necessarily. I don't know if I'm going to trade on this information. I don't know. I mean, if you made me, I think I would be compelled to get short. I don't know that. Anytime companies do have major struggles like this and then just inside hire their new leadership, that always concerns me a little bit. Target just did the same thing. Target has a terrible 2025, and then they just inside promote. They fire their CEO and then they promote their president to CEO, and it's like he was president and COO, and so it's like this dude's been leading the operations this entire time that have led you to this point, and he gets a promotion for it. It doesn't really make any sense. Yeah. So yeah, obviously not knocking the 2 ladies that are being promoted to Chipotle. They might do a wonderful job. I know nothing about them, but I would be more excited to see them outside hire somebody with a proven track record in this industry.
Yeah, that's completely valid. I mean, I feel a lot of people probably would feel the same. I mean, you would think that'd be logical.
And I'll tell you who looks like a genius in all this is their old CEO, Brian Niccol, who's now the CEO at Starbucks, as he has been spurring some growth with Starbucks. It was a year of growing pains there, but they've since begun to grow out of those doldrums, and Chipotle has just fallen off a cliff since his departure.
That's tough. I love me some Chipotle though, so we'll see how it pans out.
Yeah, absolutely. Don't want to see Chipotle fall apart. Oh. Just found this to be interesting.
100%. With that being said, we can jump into the Taste Trade platform, do a little tour to market, see what's been going on over here.
Absolutely. We can talk a little TSM with earnings coming up tomorrow. TSM. I saw some chatter going on about that.
We got TSM over here. Let's zoom out a little bit, higher time frame. Get a little bit of a larger view on what's been going on over here. I mean, things have been a little bit more quiet today. We gabbed down, having a little bit of a sell-off afterwards. But these semiconductor names have been trading at their highs, though. So even though we've been speaking about them for the last couple years now, they've still been moving. They've still offered a lot of opportunities, so it's there.
Yeah, TSM is one. It would be hard for me to get long into this earnings call. I think I just.
It's like getting long to silver right now. That's what it feels like now.
It does. Well, yeah, and TSM especially. I mean, I wrote an article about this earnings call on the News and Insights portion of the tastylive website yesterday, and it feels, I don't know. I mean, it's just all the targets are so lofty. Like the market is fully expecting them to say that they're fully expecting them to guide 25 to 30% year-over-year revenue growth. They're fully expecting them to say that at least 2 of the 3 facilities, Japan, Germany, and Phoenix, Arizona, that are under construction right now are going to open in 2026. It feels like there's a lot more that could be a letdown on this earnings call than there is that could push things higher to me. But that said, we're talking semis here. They are integral in the NVIDIA supply chain. And that's not even to mention Apple, AMD, Qualcomm, these other companies that all need them as well. There's plenty of ways it could go very right. They could. I mean, it's like I said. I mean, it's semis. It's AI. They could come out and say we're gonna guide 50% year-over-year growth, and this thing takes another gap up. So I don't know that I will be touching it. If anything, I think like maybe an inverse iron condor or something would appeal to me. Just somewhere. I feel like there will be a move. I just don't feel like I can get directional on it.
Oh yeah, 100%. I mean, just wild. TSM was trading at $140 earlier this year, so. That's within 365 days of this low that we put in. Now, yesterday we put in the high at 336, so we've come a long way over here on Taiwan, but we'll keep it on the back burner. Not too much going on in the micro Nasdaq today. A couple trades, kind of not too much conviction in some of those, but we'll touch onto that in a little bit. And then Netflix, that one's been really quiet. I know we've talked about the Paramount Warner Bros. Deal a lot recently. Still on the dance floor there. We've had this position on for some time now, but we still have 37 days left to expiration. One strike is being tested right now, but we'll be patient.
Yeah, the newest development, the bidding more there is that Netflix is now moving into an all-cash offer.
Oh, there we go.
Which has been Paramount's leg up this entire time, is that Netflix's offer, some of it was going to be stock. Netflix is now exploring options to turn that into an all-cash offer.
There we go. Maybe we get a nice little turnaround here. But so far, it's taken a little bit of a hit. But maybe we get more talks. They need to keep talking because something needs to change here for this position. We've been patient. And then silver. Silver has been absolutely just astronomical. I mean, this is a run for the history books, no doubt. Just absolute parabolicing to the upside. And I got to say, it kind of feels like we're getting into, kind of that mania type territory in terms of the sentiment of the asset itself. Just from a visual standpoint, I mean, kind of left speechless. I was left speechless yesterday, the day before, then now another gap up with putting in another high. Wow, these metals can move. Do you have any thoughts on some of the silver or gold over there?
Yeah, I agree. I feel like we are getting to the territory where you could slap the word mania on this, and I wouldn't push back on you. I mean, and as we discussed off air earlier today, every leg up that silver takes just makes me think even more that whenever the momentum runs out, it's going to run out hard. I don't know exactly what level I think that this could theoretically collapse to, but what I was alluding to earlier today is. Think about everybody that is winning FOMO trades on silver right now. That has gotten long SLV at 70, at 75, and is doing well on those positions. Especially people who are just holding stock. I think that the panic selling could commence in full force should this take any sort of considerable gap down. I have my concerns in that regard. That said, I'm down on my shorts. Congratulations to everybody who's still bag holding your long silver. I would have sold a long time ago, but I respect the hell out of anybody who's held through all of this and it's continuing to get gains there. Maybe time to lock in some profits, but I would have said that literally every single day for the last 3 months. So I am not the oracle of silver. Maybe you should just fade whatever I say about silver all the time. But yeah, down. Something to the tone of 30% on these naked puts that I took the other day on air. February 6th is my expiration, so it is very short dated and something of a gamma play at a 65 strike. Not really legitimately expecting those to get in the money, just hoping to be involved as the move comes through.
It's always really fun, kind of observing an asset where you're not sure of. Right? There's never any certainty, but pretty sure of a potential something is going to happen. I think that's why we like a lot of earnings. That's why we like a lot of these binary events that's happening. I know this isn't a binary event, but it is an event that's like almost like an anomaly. It's not something that we see every day. If anything, I mean, 2, 3 standard, whatever mean you want to take, this is definitely going 3 standard deviations or further out on a data set than we normally see. But what's cool and kind of fun about it is the fact that we know something's going to happen. You know, whether this keeps squeezing to the highs or whether we get a sharp pullback, we're probably going to see something. So I think that's what's been fun about all this metal fiasco that we have going on right now. And even just observing this chart, you know, as we speak. So other than that, I mean, we got a little bit of silver in there. We got some short delta, going to be patient on that, 37 days left to expiration. And that's pretty much it over here on my end. That's been really catching my eye, and that's been fun, to say the least, over here, guys.
Yeah, Jared, I think you make a great point about Netflix. Netflix could be the buy the dip opportunity of 2026 right here. I'm inclined to agree. I mean, Netflix certainly too big to fail, I would say at this point. I mean, they still remain the big dog in the streaming space, although I do think that they are lacking a little bit on landing live events, particularly live sports. But they have done a great job with expanding into boxing. That's something I don't typically give them credit for. They had the Paul Tyson fight and all these things, and as much as everybody loves to hate, Jake Paul is maybe the greatest promoter in the history of boxing because he knows that making himself the villain will get people to watch. Yeah. And so these events have gotten a ton of traction. Obviously they still are landing all of these large scale productions. I'm sure that they will cook up something else very, very successful next. Their originals tend to do very well. So yeah, I do think this could certainly be a good opportunity on Netflix. What if they drop more on ER? Oh, I'll get 2027 leaps. Yeah, I'm inclined to agree with that thesis. I don't know exactly what my price target would be, but I mean we're talking like Liberation Day lows here. I mean 8202 is their Liberation Day low. That's their low in the last 365 days. Yeah, that's facts. That's correct. I had to fact check myself live there real quick. But yeah, that's their year low would be 8202, and that was when the entire market was crashing. And now we're talking about getting near those levels again. Yeah, I don't know. And they're a company that, to my knowledge, shouldn't be impacted by tariffs in any capacity, right? I mean, there's no physical goods going on with Netflix, so yeah, certainly could be some good long opportunities here, fairly short. Steven, I'm short a 50 lot of puts on Netflix. Yeah, I mean, yeah, 50 especially. Yeah, I mean. 50. When's the last time they were even at 50? Charts go this far back? They do. February 2024 is the last time Netflix.
They've been running though a little bit. With that being said, I know we got a few moments left. We can jump over to the TradingView platform and just check out what we've got going on over in the futures product. Really, nothing too crazy. I mean, it was a pretty solid down day. So I mean, if you got a lot of short delta on, today was probably a pretty solid day for you. We didn't take too much. Let me go ahead and throw on the executions. We took a couple trades today. We managed our risk on the first one. And then we got out of our second trade very early. The risk to reward still panned out in our favor. But to say the least, we didn't catch the meat of the move, right? We were looking to get short near this value area high at 25,698. And I mean, now we're trading at a low of 25,480. So that's how the cookie really crumbled today. But we were initially looking to get short, and we stopped out. And just saw a lot of weakness in the market, so just wanted to remain short. So hit short again. Obviously, on the first leg down, we covered our position. Didn't have too much conviction, but really just trying to ease back into things, especially for the week. So that was kind of the goal. But the markets have been volatile. They're offering opportunity. Maybe some people want to get long, short at some of these value area lows down here for the rest of the day, whatever it might be. But sometimes it just really depends on the opportunity that you want to take. So with that being said, we'll keep an eye on the overall market and see how it pans out for the rest of the day. A lot of volatility though. So we'll take what we can get.
Yeah, absolutely. Yeah, and mea culpa, Steven. I knew you meant 50 contracts when you said 50 a lot, like when I was reading that with my eyes, but by the time I was looking at the charts, I had convinced myself that it was 50 strike, but appreciate the correction. Stopped out of my short yesterday at high of day. That's brutal. I understand the pain for sure. But you can only trade with the information that you have. FOMO is a dangerous thing.
What was yesterday? Did we do anything yesterday? Oh, we did do a little bit yesterday. That's 6 points. No, I mean, it's been a little bit of a slow
I remember
week.
these drawings now that I'm looking at them.
Yeah. Yeah.
Why can't ES have the last 30 minutes rally like Silver? Pokes it with a stick. The come on, do something meme of the guy poking things with a stick. I send that all the time.
Oh, yeah.
Yeah.
That's especially for VIX. I know they were sending that left and right probably in 2017, especially prior to 2017.
Yeah,
volatility was so low.
Yeah, VIX would be a good last look here before we hop off, actually, as we are starting to get just a little bit of expansion going on in VIX. Continued expansion, I should say, into today. Oh, you're looking at what's going on? Oh, I see. Yeah, but jumping. Yeah, I'm seeing 1762 over here. Not sure. No, that should be it, I think.
Yeah, but VIX is popping a little bit. Selling off to a new low for the day.
A little bit of expansion. I am long VIX right now, so not displeased with that. Is that Dutch Bros? Is that what Bros is? I'm not familiar. It is. Makes sense. It'd be Dutch Bros or Warner Bros, and I know one of those two things is WBD.
Oh yeah.
Yeah, Dutch Bros. Pretty aggressive expansion. I mean, they've really just had store after store after store opening. The Duncan model, uniqueness model.
Oh yeah.
Anyway, I guess that's gonna be all we got for today. You have anything else?
Yeah, no, that's gonna be it on my end. We'll see how the market pans out for the rest of the day. We're kind of near the day's low, so we'll see if we put in a new one or if we reverse before we do that. But a couple hours left, we'll see what we get.
Absolutely.
Cool.
All right. Thanks, everybody, for coming to hang out with us. We dearly appreciate you taking the time out of your day. We never take it for granted. Earl and I'll be back here same time, same place, noon Central Standard Time tomorrow. Be sure to stay tuned for Futures Power Hour coming on next. Always a lot of great programming going on Tasty Live. We will see you guys next time.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies. Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
I wanna play the game. I wanna roll the dice. I got an easy hand that's gonna make the night. You wanna dance off? Let's get our shoes on. I'm done with all your fussing. This body totally bussin'.
We're back. It's still Wednesday, January 14th, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, how are you?
I'm doing good. We have a little mini snowstorm blizzard in Chicago this morning. So other than that, the weather's looking nice. It's cold the way I like it in the winter. So
does that mean natural gas is finally going to rally?
No, it's not. It's not doing what it's supposed to do because the LNG flows took a little dip and people are punishing it.
Down nearly 10% today. Tough day for natural gas. Good day for oil as those tensions in the Middle East continue to rise. The U.S. is evacuating ships from Qatar. It's evacuating troops from Iraq. European nations are evacuating troops from various embassies across the Middle East. We see a headline today, Thomas, that the U.S. could attack Iran within the next 24 hours. So oil front and center. A little bit of a risk-off day here in the stock market, one in which we see ourselves eyeing rotation. Yes, the Nasdaq's down nearly, 1.7%. But you know what? Equal-weighted S&P 500, still in positive territory. Russell 2000, still in positive territory. So not a totally gloomy day around here. Bit of risk off, a little bit of a domestic shift. Bitcoin itself is rallying, passing through 95K. But Thomas, the big news of the day, of course, is that the Supreme Court had another decision day today. We got 3 rulings. None of them were about tariffs.
No tariffs.
Come on. What is this SCOTUS can kick that we're doing here? Why? What is the Supreme Court so afraid of? Why are they so concerned with releasing this decision, telling us when it's going to come out and then not releasing it? Probably going to be a contentious one that might not please the president, perhaps. So, Thomas, as we think about how the market's reacting here today, I think it's less about the tariffs themselves and more about the fact that we do have some geopolitics that are seeping into the conversation. With that, we can just make our way into our Fed rate cut odds. How has all of this impacted the market's perception of the Fed? You know what, Thomas? Nothing's happening here in 2 weeks' time. 2 weeks from now, the Fed will meet. They have their January 28th meeting. Market's giving us less than a 5% chance. I don't see a rate cut on the board for the rest of Powell's tenure as it stands right now. Through April, no further cuts are favored. Is that something subject to change that we need to keep watching, or is the market going to be content with the next cut arriving in June?
I mean, it can always change. The data comes in, usually monthly for the things that can change it. But these are always things that we're looking at here. I think you got to be looking at it. But for right now, it seems like the next few months, the market's not going to be too focused on the rate cuts. That doesn't mean they can come back into the picture at any moment. All it takes is an FP report or something that throws the calculus off.
Next on from payroll reports, not for a few weeks' time. We're looking out to February 6th, that Friday. We're not going to have another CPI report until the week after either. So we do have a bit of runway here between now and the next consequential report for the U.S. I suppose, Thomas, we could take a look at what's happening with GDP. GDP is coming out on next Thursday, as it were. Atlanta Fed President Raphael Bostic, who's not a FOMC voting member, says restrictive policy still needed, according to Bloomberg. Yeah, funny how the independence of the Fed is attacked and all of a sudden the rate cuts seem to be slipping away. It's not something that I would ignore, particularly if Powell, for some reason, sticks around past his end tenure date in May, which is totally feasible. Thomas, are you surprised that the cut odds have gone down in the wake of all of the data that we've seen? I know that the GDP growth trackers are sitting at lofty levels still, 5% or so. But we've had some really weak labor market data.
Yeah. Am I surprised? No. I mean, maybe a little bit. You noted the coincidence of the rate cut bets going down right after the independence of the Fed is attacked in a tangible way, I guess you could say, versus, rhetorical, which it was before. Yeah, I don't think many people on that board are happy. And, you can say you're unbiased all you want, but everyone has their biases and they come through in ways that, you're not even conscious of sometimes. But I think this is, is it like a message to Donald Trump? Is that what we're getting at? Like, hey, come at us or come at the Fed, and we're going to not do what you want even more, even though they were doing what he wanted. Rates were coming down. I don't know. I mean, I can only speculate. I say maybe a little bit of that is happening, but what's it mean for the market? What does it mean for us trading? Maybe a little less bullish than I previously was on equities. We'll have to see. There's uncertainty around the Fed, and overall, financial institutions are not liking what is happening with all of this. So the confidence can definitely be a little lower until all this gets sorted. So I think, overall, it's slightly bearish for the market for this to be happening.
Volatility rise today is helping sink stocks. It started yesterday morning, Thomas, with the S&P 500 down over 1% now, 69.26. VIX 1780 here. We started off the year, opened up at 1485, so we have about a 3-point rise in the pocket now, 2 weeks into the month almost. The Ides of January just reside around the corner, Mr. Westwater. These are some of the highest levels in volatility that we've seen since the middle of December here. We take a look at vol futures, and those likewise have jumped both in the G and the F26 contracts right now. So this is not just something that's, because of today, tomorrow. Structurally speaking, as you look out along the curve, you're seeing this rise everywhere. Now, is this of significant consequence? I don't know. I mean, we're back to where we were in mid-December, for example, in the March cycle. And sitting at a 20 several months out, I don't think is a shocker. Have we seen something fundamentally change in the market this week, given how now today is Wednesday? We're looking at the highest volatility of the year, when yesterday morning we were at the lowest volatility reading of the year.
Yeah, I mean, volatility rising, reflecting some uncertainty, whether it's coming from the Fed stuff or, what now seems to be an impending attack on Iran in some kind of form or fashion. It's unsurprising that volatility is lifting. What was your exact question, Chris?
Something fundamentally changed in this market. I mean, it's interesting how we went from lows in the cycle for several of these volatility future contracts to now we're sitting at yearly highs.
Yeah, no, I think the things that are, in our face right now that I mentioned, Iran, the Fed independence, these are two big things. They're fairly unique in what's happening. So, the outcomes of what happens from here are rather unpredictable. So I think that, it's not surprising that the VIX is elevated. Chris, we can't hear you.
Sorry about that. NASDAQ is the one leading the way lower and started to take it on the chin, 1.82% to the downside and sitting right near session lows. More interesting for me than the percent loss today is this absolute decimation of the uptrend that's potentially coming together here today. Thomas, from those November, from those December swing lows right now, even clips the low that we had for January 2nd. So this breakout in vol coupled with the technical breakdown, it certainly throws a wrench into any of the at least short-term plans that bulls may have. The close today is going to be monumental. If we were to close down at these levels, that's a loss of the 1 week, the 1 month, and the 50 in one fell swoop. It would also mean that we have negative divergences or rates of change, rather, in both the 1 week and the 1 month. And the 50 is probably not too far from accomplishing that either. What had been a pretty clean, clear, bullish setup, markets breaking out, low volume, low volatility, is turned on its head in a dime. And so it would warrant a reassessment and perhaps tilt the market in that negative Santa Claus rally window direction. Insofar as the years in which the Santa Claus rally fails, January has seen a negative 0.1% return in the S&P 500. And it did fail again this year for the third year in a row. So some softening up right now, Thomas. Bulls can't quite crack the key levels necessary. but not all bad. Explain this to me, Mr. Westwater. Tell the audience why RSP positive still. Russell just barely turning negative. Surely that's a silver lining.
Yeah, no, this is to me this is kind of defensive rotation, and you also see that when you look at the Russell, going between green and red here for the past hour. That's all it is. It seems to be from big cap names to smaller cap names, more speculative stocks to more blue chip companies. It's not really surprising that the market is getting a little defensive here, given what's going on. It's not really the best time to take on a lot of risk when you have potentially large military actions about to unfold. This Fed thing is still playing out. It's still pretty fresh news, given that it's unprecedented. So yeah, I think it's defensive rotation. I think when you look at the indexes, look at the components within them, that's what you're seeing.
I think it's a really good point that you raised here. I'm looking at the sector ETFs here today. Again, we track 25 here on Futures Power Hour. I'm counting 16 of the 25 still green. Now, the 9 that are red happen to be some fairly important ones. XLY, consumer discretionary, down 2.04%. Technology, down 2.02%. Semiconductors, down 1.75% or so. These tend to be telecom, off by 1%. I mean, this is the growth engine of the market right there, Thomas. And so growth is taking a big hit today. The Mag 7 names are taking a big hit today, down nearly 2% here, and clearing out the yearly low into a fresh yearly low. A name like Meta hurting me because I'm sitting short of put spread, sitting right at this level. So not doing too hot after the past few days. Google, on the other hand, is giving some back, but it did hit a fresh all-time high yesterday and is bouncing off of its 1 week moving average here today in the second half of the session. So you really got to pick and choose where you go in the Mag 7, but by and large, it's not looking too pretty out there. NVIDIA down 2%. So you say it's a little bit more defensive. Consumer staples, those are flying high. I give credit where credit's due, 1.15%. A technology, XLV, that is holding up here likewise. If we're going into a more defensive market, Thomas, how long can the small caps outperform tech? Or would you rather look on a sector by sector basis, get away from the futures, and maybe go to some of these more defensive ETF names that you typically see survive a little bit better during broader market drawdowns?
Yeah, so I guess that depends on how you really trade. Because if you're doing futures, what you can do is buy less than Nasdaq and go into the Russell or something. Go from big to large. That's pretty much your move, is go from big to large in terms of what you're trading. That those indexes are comprised of. If you're trading ETFs and stuff, then you could get as pretty more selective in what sectors and things that you want. For me, I'm not doing ETFs. I might. I don't know, because this is hard. So I don't have much equity exposure, but I am in a couple names that are taking it on the chin today. NVIDIA, Tesla, things like that. Some of the more space stocks that I'm in are doing a little better, but this is one where I'm still kind of keeping my money on the sideline. I'm thinking about selling a call spread in ES earlier, and going through the week until all of this plays out. And when I say all of it plays out, I pretty much mean Iran and their response. I don't really see, a bunch of risk taking coming back on really immediately. And I don't like the technical developments that have happened in the market that you've already highlighted. I don't think we go into a correction or anything like that, but I do think we can make a little lower ground through this week for sure. So, maybe selling a call spread, that's what I'm looking at getting into right now. Other than that, I'm not trying to get too heavy. I'm not trying to express a view that has any particular confidence. Just want to play with what the price action is giving us right now.
Well, the bears certainly have something to play with at the moment. As we see an S&P 500 breakdown here, technically speaking, Thomas, we could make an argument that you have a little bit of a bearish rising wedge that has come together here, which, given how we do have a series of higher lows, you wouldn't get full confirmation unless you're below 68, 66. But the tenet is there. I mean, like the groundwork has been laid such that if you want to see a deeper pullback, a close today at this level would bring you back below the 1 month moving average, as well as a loss of an uptrend that's carried us November, December, January swing lows thus far. And it would suggest, we should be looking towards the mid 68s for a potential. If we're going to get long again, you look down there to see if the market holds. And if it doesn't hold at 68, 66, then okay, the wedge target means 6,600. 6,600 would be a decent pullback. If we were at 7K, 400 points, that's not nothing in the S&P 500's term, Thomas. We're in that neighborhood, just north of 5%. A good 5 to 10% pullback to scare the children. I mean, that's not unusual and maybe healthy. Although I was preferring this trade to the upside first.
Yeah, healthy in the long term to medium term. You got to shake out the weak hands, get that money back on the sidelines. I got in an ES short call spread at 16 days out, 69.50, 69.60. So that's what I'm going with here. And, it's pretty much saying we're going to trail sideways or go down. I'm going to try to play it through next week. So we'll see how that works. But the Russell, I wouldn't be surprised to see it maintain some of that strength because, it's been waiting for money to come in. And I don't think the market's at a point where you're going to get, too bearish of vibes where you're just getting liquidation across the indexes. But that's yet to be seen. So I'm just playing it for a little downside here and want to have that exposure on.
Russell is holding up here today and holding that 1 week moving average so far. The volatility rise, listen, it's modest 16.8. We're just in the mid to high teens for most of these. When you look at your NASDAQ, it's at 23.8. Concerns about AI, of course, they're continuing to percolate. I'm looking at my heat map here right now, Thomas, just to get a broad overview of what's performing well, what's performing, not well. Most of it's not well today. But I can't help but notice that it's still a lot of this Microsoft, Oracle, open AI flywheel that really is taking it on the chin more than most. The Microsoft here is now breaking through the lows that we had in November, lowest levels that we've seen going back to June. Oracle, this is down 5% today and change. It had a nice little bounce here in recent sessions, but it's quickly eliminated all of that. It's not like this is the Broadcom Google side doing much better. Broadcom off 5.4%. Google only a little bit more than half. So there's really nothing to like Tesla here. Lots of things that I have bullish exposure in right now, Thomas, not having too hot of a session. We talk about rotation though. At the start of the year, and this is something that we shared on show, the start of the year, when we take out precious metals, commodities exposure, broadly speaking, was at its lowest percent ever for portfolios. I believe that was according to Morgan Stanley. All the big names that are up today that have been really outperforming the past few sessions have been commodities, especially commodities ex precious metals. Is this just a bumpy ride? Is this just turbulence on our flight to new ultimate highs in ES and NQ?
I think so. And when you look at commodities, I think equities, with margins and everything, they're a little more sensitive to some of the political headlines, some of the, I don't want to say geopolitical headlines, but they're just a little more sensitive to these short-term vibrations and sentiment, where things like copper follow more longer-term macro thematic elements. I think that's why, copper, I'm very bullish on this year. Still performing well. And, the copper and oil up today, it's showing, the sell-off in equities. It's not on concerns the economy weakening. It's not something like that, which is usually, the broad element that controls investing themes ultimately for equities. So, I think commodities are still in for a good year. I think they're a really good thing to be trading if you want to diversify your exposure away from equities. A lot of times, especially new traders, you can get way too just trading only equities or trading too heavy to equities. And, it's the time not to do that, especially because a lot of these gold, silver, copper, they're exciting to trade now, and you can pick your entries, your exits. You can do a lot of stuff with them. You can have a lot of unique views. So, that's how my portfolio is kind of slated right now: gold, copper, even the AG commodities. So, I've never been one to keep too much exposure to only equities.
So the key levels today, we're back above the 50 in the NASDAQ if we get through 25,552. The S&P 500, you're back above your 1 month at 69.44.64. The Russell today, as long as we're holding through the former swing high on December 12th at 26.25. Small pullbacks in broader uptrends. I wouldn't get too worked up unless we start to see some really significant breakdowns, which I suppose is where we look to volatility here as we go into the bond section momentarily. Volatility has not been able to rise much more since after that U.S. Open, since after we heard that we're not getting the Supreme Court ruling on the tariffs today. We've started to settle down. If we're not settling today above 19, Thomas, how much more fear do we have to pump into this market? There could be more, but at key support regions, I'm not going to get off the bull train just yet, although we're pretty darn close to needing to. Bonds, their grind continues, Mr. Westwater. We've had a 10-year auction. We've had a 30-year auction this week. Both are pretty good, all things considered. Whole stop through. Excuse me. Full stop through. Thank you. Increased foreign demand. Those are the things that you like to see. We also have these concerns about potential war in the Middle East. Maybe that's the reason why the market's down today, Thomas. People just generally speaking, buying their gold, silver, oil, and their bonds when stocks come in. It's a risk-off kind of day. Bitcoin is the only thing that's up in the risk world, although you could probably make an argument that Bitcoin isn't as a risk asset as it has once was in its life. No longer at that same realm, given its performance in recent months as stocks moved up to new highs. I digress. What do we do about notes here? Because I am dying a death by 1,000 paper cuts every single day in this very frustrating position.
I'm long ZN. I have a short put spread at 111.5, 112. That's got 37 days left. I think I only got into it on Friday or something, so I'm doing okay on the position. It's 25% of max profit already, so I'm going to stick in there. I feel fine with it. But, there is a lot of chop recently. But today, it's no doubt, it's kind of, like you said, it's a war trade. Crude oil, bonds, gold, just makes sense. But
that's
this
the war
continues. Trade. Yeah. It's like, so when we actually, last year, when we actually bombed Iran, the lead up, you saw that kind of trade being established. But once it actually happened is when the market gave back all of that. I'm not sure if that's what's going to happen this time. You never know. Depends what we actually do and then what Iran's response actually is. Sometimes it's, they shoot missiles at a base, but they're not really shooting at the base. They're shooting 10 miles away from it. I don't know. It's a lot of uncertainty at this point.
And I suppose if and when tensions boil over and bombs start flying, the regime is in a different space today than it was back last June or even the preceding April, Thomas. It's a lot weaker right now. And so a U.S.-Israeli attack during this period of what I see some observers calling social unrest. It's a very generous way of putting it. The regime may see this as a little bit more of an existential threat that could ultimately send the mullahs packing. Missiles back towards Tel Aviv is not out of the question. Towards a U.S. airbase in Saudi Arabia or UAE, not out of the question. So it's not just the U.S. could be bombing something. This might be a little bit more tit for tat, like we have seen in the past, right? So with that said, bonds, if it is a war trade again, and volatility here, not exactly rising, but the war trade for those that have not, I want to say paid attention, but necessarily have tuned in at any point since February 2022. But it's usually bonds up, gold up, oil up, stocks down. And you're getting that shakeout today. There are other reasons why you could have that asset performance, that mix of performance, right? But given the context, I think we could call this the war trade coming back into play. So does that mean anything good for the note position? Maybe. I mean, if we get away from 112, does it mean anything good for the bond position? Absolutely not. I know that you tossed in the towel here. I'm getting ready to toss in the towel. This is beginning to look like a failed head and shoulders pattern. We're back through 116. And in turn, I think about that longer term chart, Mr. Westwater, and say, well, if we were back in this green area, then necessarily we take a look at where we were going back to the COVID highs, and we mark off the COVID high, and we mark off the high that we had around the tariffs. And sure enough, we're churning. We're getting through that area again where you start to think about being on bull footing. So I think the flip is coming. I'm still going to be this omnidirectional trader for notes, but sizing up something for bonds that gives us a little bit of exposure. And I know this is already where your head's at, but say 37 days near the top of recent range highs. If it's a breakout, that's near 118. A 117, 119 call spread here, risking 1 to make 3. That's probably the prescient thing to do. So in line with that, actually, let's do, I like 118, 120 better. We'll put this into the follow account. Well, I never like when the trade gets filled that quickly. But I do like the fact that I'm in the market now, Thomas, because that is what we sought after. Again, 116 has been the line in the sand for so many months. It's been so frustrating watching this just churn around. But we have to respect the market, and the market's telling us that whatever consolidation we've seen is potentially ending. And now there you have it, back through the neckline, breaking the downtrend.
Yeah, I'm not in ZB. I've kind of had to give up on it after a series of trades that just didn't work out. So it's not specific to ZB. If I do that on any asset, I'll just take a breather on it. But yeah, I'm going to stay in my ZN, I think, for a little bit. I think I got some room now. And it's a weird time for bonds, I think. Bonds are rising now that rate cut odds are staying stale, I guess you could say.
Yeah.
It's a weird market, I think. I don't know. I'm going to stay light in it. I'm going to continue to play the ZN position, but I'm not going to get levered up on any of these bond positions. It's, haven demand, if say military action passes and bonds fall again, that shows that it was just haven demand, kind of propping it up. And then after that, I'd be worried that we could move lower, actually.
Why is that?
Just if we've been chopping around for a while since early December, and this lower rates, potentially coming haven't really helped move them up a lot. And now that rate cut odds are staying stale, if that haven demand falls apart, I think maybe some downside could be in store for it. Not a huge move lower, but definitely not wanting to be long them.
Well, I can't believe we're going to game it out, but what do you have to game out a scenario where the U.S. attacks Greenland for some reason? Right? what does that mean for treasuries and capital flows? Will our allies, former allies, we'll call them at that point, would they be purchasing our bonds or leave us out to sea and let us finance our own issues, which, the yield curve control probably too not far around the corner thereafter, Thomas. That's a really crazy thing to suggest. If I was the only one suggesting it, then maybe silver wouldn't be doing what it's doing. Silver on the back of a headline that Germany is sending troops to Greenland to help deter U.S. aggression. Not a headline I thought I'd see in my lifetime. Silver here is at a fresh all-time high. This very moment, Thomas, $92.69, 71 cents an ounce here. 129.7 IVR. When does this end? Well, technically speaking, a measured move calls for a range play into about 96. We have the swing lows here from late December up to the highs. We call the range low 69.5. We'll call the range highs 82.5. It gives you a clean $13. So $13 on top of 82.5 gives you 95.50. Currently at 92.73. We get to 95.50 at some point before Valentine's Day. We've arrived there ahead of schedule, which would be following the trend line that's carried us here since the end of November. Ultimately, if we're taking a Fibonacci extension from the swing lows in November up to the high that we have here in December, back to the lows at the end of December, that gives you a $103 target. So technically, if this wasn't silver, if this was just being ticker agnostic, Thomas, this was a stock, people would be all excited about it. You see things all over Reddit and Wall Street Bets about how this thing is, still has another 10% ahead of it right now. But anyway, volatility's up. Prices are exploding to the upside, 7.2%. We're apparently going to war with the folks who helped us after 9/11. So there's that, Mr. Westwater. Do you have enough gold and silver yet?
Yeah, I actually just got out of my silver position yesterday. It's one of those things. Every time I get out, I have a good chunk. I'm like, yeah, I should roll it or leave it on, get a little more juice out of it. But I'm like, at these levels, take what I can get. There's going to be a big pullback at some point. It's making me hesitant to stay in these positions. I don't want to call it scalping because that's not been my intention to do. But I've been getting in and out pretty quickly. I want to say I'm tactical about it. But I can't really complain because I took some money on the position. I'm still in gold, so I'm fine. It's just being long gold, being long copper, and then being long silver. It's where I want to, at least one or two of them, I want to get in and out quickly because there's going to be a day where they're all down big and I'm going to get hurt. But for now, I'm getting in and out. I'll get in it again at the next pullback.
Yeah, it feels like Icarus flying into the sun right now. Mm-hmm. Gold and silver. Well, for silver more than anything else. There's really not much to say here. It is a strong momentum trade. You got to know what you're getting into if you're trading silver. It's the volatility right now, Thomas. Okay. $10, 17. We're basically looking at the market's got to move 5% every single day to actually realize the volatility that's priced in. So this is not for the faint of heart. SI is, I hate to say this, is probably not for the average person out there. It hasn't been for a while. Now at these levels, it's absolutely insane. We have to presume a new CME margin hike is around the corner. The last time IVRs had jumped up to these kind of levels the day after Christmas is when we learned that there's a CME margin hike coming because of the volatility expansion. So, we're probably looking at that again, but that means the next sell-off, Thomas, why wouldn't people be dip buyers around it? Given what we've seen. After all, every time we raise margins, we make it less appealing for speculators, and then maintaining your position, having to deposit more money to maintain that position, it's not that much more money. You're not going from 26 times leverage to 15. You're going from 6 times leverage to 5 to 4. 4 to 3. It's not great, but it's not killing the rally. So I think that's the first risk that we have right now. Otherwise, These look like they're breaking out. We had talked with Jamal yesterday on the show, 45.85 or so. If we can hold the former highs here from December and we don't break lower, then the bulls still have it. If not, then you have a little bit of a double top that could probably bring it down to 4,500 or so. We never got down through 45.85. So here we are. This would be a fresh record high close here for gold today, likewise. Why the divergence? Silver seems like we should be concerned about something, given how it's trading.
Yeah, I don't know. I mean, gold feels slightly safer, but it makes sense. It's a bigger product. It's less volatile. But I still think it offers you an advantage if you're looking at the market of larger deficits, uncertainty, instability. It still offers a bullish vehicle to invest in for that view.
Yesterday, CME announced that they will be launching a 100-ounce silver futures contract. Currently, if you want to trade silver, if you're trading SI or SIL, the smaller one, you're looking at much bigger contracts, Thomas. I'm looking at the contract specs now on Tasty just to make sure I have everything right here. Yep, I did. 5,000 full point multiplier for SI, 1,000 for silver, so 100 coming in here for the new this new silver contract, making it a little bit more accessible for retail folks. We do have the 1 ounce gold futures on the platform now, which they trade more or less like spot. Ilya is a really big fan of the 10Z gold futures. So for folks who are looking to get involved in the market and they want to do something that has a little bit more, I don't want to say depth of liquidity, but certainly accessibility than a GLD, 1 ounce gold futures may fill that gap for you. But we do see here, Thomas, in the metals space, it's another day of green. The metals are off to a great start for 2026, better than I think even the most bullish people would have presumed could occur at this point. As far as looking for targets here, gold itself, we've carved out a $300 range, which if we're just breaking out simple measured move from the high, roughly speaking, 48.80. Maybe if we want to be a little bit more conservative and measure it from the breakout point, 47.80. Either way, gold looks like it now has another $150, $250 to run to the upside as we make further progress towards $5,000 an ounce. Which, if this year works out where we hit 5,000 and then we trade down to 4K, I wouldn't be shocked, given the scale and scope of the run up with the veracity and the fervor it's taken over the past year or two. But these things look like they just want higher still. And I know it's been a repetition here, and we've been beating a dead horse in terms of buying the metals on the dips and staying long and rolling profits into new positions. But as momentum guys, Thomas, until I know that you're out of silver right now, but as for me, until the bell stops ringing, I'm going to be at the trowel as a good student of the George Soros, Scott Bessent school of thought would suggest, which is when you see a bubble, you run into it. And silver may be a bubble, but we're doing our part.
Yeah, I mean, yeah, it's a good view. And I've been in and out, so I'm going to run back into it eventually. But there's a lot of things to like about being long gold and silver right now. So I mean, everything. I mean, even the things that are low probability scenarios, or at least they used to be low probability, like the U.S. using some kind of force to take Greenland. It's becoming more and more likely, and these assets are going to provide that haven to go into. If you're a speculator, take advantage of that.
Denmark turns around and says they're no longer going to accept U.S. dollars in trade.
And I mean, yeah, it looks like Germany will send troops to Greenland this week. Potentially seeing Abrams versus Leopard face off. That'd be interesting.
Cool. So how high is too high for silver, Thomas? That was the question we set out to answer. No idea. Maybe demand destruction zone. If you listen to the commodity analysts, 125, 135. No idea. But I hope at least this episode, this latest surge to the upside today, 7% higher, is instructive for folks who are looking at the differences in how products relate to their underlying volatility. metals are not like equities. People panic buy metals, they panic sell stocks. And it's been a hallmark of both the gold and the silver trade for the past several years now, 2+ years into this, starting in October 23, that as volatility has risen in gold and silver, prices have been there in hand. So silver vol 130 IVR, really tempting to stand in the face of that. Metals are a different breed. Oil is up near session highs, Thomas, 61.77 right now. We have those alerts that the U.S. is, of course, going to be bombing Iran sometime soon, making their way through the market today. Certainly, we've shaken off yesterday's news that Venezuela would be giving us 15 million barrels of oil per day moving forward, according to President Trump. I contested, of course, that the math doesn't math because Venezuela produces less than 1 million barrels per day at present time. So even if they had a bunch of offshore inventory, we are talking about winding those down in the span of days, weeks, perhaps.
Mm-hmm.
And then where does the rest of the oil come from? So it was a little odd to see the market react to that comment. Of course, we have blown back through those highs, so the market did sober up and remind itself that math needs to math in order to have some of those kind of predictions actually make a long-standing impact. Instead, key infrastructure being potentially blown out, 51.7 IVR here in crude. Yesterday, we broke out officially from the downtrend off the highs that we had in June and the end of September. We also likewise saw the volatility regime switch gears, whereby since the end of June, we had not seen an IVR north of 40 in crude. And yesterday, we did for the first time since the end of June. This market is in breakout mode. It's why we reassessed our priors and said, should we be more directionally bullish here? And the answer, of course, is yes, because at 70 or so, a bullish falling wedge here, Thomas, does call for a return back to highs that we would have seen when the wedge began. This is a story you and I have seen before. If there is a geopolitical rally here, that volatility is expanding because of a very specific event. 20% of global crude supply, global oil supply, could be impacted as a result of the fall of the Iranian regime. There will be a time and a place to short the vol on the other side of it, but it's not right now. This is not the move to fade. This is a buy the rumor, sell the news type of situation like it was in June, where if you believe it, Thomas, this is the day that the market responded to us bombing Iran. We were up at 69.80. We closed at 64.68. The next day, we hit a low of 61.29. It was all of the buildup, if you will, the tension rising. That's what got oil moving up. Once the bombing occurred, then things cooled down. If I could only go on for one more moment here before I get your opinion. Thomas, last time, the Iranian regime was releasing videos of the Statue of Liberty being destroyed and sending them out to their population. And that's how we knew this thing was over. Because as a New Yorker, I would have heard about the Statue of Liberty being destroyed. And so if they were saying that they already retaliated, clearly they weren't going to do so. But with the existential threat of the regime this time sitting around, this may not be just the U.S. bombs Iran and then it's over. So a little bit more patience in fading this particular geopolitical incident, I think, is warranted.
I think so. So when you back someone into a corner, they're going to make decisions that aren't as logical, as they'd otherwise be. And these, if it came down to it, if they didn't try to, quash this protesters with, it looks like the numbers are exceeding the 2019 protest of around 1,500 killed. There's estimates from, anywhere from 2,000 to 20,000 people killed, it looks like right now. So this is a very significant event. The reason why it's not so prominent or, in your face is because Iran goes to great lengths to control what comes out of the country. So the very limited video footage, pictures, things that catch the average person's attention. But this is a massive development, especially for the Middle East. So of course, oil is reacting here. One place, one telltale sign that the military is very likely, strongly considering a strike or some kind of action is the removal of forces around the area in those bases. So they're flying people out because they're fearing retaliation. They want to reduce casualties in that kind of scenario. And now, from what I'm seeing, is action could be, as soon as, hours away, because it's nighttime there now. Might be tomorrow night, might be the night after, but it looks like something is going to happen. But what are the military actions to try to stop the killing of protesters? I think it's kind of limited from what I've seen, unless you have very direct intel on where the entire chain of command leadership is. And then you have to deal with the potential consequences of what if you topple the regime. How do you get stability there? There's a lot of questions. It's a very situation where things can spiral even more no matter what you do. So it's going to definitely continue to impact markets. I just don't know, if this is going to be a sell the news event like it was in June last time. And it's crazy that was already June, because it feels like it was just a month or two ago.
Tell me about it. I can't believe it's already January 14th. Where's half the first month of the year gone?
Yeah.
Already. But you have a 51.7 IVR here, Thomas. And I think, big picture, right? If we really want to take a generous view here, we'll go down to the lows in April, up to the highs in June. Okay. Where is the 50% mark? Show me 50%. We'll go to the positive here. Okay. Halfway mark. Lows after tariffs, highs after Israel, Iran comes in right near 62. It was a line in the sand that we tracked all summer long into the fall, Thomas, as this thing chopped around and we kept doing the short iron condor trades. Getting back to 62 here sets up a really interesting opportunity if we want to think a little bit longer term right now. The volatility that's priced into this market, it appears to be within the next month. Okay, so if I'm going out to 40 days and we're looking below recent lows, which recent lows would be 54, recent highs would be 70, we could do something like a 53, 51, and 70. Oh, well, these strikes are not great for what we're trying to accomplish here. But if we were to go equidistant apart, $2.50, we could do it like this. And it's risking 4 to make 1, but it's a 64% probability of profit. So we're not there yet. This doesn't look like the best setup given the liquidity and the open interest in the strike. So 40 days is probably not going to be where we want to do it. Maybe a little bit longer, 62. But taking advantage of the vol rise, because if it does come back in, and this isn't the start of World War III, Thomas, we're going to want to have something that plays for the decline in volatility ultimately at some point in time. So even at 62 days, we can get something a little bit more favorable. $2 wide strikes on either side of the April tariff lows or the June highs post bombing of Iran. 50, 52, 72, 74. That's a 63% probability of profit. That's going to give you a 3-to-1 risk to reward.
Yeah, and there is, it looks like there's some call skew in the options right now. So 57 to 67. $2. Yeah, there's a little call skew in this. So, I'm looking at putting on an iron condor right now. Probably give myself a little bit more room on the upside here. I'm trying to put something on right now, iron condor myself. Definitely might go up to 70, 68, 70. I'm going to do something around there, I think. I'll have to take a look at it in a few minutes here.
You mentioned the call skew here. How can you determine that on your screen? Fairly easily. You can just go over and have delta as one of your columns. I'm looking at the 20 delta calls and the 20 delta puts. The 20 delta puts on the bid side are selling for, you can go out there right now, purchase one, right? Here we are, 122. And if we go over to the calls, the 20 delta calls, you can buy one for 127. So 20 delta each, Thomas, but one side is a little bit more expensive than the other. The market is favoring where is all the activity right now in the options market? There's, say, more people interested in being long than short. It's a tilt in that direction. It was not that way a few days ago. The volatility regime has shifted here. So whatever plans or best ideas that you had that were working in November and December, different environment, different volatility regime now. The volatility IVR moving through 40 yesterday was the tell, and we're having follow through here today. If the reporting is accurate, we may wake up tomorrow morning, Thomas, to news that the U.S. has bombed Iran. So this is very much a live issue, as it were. It's not something we're thinking about in the next month. It's something that we're thinking about in the next day or two, given what we're seeing out of Europe and out of the Middle East.
Yeah, I'm going to put my chips on tomorrow night. I see some people on Twitter saying tonight, I think it's too early. We just saw that evacuations are pretty much ongoing right now out in these bases around the U.S. forces. So I'm going to say tomorrow night or the next night. I don't think it's going to happen tonight.
Thomas, I got out of natural gas a few days ago because the trade has been killing me, ripping me limb from limb. So I'm grateful that I'm no longer in it when it's down another 9%. When does the pain stop? I'm pulling in the NOAA temperature outlook here. Surely there is a silver lining here. I see the northern tier of the country. It's about to get colder. Can that save natural gas, or is there a bigger picture issue playing out right now?
Yeah, so the only thing I saw, I looked at some numbers, the feed gas flows, which is the gas going down to the Gulf Coast, so it can be churned into liquefied natural gas. That decreased a little bit recently, about 1 to 2 billion cubic feet per day. At the same time, the expectations for inventory withdrawals got just a little stronger. But, you know, these withdrawals week to week, they're a lot bigger than 1 to 2 billion cubic feet per day. So the fact that the market is weakening on a drop in LNG feed gas, I don't know if it makes much sense to me, because the inventory, you know, what we're using week to week is changing a lot bigger than those feed gas flows. But traders, for some reason, get really caught up on how much we're exporting, it seems, since that's increased a lot over the past couple of years. I don't know if that's, you know, actually what is moving the needle here. But, you know, listen, the farther we go through winter, you know, the less time there is for significant cold weather, right? So the less time there is for inventories to really be drawn down. So, you know, we really need some significant cold soon, because once we're through January, you really only have February and March to put some substantial pain on inventories. So if you're bullish, you know, the longer we go with mild winter, the tougher and tougher it gets for a substantial rebound. You know, we'll see. I think it's mostly weather dependent for quite a while. It needs to get colder for us to come back out of this. I don't know. Yeah, this is a big drop. 8.9% right now. You know, we're trading around 3. That 3 number, psychologically, that might be a good place to get long. I was going to say, if I wasn't long already and I'm taking some pain, luckily my portfolio seems to be rather balanced against this, the way prices are moving. But I would try to take a stab here at 3 with some defined risk plays. But, you know, when you're trading natural gas, stay small. That's the way to do it, because this market, like you said, could rip you apart.
Yeah, I can't help but notice when I look around today at like the ExxonMobils of the world, the Chevrons of the world, right? XLE or DBC for some of these commodity tracking indexes. DBC is a little bit more energy heavy, and it's just starting to break out here this week through multi-year highs, breaking a multi-year downtrend in the process. You go to DJP, which is a little bit more metals heavy, but even so, this is sitting up at its highest level going back to mid-2022. All of this is against a backdrop with liquid natural gas, LNG, right, just suffering. So there are ways to trade this if you don't want to use the futures. Natural gas itself has seemingly been disconnected from the rest of the market and various themes. Either way, Thomas, let's keep this moving. that was oil following, guiding volatility. Volatility is, and the news are what's helping push up everything in this market. As you mentioned, the war trade, and I really like that we call it that because it has a very specific shakeout in financial instruments. The dollar here today, I'm saying it's surviving the turn because we did break through our 50-day, our 1 month moving average in recent sessions. And since then, we've been basically treating those 2 moving averages as an envelope of support. Today, we get a bounce off of the 1 week. And as we go into the second half of the session, we have a nice long lower tail. So the dollar, despite all of the misgivings around Fed Chair Powell and Greenland and pick a news headline out of a hat that AI couldn't write, you'll see that the dollar here is maintaining a little bit of a bullish posture. So I know volatility is very low. Thomas, if I wanted to be bearish anywhere, rather bullish the dollar and bearish one of these currencies, the euro's got to be the place. It's the cheapest place to put on a trade idea. It's a 0.9 IVR right now. The yen is absolutely not the place I'd be looking. I know the volatility readings are negative, but at dollar yen 160, this thing is, I think, in prime intervention territory. So I'm not touching any long dollar exposure vis-a-vis the yen. I much prefer to do it the way that I am doing it, which is through the euro and through the pound, short call spread in the pound, long put spread in the euro.
Yeah, I am. I'm only short the euro. That's the only currency I'm in right now via long put spread, 116 and a half, and got 51 days on that. So I'm going to stay short for a little bit here on the euro. I don't like the yen right now. That's all I really think there is to it for my portfolio. I'm not getting too heavy in the currencies right now.
Yeah, it's really picky. Really depends where you're looking. You know, the Aussie, the Canadian dollar, given the rise that we've seen in commodity prices, you would think they would be doing a little bit better. So what if commodities break back? We haven't touched on it yet. We talked about it briefly here. I do want to take a look at Bitcoin futures real quick as we go to a different currency section. Thomas, that's an important turn. We tried to crack through the 50-day moving average near 95K on January 5th. We couldn't. We pull back into the 1 month. It catches us this time. The yellow line here, guiding us on the way down as resistance, holding us up as support all of a sudden. We then cycle through into a new high. It's the highest level we've seen since mid-November. This looks like a bottom. This looks like a bottom. So it's not our, typical fiat currency, but in the crypto world, it's worth noting that even Bitcoin is moving up. Is this capital leaving Iran, as I've seen a lot of people speculate online? Maybe. I'm doubtful it's just that, but the technicals speak for themselves, Thomas. So stronger US dollar, stronger Bitcoin in USD terms. Bitcoin then in the euro and the pound, if you're trading in those currencies, hey, something more to work with. What else is on the calendar here? Tomorrow, UK GDP. Outside of that, lots and lots and lots of Fed speakers. I wonder what they're going to be talking about, Thomas. We'll be back later on today. I'm actually not here for last call today. Nick and I flipped. Liz and Jenny are handling last call today. I'll be back with Ilya for overtime, so see everyone at 4 Eastern, 3 Central. Until then, good luck trading. You're watching Tasty Live.
It's option jive. Nicky, we are back, son, and you know what that means? Time for a little bit of an option jive. You all good? Even the S&P is down 30.
Let's do it.
End of the day. We're down 30 right now. I know you've been a little bit pessimistic lately. Are we here?
Lower.
Lower?
Lower.
Okie-dokie. Something we have not seen.
About 20.
About 20. Oh, this is like a hold me moment.
No. I'll say the VIX.
Beginning of a hold me moment.
I'll give you VIX. I'll say VIX at 1825. VIX another point.
VIX.
VIX.
You're talking about. Higher. Okay, not the VIX futures. VIX futures, you said.
VIX another point higher. 69.25. Get 50 points.
Oof, talking your book. All right. Well, we shall see.
We'll see.
Option jive. Do markets correlate the same way? As Kai would say.
Do they?
Do markets correlate the same?
Do you think correlations hold? So, like, if you look at a month correlation on a 10-minute time frame, do you think they hold? Like, are they similar?
Yeah, I would say so. Sure. On a 10-minute, very
yeah, like
tight.
a really short term.
I mean, anything can happen short term. I mean, so a 10-minute one day. Yeah, like a 10-minute one day. A 10-minute one day is not going to be accurate. A 10-minute 1 month is going to be accurate.
Yeah,
a 10-minute.
If you do it every 10-minute batches.
Yeah.
So here's the question: correlation of Apple and SPY basically won.
Yeah.
But most times, not recently.
Right.
We'll say most of the time, whatever stock you want.
Sure.
The biggest stock is market, Nvidia, whatever.
Yeah. Mm-hmm.
You get a blip in time where Apple goes down, spikes down $1 and the market's up, 50 basis points, up, 30, 40 handles. Do you buy that dip for a scalp? Do you think there's an opportunity? Like, do you say?
I do. I do think there's a small little opportunity. Yeah.
That's kind of what we're looking at today.
Okay.
Which I think is a really cool look. Because I agree with you.
Okay.
Like, I see that move, on a
something, or I might sell the rip in the market itself and say there's no way this market's to sustain this rally with Apple or the Mag 7.
Yeah,
all
maybe
week,
say vol is not moving and Apple's down $5 on a some news.
I'm looking to do something. That's the binary event that I'm looking to do as opposed to the tariff news.
Yes, I agree with you. I think it's an interesting look. So let's look at the data.
That's part of market awareness, I think, when you talk about tape reading or anything else like that. That would be part of that.
For sure. So do markets correlate the same way? First slide, please. So we get this question a lot regarding like timeframes for our research, and we've kind of buttoned up the timeframes a little bit to make them a little bit more interesting and look at like kind of shorter timeframes, more recent market timeframes as opposed to these big broad-based research pieces, which we still do as well. But why do we research and draw conclusions from longer duration trades? So looking at like 45-day expirations as opposed to shorter duration trading. We're going to kind of try to compare those two aspects using correlation here. So the next slide here, we're going to look at a basket of popularly traded broad-based ETFs and compare their correlations on a daily basis to the correlations of the 5-minute time frame to determine if the relationship that we find if it holds in intraday periods. I know we just had a discussion on like Apple versus the S&P 500. That's kind of where we're going here with kind of broader based sectors to each other, to SPY, and seeing if there's like if you can kind of play that correlation on a very, very short time frame. So the study that we are looking at is we're obviously going to look at SPY. We're going to look at the Qs. We're going to look at IWM. We're going to look at TLT gold, which is our metals, USO, for energy, FXE for our currencies, and ITA, which is the defense sector / aerospace. If you remember, we talked about that with TP last week.
Yeah, we sure did.
Boeing, he was talking about LMT. It's definitely been kind of a hot topic here. So the things that we're looking at here, so we're looking at the previous 2 months of daily percentage changes, and then we're going to look at the 2-month data in 5-minute sets. So we're looking at just normal correlation, a 2-month correlation, and then we're going to look at really short time frames, 5 minutes, percentage changes, and see if they go in the same direction.
Okay.
So correlations isn't necessarily magnitude. It's more about direction. And then we're going to compute the correlation of all these assets to SPY for both time periods. So basically what we're looking at is, are they moving in the same sort of direction as a correlation on longer time frames as they do on very short time frames? And this kind of leads into the question of like, okay, if you see a stock, an Apple spike down $5 while the market's up, do you buy that dip?
or do you sell the market? You play for that kind of correlation, that pair to go back to its normal correlation. So let's take a look here at the data. So
it's going to be interesting. So go through this slowly. Go ahead.
Yes. So based on the last 2 months of data, we can confirm that the difference between daily correlations and intraday correlations is very, very small. So regardless of how we look at the relationships between different underlyings, short or long term, they remain consistent. What this is saying is that if something has a high correlation on a 2-month time frame, when you're looking at very short time frames, like a 5-minute time frame, that correlation typically holds. It kind of goes to the idea that we were talking about of if you're talking about market awareness, or you're talking about, you can kind of correlate this to if the E-minis are down 1% and the Russell is flat, there's probably a trade there for that relationship to get more in line, meaning, buying E-minis and selling Russell, or just selling Russell, or just buying E-minis. It tells you that the correlations tend to align even on shorter time frames. And so, when you're looking for opportunities and you're looking for things, and the reason we look at some of the biggest movers every single day is because you can kind of trade that, right? And you could trade that on a very short time frame, and that's kind of what you're looking at here. So you can see the correlations do change. They're not the exact same, but they're relatively in line with the longer term correlations here. So it kind of validates the idea that we were, offhand talking about of if a big name stock is down, on a random, event, or just on a 1-minute time frame, it has a sell-off, but the rest of the stocks are up. There's probably a trade there. You can either sell the stuff that's not moving in that direction, or buy the one that is moving in that direction. And there's usually a spread. There's usually a catch up is
That's
really
correct.
what the trade is.
That's right.
And so that, it's kind of
what we look at for, like I was saying, market awareness. This is how you're basing. And then you put a strategy that has a 65 to 85% probability of success. And at least you're putting yourself, in our opinion, on the better side of the trade, the side that might have a little bit of free version. Yeah. I like it. Good study so far.
So based on the results, we can loosely conclude that the proportion in which two assets close in the same direction daily is roughly the same as the proportion in which two assets close in the same direction every 5 minutes. I think, it's important to kind of take this with a grain of salt, of course, but, when you're looking at the E-minis and the NASDAQ, I think this is probably a good thing to look at. When NASDAQ is down 1% and E-minis are flat, there's certainly an opportunity there. If this plays out in the way that it does, which is about an 80% correlation, that's a tradable opportunity.
Most definitely.
Couple takeaways. Regardless on the time period you use to measure the relationship between major asset classes, it's fair to say that their price relationship over one time period may be similar to their price relationship over another. No, they're not going to be the exact same, and it's not going to happen on one data set. You also have to keep in mind that the 5-minute correlation is a big data set. It's not just one data set. So, you can't, it's not always going to play out. It's still going to be a correlation, and correlations, break down at points as well. The increased liquidity and volume in nearly all markets means that we can expect price relationship to hold the same way it does 45 days as it does over a 5-minute period, and most likely any time period in between. So, as long as the other key here is something that's liquid. So all these things are pretty liquid. I guess the aerospace defense sector probably is the least liquid of the bunch. But the point being, when you're looking at an Apple and the E-mini pair or E-mini and NASDAQ pair, you got enough liquidity there to kind of make correlations a potential trade opportunity for
Very nice. Good job out of the team. Good job out of you explaining it, too. Even the S&Ps haven't moved. We're going to be back in 90 seconds. What do we got coming up next, son? We got the opening bell. We'll be back in 90 seconds. It's Tasty Live. Even the S&P's down 30. Nicky, we are back, son. And you know what that means? Time for a little bit more Tasty Live. Let's see on this short little break. And I am sorry about that little internet problem I had earlier. Even the S&P's down $40, son. NASDAQ down $250, about 40, 50 handles off its lows. Russell only down 3. I mean, that's a skosh compared to the almost 1% move on the NASDAQ, 0.5% move on the even the S&Ps, which is down 40.
I'm going to get heavier there.
You're going to get...
I just sold some Russell. Again.
Yes, so you're selling the leader in the clubhouse here.
Yeah.
So going a little bit back now to that kind of reversion to the mean in the overall market. So here's your thinking, right? You're thinking
the market goes down. There's no way the small craps are staying up.
So you would think that they would go down even quicker from this height that they're at now. And if the market rallies, you might think that the Russell's not going to go up as much as maybe some of these other ones that are down, 0.5 percentage point or something like that. Yeah. It's a 0.5%.
Bonds rallying though.
What's that?
Bonds rallying. Rates coming.
Bonds are rallying. Didn't make new highs, 116.02, but we are down. Well, we're down 1% on the NASDAQ. That's a decent sized move. We're down 0.5% on everything else.
Yeah.
Yes. Interesting market. All right, are you ready, son? You know what we got now? We got what's your assumption? Let's do it. Even the S&P is down 44. What's your assumption? First slide, please. Volatility up 68 cents, right at its highs, up almost 3.5%, 4%. Go ahead.
All right, so we're looking at wheat, lean, hogs. This is Roberto, neutral. We're going into March, playing the pyramid inversion. I don't know if I know this one. Do you know the pyramid inversion?
Yes, I think he's talking about the new food pyramid.
Oh,
inversion. That's my guess.
That's on that was the new South Park episode, I think.
Yes.
Okay, so short wheat, long live cattle, 4 bales to 3 cows. You guys are amazing. I really
you are amazing.
I mean, wheat's at lows.
Wheat's at its lows, 510 and change. Looks to be unchanged. And then LE, which I haven't traded in quite some time, down 55 cents.
I don't know if I could do.
I don't make this trade. I think it's an interesting trade, but I would just either get long wheat.
That's what I think I'm going to do. I think I'm going to just sell put spread in wheat.
Yeah, I think that's the way to get smaller in there. And
all right. So we're going to sell put spread in wheat.
Beautiful.
What's
I'll come through the follow page in just a second to get that for you. So we're going to take the one side of your pairs trade here.
I mean, you want to sell the call spread in lean hogs, or what is LE, live cattle?
It's live cattle.
I'm going to say live cattle a little goofy.
Yeah.
I like that you pointed out that wheat is at lows here, and I'm going to get a little bit of long delta there. So I'm going to call this a win. Give us a check.
Oh, yeah.
We traded
Yes.
For sure.
Yes. Good job out of you. Next one, please. TSM for earnings. All right. You want to do an early earnings TSM trade?
So
TSM down $2.25.
Slightly bearish.
Russell's actually up, just ticked up $1.
I know that's because I got shorted. I mean, the NASDAQ E-minis, that was a no-brainer, easy one. The Russell, who's not buying the Russell right now? Come on.
Yeah, it's not as healthy when the Russell and the Dow are your strongest in the groups, in my opinion, for the bulls.
No, not. It's not staying that way today. TSM. Okay. Shorting feels wrong here. Maybe just go neutral. So I am with you, Brett. I have a strangle and I'm short the 300, 320 strangle here in February. So I got a little extra duration on this trade. So
February 37 days, that would be the months that we normally would be trading right now. Yeah.
So I'm with you here. I'm with you. I don't think I'm going to add to this one.
You're with them, but you're not going to do this.
Yes.
All right. Sounds good. Sounds good. I tend to agree.
I'm not going to add to it. I am in it.
Yeah, and markets are not good in TSM. I'm surprised you haven't pointed that out. I mean, and borderline horrible. I mean,
yeah, you're like 50, 60, 70 cents on some of them.
Yeah, I mean, you go to an out of the money option like the 380, 265, 370, $2, 265. I mean, there are better things to trade in this market than that.
Agreed.
Next one, please. Riot. RIOT.
Craig probably gave us our call spread that we took off the other day.
In Minneapolis, yes. Thinking 1420 Feb strangle, 45 days to go. Riot does not have earnings during the February expiration, February 20th expiration. Earnings are February 30th. IV rank of 34 is pretty good, expanding ever so slightly. Been on quite a rally from around 12 or 13 to 17 without a downtick. Does have call skew, dollar-wide strikes. Call ratio spread maybe. One triangle. Markets are
not great.
Meh. Is that what your kids say? Meh. Or are you too young, too old for that?
I mean, dude,
are you too old for
I have
meh?
freaking gray hair. Okay?
MEH, you do have gray hair.
I am too.
You may have more gray hair than me these days. You're trying.
I mean, there's
You're trying. You're definitely trying. Even the S&P's down 44.
These markets stink.
Russell just went red again.
I put an order in for the 1520 strangle to do it at $1.80. I've walked it down from $1.90. I'm not moving from $1.80 if we don't get filled them out.
Got it. Right, up 50 cents. That's why you had to move those.
I like to go, so I want to collect somewhere around $1 on each side, and so that's why I moved it in a little bit. Both those options, the 1520 trade at like 90-ish cents. So we're kind of below that, but that's why I moved it. The 14 at 60 cents, it just, that's what I'm managing at.
Yeah.
Managing it at 60 cents.
Yep. Totally agree.
Thank you, Craig.
Next one, please. Even the S&P's down 45, 47, with about 4 minutes to go if they come up with this announcement on the tariffs or not.
Roblox, neutral, Evan. So great IVR here, selling the one standard deviation strangle. I'm with you on Roblox. I actually sold calls into yesterday's move. I'm basically flat delta here. I like it. I think it's an interesting one if you don't have a position, relatively low buying power, and
Roblox up $1 too.
Yeah.
Also
20% wide markets here, so not the greatest, but
no, these kind of fringy players here. You go these out of the money options, and they're 40 cents wide on $2 options. You got to be kind of directional here, I think, if you're gonna do anything, do some sort of defined risk trade as opposed to a strangle or something like that. That's just my opinion.
Yes.
Next one, please. Baidu bearish, I believe. Baidu was up. It is up $4 and change, a little bit of a bucker here, making new highs with even the S&P's down 45 and the NASDAQ down almost 300, trading near its lows. Russell just turned green again, basically unchanged.
All right.
Not bullish on China stock, especially Baidu. Price isn't cheap, and neither is IVR. 56 IVR, a good one to point out there. Earnings of February 17th, just a couple of days before February 20th. Reverse Jade Lizard, maybe?
Ooh.
Better ideas? Give me S&P's down 45 on the watch. What do you think about a reverse Jade Lizard? I don't hate it.
I don't hate it. What do you want to do? Like the February 170? And then like the 140, 130? I want to do...
So you wouldn't be collecting over $10, right?
No. You collect $7 and change.
Yeah.
It defines the risk to the downside.
Sure.
And that spread.
What call you want to sell? You want to sell the 170s?
Yeah, like a 30 delta.
Okay, so
the $5 wide spread. The $5 wide spread at $1 or $1.50. I'd rather just sell the calls.
Right. So can I give you food for thought? You sell the 170s. Let's say you sell them for $5. Your break even's 175. I don't hate it. It sounds good. Can I give you food for thought? Are you ready? Selling a closer put spread, the 50-40 put spread, and the 160 call gets you $11.57. Your break even is 171 instead of 171.5 instead of 175. What do you think about that?
I like
My delta's 28. Your delta's 31. It's about the same, but it's more of a classic Jade Lizard. Let's get filled on something.
1179, but I put your orders in if you're doing this one well above.
Mid price is 11
20 cents above the mid price, and I got price improved by another 20 cents.
You did.
You're pumping some juice in there. E-mini's down 50, 69.51. 69.50 was where we bounced yesterday on the downside.
Yeah, that's what I said when we were. Yeah, right. Go ahead.
If you're looking for a spot to get long, this is probably a decent one. But I'm
the last I'll put it back up there. Last week or so, we've been getting down. We got one day we were as low as 35. That's back on the 8th. But yeah, we've been getting down to here and we've been bouncing. We've been hanging out between 7,000 and 69.50.
But Vol hasn't been expanding into that.
Vol has definitely expanded up 73 cents right now. That's a 4%, just about a 4% move.
Yeah.
So good job out of volatility.
We got more.
Okay. Let's do it.
Cool. So we're in. And that riot trade, I'm going to cancel that because I can't get filled.
Okay. You mean S&P's down 55. 55.
Next one, please. Morgan Stanley, earnings after the close today, right?
Morgan Stanley earnings after the close today.
Ooh, bullish banks overall. What's Citigroup doing?
Morgan Stanley been on a tear. It is off its highs of 185 to 179, back to where it was in the beginning of the year. So it's taken away all of its gains since the beginning of the year today, and it does have earnings January 15th. That's tomorrow before the market opens. I said after the market closed, but it's really before the market opens.
Citigroup. I just did an at the money call spread yesterday. I'm sorry, at the money long put spread.
Okay.
And the stock is now down like $3 and change. I just figured we saw the move with JP Morgan. E-mini's down 60 now.
E-mini S&P's down 60.
Morgan Stanley, I do not concur. I think we've watched all the banks go down, so I'm not on the side of the bullish overall, Gary, but I'm going to do.
We still like you, Gary.
Yeah, of course.
Richmond, Virginia.
We're friends here.
I've been to Richmond.
Ooh, these markets stink. Look at the weekly. So the weekly, which is actually a monthly expiration, the January 16th, like the 175 puts are $1.25 at 265. The next is 38, the 72 and a halves are 38 at $1.50. You can't trade this. Even the monthlies, you go out to February, the 190s are $1.30 at $3. This is a no-no, Gary.
Yeah, hard pressed.
Rule number one is liquidity, and this is a no-no on the liquidity meter.
Totally agree with you.
I think you got to pass on this one.
Okie dokie, pass we may.
All right.
Next one, please. QS, wow, one we haven't talked about in some time. QS down 22 cents, trading around $10 and change. Been going sideways, the low end of its range. I know back in last September it was around $7.50, on its way to 18. Now sitting at 10.5, $10.40 to be exact, down 20 cents. If there's been any decision, please let me know on the.
What do you think about like a covered call here?
See anything at the moment? Sorry, go ahead.
What do you think about like a covered call?
A covered call.
Sell the 11 call.
Sure, I don't have a problem with that. Yeah.
Or you sell the 11 strike put. I mean, the same thing.
Yeah. I'm good with that.
All right.
I think I'm good with that. I mean, I'm good with it right now. Right?
Yeah. All right, 948 cover call. I'm in.
948
same sort of thing. Sell the put or
it's the same.
It's same exact thing.
It's the same thing. Yeah.
We don't do a lot of cover calls.
Right. You usually are going to look for a lower price stock that's gotten beat up with relatively high implied volatility. You got almost all of those factors in QS.
Yeah. I sold the 11 strike call.
Beautiful.
Cool.
Next one, please. We're looking at you. You, son, we're looking at you.
February,
Unity Software.
Oh, laddered puts. I like it.
Yeah, IB rank of 34, has earnings coming February 19th.
Okay, you want to do February, March?
I think that's where you would go. Markets are in here too. Meh.
41, 43.
I mean,
So you're
March
kind of aggressive here.
March options are 40, 50 cents wide. I don't even know if I would do laddered puts in Unity. I might just stay in February, maybe just sell one put in February. You know, you look at the 20 to 30-ish delta option, it's $1.40 to $2.
Mm-hmm.
I mean, you talk about liquidity, it's probably not the liquidity that you want.
Yeah.
Yeah. Yeah.
50-cent wide markets. Yeah, I got to pass on this one. It's just a little too wide.
Agreed. Your Russell is down $6. Your E-mini S&P...
Wake me when it's 60.
Which is a quarter of a percentage point. E-mini S&P is down 56, 57, which is about 7/8 of a point.
Yeah.
Percentage point. NASDAQ down 1 1/3. That's your big leader to the downside, down 340 and change. Volatility up 74 cents, hanging steady at 1913. That's a 4% move. That's one of the bigger moves we've seen in volatility to date. Hasn't moved off of its highs, which is 1920.
We're going to pass on this one, but thank you, Tahar, Tahir from Dubai.
Yeah.
We appreciate you.
Thank you. We appreciate you, Mr. Akabato.
Next one, please.
Next one, please.
Ooh, Mike looking at Oklo. All right.
Oklo.
30 to 60 days out. Today's dip is our chance to get long. Wide bullish put spread. See, the one thing about these high-flying stocks, you typically have the call skew, but also into the down moves, vol contracts, so you don't get like murdered on these puts, even when the stock goes down.
That's correct. That's why puts are schmutz.
Puts are schmutz.
Down $4.64 is a decent-sized move.
Here's what I'm going to do. Here's what I want to do. I want to sell the 75 strike put. I want to do the 100, 115 call ratio spread. You basically do the call ratio for like 30, 40, 50 cents, depending on where you get filled here. These markets stink. We've talked about liquidity the whole time. I'm going to break all of the rules.
We've been harping on liquidity, and you are
passed on
going to
my
break
friends
all those
in
rules
Dubai.
right now.
Yeah, we've done good up until this point, but I'm sick of passing on trades, and so I'm slinging it.
Good for you.
I'm going to do the 75 put, which is around a 20-ish delta. No clue where I'm going to get filled. It's probably going to be a horrible price. 440.
Do you like your fill?
I love it. I'm in.
Beautiful.
69.50. We're back.
69.50 on the E-mini S&Ps. We are back. You are right. They got as low
coming
as
in a little bit.
69.38. Volatility is coming back a little bit. 1902.
Is it a fake out?
Is it a fake out? Is an excellent question. I don't think we've had any decision yet.
No.
On the tariffs that I can read. Well, volatility will tell you. Maybe if it ticks under 19 here, then you'll say it's a fake out. Right now, I think it's just absorbing any kind of movement that we've had in the market.
Andrew's saying that the show's gotten weak. We haven't heard an Omaha in a while. I don't know, Andrew. I think we've had a couple Omahas recently.
John's drinking his coffee right now. You gotta leave him alone. I mean,
we've had a couple.
Beth is more Omaha.
We're on good terms. Yeah, we're on good.
We're definitely on.
We're
good
trying.
terms.
We're trying to be good boys.
Yep. Even the SP down 55.
DraftKings, DKNG, neutral, Dale, Seattle, February 30-40 strangle. This thing's going nowhere. I kind of agree with you. I'm long stock, short 2 calls at the 37.5. So I basically have an at the money straddle in February. You're looking at the 30-40. It's a cheapy strangle. I don't hate it. 20.
It's definitely a cheapy one.
Yeah, I think I could do this.
Mm-hmm.
Let's see. 146.
DraftKings, you're in. You did the
30-40 exactly as he gave us. But I have the long stock and then I'm short 2 of the 37.5.
Got it. So
I'm a straddle. I'm here.
Good job at you. 146 credit on that. Beautiful.
Cool.
SP down 55.
Oh, that's the last one.
That was the last one. Yeah.
You did good.
Yeah, I would say you did real good.
Yeah.
I think you were mechanical with a lot of your...
Until the Oklo.
And yes, but you have...
got me. But I have an addiction to those stocks.
I was going to say that, yes.
I have a little bit of like
you do. Like like a fly or moth to the flame. You can't avoid those. Let's take a look at what's going on in the market because it's the first kind of movement day, especially to the downside that we've seen. Even the S&P is down 54. Volatility hanging out at 1906, up around 3.5%. NASDAQ down 324. Russell's definitely the strongest of the group, down $5. Dow down 183. I don't like your Russell short. If I was you, I'd probably be looking to close that.
Why don't you like it? Because bonds are rallying?
Yeah, and I think if you got a rally in the market, maybe you could sell that instead as opposed to the Russell. It doesn't look like the Russell's going to be...
I'm on the other side of that. I think if you get a 50-point down move from here, if you get to 6,900 and vol starts to expand, there's no way anybody's holding long Russell into a real down move. That's what I'm thinking.
And if we get an up move, Russell's going to be up a full point.
Yeah.
Percentage.
Yes.
That's why I say you close your Russell, you take your scratch, your small profit, and if you get a rally in the market, you do something.
All right, that's fine.
Let's take
I'll do it here. How does Daddy do it?
Quick 90-second
amazing.
Break and come back.
I am the luckiest man ever. This is my dad. This is the dad I get. You know, you can't.
Even the S&P is going to be down 100. Russell's going to be down 3 percenent points.
And I get this guy. I get this. He's a.
We're going to take a quick 90-second
family.
break.
You get put with your family, and I got a good one.
We're going to take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next, son?
Market measures.
That's right, with my man TP coming in the
market
house.
measures, cherry picks with TP.
Tasty extra, everything else. We'll be back in 90 seconds. What we want to know is TP is in the house. That's what we want to know. We'll be back in 90 seconds, Tasty Live.
You got the man, the myth, the legend.
What's that? Look at this cute kid. I mean, is he adorable or what?
When I was a kid, I would say I was pretty outgoing. I liked to play sports. I had a lot of friends. I liked to be active, but I was also a bit of a troublemaker. A lot of my friends, their parents were lawyers or doctors or something else that you are familiar with in everyday life. A trader is kind of an abstract thing. It was kind of a mysterious job. I just didn't know anything about it. I didn't understand it. After work, my dad was always home and he would coach all my sports teams, so he was always there. He was always pushing me to play sports and be good at whatever it was I was doing. And I was always building with Legos. Legos were like my thing. They were the toy that I loved. We would get a new Lego set and I would just build it from just looking at the pictures on the box and just kind of freehand it. I always thought that I would be building or designing something. That was really what I wanted to do when I was younger. I got into a 5-year master's program in architecture at the University of Kansas. And when I got there, my school work ethic kind of caught up to me. I couldn't just ace the tests. I realized that I needed something that was more flexible, and that's when I transitioned over to economics and business. I kind of wanted to make my own path. I started working for a debt buyer. They would buy distressed debt from a number of banks. And it was a really good job, a great work experience. But it got to a point where I had gone as far as I could in the company, and there didn't seem to be any more upside that I could achieve in there. And that was when my dad said to me, "You got to come work here, and I'll teach you how to trade, and I'll get you started." And that was when I took the jump. The most meaningful thing that people say to me is that, they've been trading for a little while and they're starting to connect with their kids and try and get their kids to start trading, and watching this show with me and my dad, that kind of gives them the inspiration and the push to kind of get their kids involved with it. I think that's really awesome. I think that's really powerful.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I found very early on that I was comfortable with having risk, and I liked the benefit of it. I mean, I found trading in a unique way. I loved seeing Wall Street in New York. When I was a young kid, I would drive down to the financial district and see all those guys in suits, very powerful looking. So to me, that was a way of having some sort of social status where I bettered myself. Trading was just a way out of Brooklyn. I go anywhere there's action. Really anything that has high implied volatility. And the IVX 5-day change, that's the volatility of the product's 5-day change, is green. And I show that on my Option Trades Today podcast. You can definitely get the thoughts on why I'm making this trade. Am I leaning a little bit longer? Am I leaning a little bit shorter? All the things that we talk about on the show day in and day out. It's not magic, it's just math. By the nature of the strategies I pick, I'm going to have a high probability of success. And I think my expertise comes from managing those trades, when to take them off, how to maximize the profit on them. I think that's what sets me apart from the novice trader.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
I love to take risks. I love the instant pain, the instant gain of trading. I would describe my trading style as a calculated risk taker. I like to play towards volatility, which is something that you can quantify high and low points of. Well, my favorite strategy currently is the diagonal spread. I like the idea of having defined risk, but while also having a little bit of positive decay that works in your favor if you're not directionally correct. But the best part about it is the positive gamma that you get from it. I really like that the position can grow and get bigger as you're more correct on that position. So I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh, my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11?
Oh.
First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
All right, so you've got a couple spread trades under your belt, and you're ready to start scaling up your trading. The common thought is to just increase the contracts, but this is only multiplying the risk and the reward of the position, essentially pushing the chips in and doubling up. Instead of adding contracts to the position, consider widening out those spreads. One of the things that I do differently than a lot of people is that for the purpose of the show, I have multiple accounts, right? So I'm trading in a lot of different sized accounts. So I've got to balance finding ideas and finding opportunities for smaller sized accounts as well as finding opportunities for those larger sized accounts. I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to. It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
I'm still coming down from the
Hey everybody, well, it occurred to me, a little thought experiment. Just pretend for a moment that the Dow is up 4,000 points right now. Now, perma-bear that I am, I shouldn't even let those words slip past my lips, but just imagine, so the Dow is up 4,000 points. Seems insane, right? Absolutely ridiculous. And I can't imagine what would compel the Dow to be up 4,000 points. That's exactly what silver's doing right this second. No imagination needed, no science fiction plot required. It is up again 8.08% at this very moment. And this sucker was, it was like aluminum foil a couple of decades ago. It was garbage, $5-6 an ounce. And, I read a lot, and I read a lot of trading stuff. And a few weeks back when people were talking about $100 an ounce, I love precious metals. I want them to do well. But even I was like, no, it's not. You're just spouting big round numbers because it sounds cool. Well, maybe not. It feels almost inevitable that we'll be there, before the week is out. It'll certainly make for good headlines. So yeah, another dynamite day for precious metals. Gold's up $43. Silver's up almost $7, which of course in percentage terms is a much bigger deal. In percentage terms, silver's up like 9 times as much as gold is. And palladium's just kind of sitting there. So it's all about silver at this point. It's absolutely berserk. That's enough of that. Let's just look at some charts together. We'll get to silver again, but let's just check some stuff out. We're only about 9 trading days into the year. This is the first day of 2026 that has felt good to me, in terms of it's fun, it's cool, there's a lot of cool setups, it's just a good feeling. So the prior 8 days, not so much. And some important things have happened. First of all, we have broken the uptrend. Now, it's not a huge deal, but it's a medium-sized deal. And I talked about this yesterday. What I'm talking about specifically is, and let's use the spider as an example, this line here defined resistance. And we broke out and followed through and still closed above it yesterday. But today, for no really specific reason, it just slumped completely below the breakout. So we have a failed bullish breakout, and even better than that, we have finally broken this uptrend for the first time since it was established back on November 21st. So that's pretty spiffy. The NQ itself is what I've been following most closely, and it's not reflected here because this is a daily bar, but on the 1 minute and the 5 minute bars for the past week, for 5 different times, it got above resistance, hung out there for a while, and then went flaccid and fell below it again. 1, 2, 3, 4, 5. 5 failures. And today it was just forget it. I'm not even going to try. And it just started sliding. So the NQ is down a few hundred points, which is nice. In sharp contrast to the small caps, the RTY is up about 0.5%. Whereas the NQ is down about 1.5%. So 200 basis points spread between those. Real big divergence going on. But the NQ has broken the support again for the first time since November. So that's almost a couple months before. And with the cubes, and this is kind of interesting as well. Remember our gap? Well, there's the gap right there. We got very close to it here. And then we got very close to it again yesterday. Like so. Very little space between that line and yesterday's peak, but mercifully, it was not breached. And we can also say that we've got a new gap, right like so, which is yesterday's low. So that's worth keeping an eye on. And as with the others, we have broken below the ascending trend line. So all kinds of subtle things happening under the surface that 99.99% people have no clue because they don't even bother with these things. But you and I can look at these simple markups and say, there's something changing here. I've never shown this before, but it's a critter that was concocted. You may be familiar with the FANG stocks, FAANG, which I'm not going to know those by heart, but I think when it was concocted, it was Facebook, which is Meta now, and then, Apple, Amazon, Netflix, Google. And the FANG stocks, and that may not be an exhaustive list, but who cares? You get the idea. The FANG stocks constitute the majority, the vast majority, NVIDIA, of course, of tech strength and tech market cap. And so these ETFs, they've got They've got one for bullish and one for double bullish and one for triple bearish and all kinds of flavors. This is a very simple one. It's basically just a straight up 1x bullish ETF. But as you can see, things are sub peachy right now. We've got a nice distribution top, which peaked back here Halloween, weirdly, and this is broken below it. So that's interesting. And that's worth taking note of. The fangs are breaking down, and those are so important to the market as a whole. And SMH, the semiconductors, lifetime high yesterday on this on an intraday basis, and we are down today on this about 1.53%. And nothing's really changed. As I said, what would be required to really start making a difference would be a failure of this line here, and then a failure of this gap here. Then things would start really cooking. But for myself, I'm maintaining my, I've got 30 different short positions, and there's some overlap. I mean, like I might be short one here and then also long puts on it here. So the total number of positions, not that it matters to you, is probably like 34 or something, but I've got 30 symbols in which I have a bearish position on. And almost all of them are down today. Yeah, almost all of them are down. So it's a good day. And we'll look at a couple of those later. As far as gold, as I said, it's another good day, about 1% gain here. Lifetime high close, lifetime high intraday. It's a slower climber. I think that 100 will be the siren song for silver. 5,000 will be the equivalent for gold in terms of the public kind of rallying around the metal to get it up to that cool big number. A little surprising the Dow hasn't got to 50,000 yet. Hope it doesn't, but so gold's doing well. GLD, the ETF, the big ETF for gold, obviously also doing well. Lifetime high close looks almost certain there. Lifetime high intraday, up 1.09%, following this cute little kelp with handle pattern. Speaking of cute, you want to come over and say hi? No? All right. You're a loss. She's adorable. Anyway, silver up 8.19%. It's even higher than we began. So it's just phenomenal. I mean, the last even little bit of selling we had was like the first half of November. This little chunk right here. Well, that actually that's not entirely true. We do remember the very brief wipeout like on the 29th of December. I don't know if that was some weird year-end stuff or what, but on the 29th and on the 31st, there was a big red bars there. But people would love to buy it at those prices again now, silver at $70. But by and large, it's been a very steady, steadfast lift ever since Liberation Day. And so up we go. Speaking of Liberation Day, I was, as some of you were, I'm sure, waiting for the news about the Supreme Court. Once again, nothing. And we're all waiting. The time passes, and it's like, here's this case nobody cares about. And so, yeah, I don't know when it's going to happen. And you know what? You know how the world is. I bet it comes out and the market doesn't even move. You know, life is filled with irony, particularly trading life. So nothing doing there. As far as SLV itself, the ETF is up 7.53%, lifetime high, obviously, and just an extraordinary winner on this one. Just absolutely eye-popping stuff. It's the kind of market move that they'll be talking about 20 years from now. Assuming people are still around, hopefully, but it's a big deal. Like, I wrote a book called Panic, Prosperity, and Progress, and I had a whole chapter about the Hunt brothers' attempt to corner the silver market back in 1979 and into early 1980. This isn't that in terms of how it's happening, but with respect to the strength of the move, it's in the same vicinity. This is the biggest, most exciting move in silver in decades. And I think I saw the lowest gold-silver ratio in 14 years at least, something like that. So gold is cheap compared to silver, or silver is really expensive compared to gold, whichever way you want to look at it. As far as the miners go, GDX, they're up, not fantastic, 0.86%. They've enjoyed a lot of big gains already, but they're up, not even as much as gold is right now, but it's up nonetheless. And as much as I like to pick on it, Bitcoin has actually been very strong today and yesterday. It bottomed back on the 21st also, like a lot of assets, got down to around, 80,000. And we are in the vicinity of approaching about 98,000 now. But, all this time I've been saying that 98,000-ish is my own, and I don't trade this stuff, to be clear, but I believe that that magical six-figure level will be very difficult to attain again, in spite of the fact that we've had like a $10,000 gain just in the past couple of days. But I think this overhead supply is very substantial and powerful. And my long-held tenet that 98,000 or so would be the resistance. I'm sticking to that. So we'll see what happens next. In turn, the kinds of stuff that got wiped out during the plunge is recovering also nicely, obviously. This is one example, DFDV. It got down to $4.71. It's not quite, but almost double that from then. But look at the downtrend. So this is the trend line here. So you have lifetime high, lower high, lower high. In my view, is yet another lower high. So I would not be surprised to see crypto and the likes of DeFi exhaust themselves in reverse. Almost out of time, but real quick, just bang through some existing shorts right now that I wanted to highlight. And I won't even zoom back. I'll just kind of bang through the symbols real quick. Axon, AXON, down about 1.75%. Oklo, I actually covered this. I squeezed that limit enough, I think, but this is down a little more than 1%, but it's not a fantastic pattern, so I went ahead and took profits on that one. Palantir is off about 0.8%. Nothing too exciting, but hanging in there. Royal Caribbean, another good day. This is a drop of 4.16%, following yesterday's nice tumble. Newer position for me, SOFI, down about 2.75%. And I think I did a typo. No, I beg your pardon. I have no position in air markets. ARM that I was trying to say, ARM. And this one is one of my semiconductor shorts. This is down again, about 3 2/3%. Very steady slippage here. Look at this. Very nice and astonishing considering the industry it's in. Bruker BRKR down again, about 3%. Third nice red row there. And what else? NVIDIA, that's always worth mentioning. This is down about 2%, which is an important and helpful element of today's tech weakness. We're nowhere near to completing that pattern, but it's a step in the right direction. And a couple more. This one I just got into, never traded in my life until yesterday. Shorted SMTC, had a nice red bar yesterday. We're down again today, 3 1/3%. And DoorDash, DASH, down about 2% here as well. I did get stopped out of Rivian. I mentioned that as my only long. I got in at 18.90. I set a stop at 18.25. We opened this morning weak. I was stopped out at 18.20 the moment the bell rang, and a good thing too, because that was pretty much the best price of the day. It's been falling ever since. So this one, a dud, sadly. So my only long I'm out of, and we're penetrating back into this pattern there, so I ain't going near it for a while. So I'm pure bear once more. Okay, well, it looks like they're fighting back for the past 90 minutes or so. The market's been undoing some of the damage, so we'll see where it all winds up. But I'll see you here tomorrow. No big reports or anything to speak of, so just whatever the world brings us. So see you Thursday. Bye-bye.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
So I see you're taking an interest in open interest. Open interest, open trades. It's right there. Imagine all the trades are in XYZ at the same strike and expiration. Day 1, Brittany buys 4 options to open a trade. Dean also opens, but he only buys 2 options. And then, closing bell. Day 2, open interest is 6 because of yesterday's trades. Now, Jessica gets in on XYZ, and she buys 2 options. Day 3, since no one has closed any trades yet, open interest is at 8. Watch this. Brittany closes her trades, Dean closes his, and Jessica keeps her eyes open. On day 4, open interest is now down to 2. That's because Brittany and Dean closed their positions and there are only 2 still left open. That's how open interest is different from volume. And both of them are parts of liquidity, which is something we look for before we enter into any trade. Pretty simple.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Ring the alarm, boys! Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Hello, everybody, and welcome. If you did not get enough of us today, we are back. My name is Liz Deerking, that beautiful brunette. To the left of me is Jenny Andrews, and this is Last Call.
This is Last Call. Not too much going on. Spoo's had a little bit of a rally. I think we're only down about 30 or 40 right now.
39.25, ladies and gentlemen, 39.25. So yeah, that's a big rally. It gave back half of its loss.
Hey, anyone brave enough to do the SPX Iron 0-day Iron Condor this morning got paid. Anyone brave enough?
Yeah, they did. I'm not gonna lie to you. Hi, my name is Liz, and I was not brave enough. I did not do it. I was too busy trying to protect myself before the announcement.
Hey, my name is Jenny, and I'm a wimp. I was too afraid to do the 0-day today. I did not do anything in the 0-day today, which is unusual. Usually, I'm putting at least a couple of 0-day trades on. Not today.
Yeah, it was an odd day. But Jenny, your video aired about your Taiwan Semiconductor earnings trade. I want to give you a slow clap. I retweeted it.
Oh man! So okay, I want to talk about a couple things. Number one, the value of a live trading show with actual traders who can find trades and place trades on the spot in the heat of the moment.
In the moment at the time of the trade. Otherwise, I think it's kind of a moot point. And I'm not trying to say that, Jenny. I love your video and I'm going to watch it 100 times because I love it so much. But you know what? There's something to be said about trades in the moment.
To say like film a trade that's going to be placed, 24 hours from now is hard to do. And we used to have this discussion with our old producer, Tony V. Love him.
Oh yeah, I love
him. But you can't. So the trade that I found 24 hours ago isn't exactly the same as it is now, which this is the time we'd be putting it on. So let's go to Taiwan Semiconductor. We'll do this earnings trade to bed.
Let's do it. Okay. Now I want you to tell me. I know you put the trade on in your own account, but I want you to tell me exactly like you did in the room all by yourself.
Okay, go to the platform.
Okay,
so go to the platform. Here we go. We're in the platform. Go to Taiwan Semiconductor, and I'll tell you what I said in the video, and then I'll tell you how I tweaked it right now. I just placed the trade myself.
Okay, start with the OG. Like, what did you say?
Yeah. Okay, go to the weekly. So the one that's going to expire this Friday. Buy a 50 Delta call.
Buy. Let me change it to Delta real quick. Okay. Buy 150 Delta call. Done.
Sell 235 Delta calls.
Can I go 33?
I mean, I guess, here's the tricky part. You got 33, you might have to, let's see what you come up with. I'm going to give you my parameters. Let's see what you come up with.
Okay, so I got $1 credit there. There we go. Go ahead.
And buy 120 Delta call.
That's a symmetrical butterfly.
And in my video, it was a broken wing butterfly where you're putting on for even. So I said, you want to put this on for even. You don't want to pay for it. So you have to tweak it. So then
I just pulled it down. So I kept the 20 Delta and I went, because 38, 33. I mean, the Deltas, I went to the 38 Delta.
And so it got yesterday, extra day, whatever, blah, blah, blah. The way it worked out yesterday, you were risking 500 to make 750. Here, and I said put on for even, so you could actually like move that 342 to the 340. So yeah, this is what I ended up putting on. It's not the same. Here you're risking 229 to make 500. In my video, you were in my trade yesterday. You were risking 500 to make 750. Today, you would have to play with the strikes to put on for even, but it's risking 200 to make 500. This is a weekly trade. I threw this in Taiwan Semiconductor. The risk is 235 if it goes up too far. And putting it on yesterday, I would have gotten more room, definitely more room, but it would have been much higher because we're down 450 today.
Yeah, it would have been. So I just want to say I shifted it up one. Now, like I said, I think you did a great job, and I actually give you a lot of credit, and I've always given you a lot of credit for this by saying the deltas instead of the strikes. I mean, and you did that same thing when we were forced to film the zero extrinsic back ratio. I'll never forget that day. I'm like, well, I don't understand. Just wash extrinsic value. Just wash the extrinsic value. You're like, 70-50.
Well, because the way we're filming us, and they're like, give us the delta. And we had put on the trade a million times and said, wash extrinsic value, figure it out. It's, you could do the math.
Yeah.
And they were like, this is going to be an evergreen piece. Give us the delta. And I think I got it. It was almost like the time I flipped the cooler. I was
like, you were just like, it's 50-70. It was pretty funny. Okay, so you know what, Jenny? We're jumping in with you. I actually moved it up a little bit because you said put it on for even. I went from the 330 to 335 to the 342.5.
And I like you're getting your green bar, the break even beyond the expected move. I like that better. I actually like this better than the one I placed 10 minutes ago.
Well, we're in. I'm trying to work it for 4-cent credit. It does look like it is going in for 1. I do not mind that. I just don't want to pay for it. So I'm going to take it down to.
Yeah, I mean, if you pay a penny for it, there you go. We're in. We're risking 250 in Taiwan Semiconductor. If it goes down, no harm, no foul. If it goes up, we can stand to make money. But this trade will probably have to stay until Friday.
You know what? That's what I was going to say. I do kind of like the fact that it's at least going to be Wednesday. That it's at least going to be Thursday. That it is Wednesday, because when you do these broken wing butterflies or any type of ratio spread, they don't really pay out until the end. Like they don't open up until the end.
Unless tomorrow Taiwan Semiconductor is up like $1 or $2. Like if it's nowhere near going through it, then it's
nowhere near the short strike. Because then you'll make a little bit of money if it does go to your long. If it opens like 33, 332.50, right? In between these two.
Yeah. So I don't know. I was trying to come up with a low risk trade that had some profit potential, and I was trying to get out of the way of the expected move.
Well, you did a good job reading the teleprompter. So
I didn't read a teleprompter.
I'm just kidding.
I just made this up in my head. Vanetta's like, "Is there a script?" I'm like,
"Nope." Did she want it as a script? That's pretty funny. All right. So that being said, Jenny Andrews, today is last call, which we love last call. Thank you everybody for watching, however you watch, on live, on YouTube, on any of that stuff. We do have some other earnings today. Where is Bob? There we go. Here's Bob. We've got Taiwan Semiconductor. Check. Morgan Stanley, Goldman Sachs, BLK, and what did we say this was? Fairlife?
I have no idea.
So we might do a couple other earnings trades. And did you want to take a look at any of the other banks? Morgan Stanley and Goldman Sachs.
Let's take a look. Go to Morgan Stanley. So in JP Morgan, I don't know if you remember this. In JP Morgan, I did the upside ratio spread,
which is very similar to the upside broken wing butterfly.
It's similar, yeah. Upside ratio spread for even. Tried to upside ratio spread for E. Although with this kind of with that down move, that was with the credit card news.
Yeah.
I don't know. I don't know how far we could get. If you go to the trade page, how far could we get?
In JP Morgan, you want to go back into that, or do you want to go to, I want to go to Morgan Stanley.
Oh, no. Yeah, not JP Morgan, Morgan Stanley.
Yeah. So you'll see they both have that same move. So let's go here. I'm going to go back to the trade page. We're going to open up the 2-day. So what Jenny was doing in JP Morgan was probably something like this. Buy one, hold on, sell.
And since it's a naked option, I gave myself room. Like I'd move it up. And I'd move the whole thing up. Maybe, shift the whole thing up. Give yourself some room.
Still a credit.
Yeah, so you're taking in
Still a credit. Still a credit. But you want to make sure it goes to it, not through it, right? So you don't want to be too far in advance. So like even if I looked at something like this, it's still a credit, but that means that it's got to go all the way to 190 for you to make any money.
No, because if it goes up a little bit, you'll be able to take it. If it goes up a little bit, you'll make some. You can make a little money. If it goes up, if it doesn't have to go.
190 is where you're going to make 190 pin is where you're going to make 257
on Friday. Yeah.
So I like kind of splitting the difference. I'm going to take a 20-cent credit on. I'm going to go to the expected move for the 187.5. So if it goes down, I'll buy you a cup of coffee tomorrow because you'll get $20.
So in JP Morgan, it was up $1 or unchanged when I took mine off. Maybe it only made like $40 or something like that, $40, $50. And then JP Morgan ended up down $10 on the day. And if you pay for it, then it would have been a loser. If you're not paying for it, then great, you keep your 20 cents.
Yeah, then you keep your 20 cents. Now, we're going to have, you have to do more of a broken wing butterfly type situation here.
No, just move it far enough. Move it far enough where it's not going to blow through. Move it all the way up. Move it up to the 187, 190, where if it goes up a little, great. Then our break even is 192.
Yeah. I mean, here's my question. And I have no problem with this because like you've been doing it. We've been talking to people and you know who you are. Hopefully you're watching our show today because we had a full Zoom conversation with somebody who's a very good trader.
And they've been doing this trade on earnings. I thought I'm going to try it on earnings. But I want my break even. If I'm having a naked option, I want my break even far enough.
Yes. So your break even right here is 192.5. And you can make a little bit of money if it goes out. But you're not going to
on the chart. Let's see 192.5 on the chart.
You're never going to see you're not going to make any money if it goes down. I don't mind. Let's just do it. I'm in. Like, to be honest with you, Jenny, this is the year of, I'm going to channel my Dylan Ratty. I'm not thinking. We're going to use $2,600. We're going to get out of this tomorrow.
Yeah. There's not going to be analysis paralysis. We're just putting it on.
Yeah. What do I know? I'm not going to just analyze this today. Right? We'll work that. I wanted to take a look at, hold on. What was it? That was Morgan Stanley. Let's take a look at Goldman Sachs.
All right, let's see. While you're doing this, I'm going to get these trades pushed out.
We're not filling Morgan Stanley yet. Goldman Sachs is $900. Did you know that Goldman Sachs is $930? There's a reason this thing is never in my portfolio. How about that?
Oh my gosh. You know what? You know why it's never in my portfolio? Because on the road once, we there was a really nice viewer, and I don't know if you remember her. She was married to a very nice man who gave her quite a bit of money to trade with, and she got into quite a pickle in Goldman Sachs with naked calls in Goldman Sachs. And I remember the husband came up to me at the roadshow and said, like,
cut her off.
What's going on with Goldman Sachs? And back then it was a high priced product, right?
Yeah.
So it's I haven't traded it since, when it was a debacle for her naked calls in Goldman Sachs. And if you look at the chart,
so this would be debacle and naked calls in Goldman Sachs. I mean, and I honestly think it's probably an upward trajectory. It's like
right, it's like the light
100.
I know. I know.
Don't worry, and we've got two earnings trades in, one Taiwan Semiconductor, one bank, and we'll take a look at that after the fact. Now, do you remember what TP's Cherry Bomb was talking about, or Cherry Picks was talking about today, where you could kind of say, I'm going to take a look at
yesterday was Tuesday. Cherry Picks comes out on Tuesday.
Yeah, but no, he was talking about how the implied volatility, but he was talking more about the Mag 7. We don't have any Mag 7s today, that their implied volatility remains high right on the open. So I do want to take a look at that when the Mag 7 are on deck, which they're coming up soon.
Wait, look at the straddle. Remember my strategy? Look at the straddle. How much is a 2-day straddle?
7. You'd have to go like this.
And you know what? I don't expect much from these bank stocks. I don't expect some big move on the.
No, and that's why TP was saying it's more for. And this was not his trade idea. He was just saying the implied volatility. He's not advocating this. We're not advocating this. We are for entertainment purposes only. But we were talking about how the implied volatility keeps its wings up. If you get a big move in one direction or the other, you can get out. And if not, you're not going to lose too much. I don't think. When it was the Mag 7.
And speaking of, I know we have an Apple position on. Is Apple? Let's see what Apple has been a
dog.
A dog. Yeah.
Oh, this is terrible. We're long 1-275.5 call. So
no, I know. Yeah, we talked about it the other day. It was a diagonal. An earnings setup diagonal. We've got 65 days for this. Just leave it.
Oh, look at that. So we've got 65 days for the long, but our plan will be on earnings to sell something.
I mean, can you get anything? No, we're not going to get anything.
Well, this is the earnings cycle.
We have to go through earnings. Just wait till earnings and we'll deal with it.
Yeah, that's what I'm saying. If it's got the earnings cycle, we want to wait until it gets real juicy. The premium just percolates all the way up, and then we're going to sell something.
Hey, Bitch, you remember that song, It's Time for the Percolator?
Yes. Anybody our age? Josh will remember, because Josh is what? Josh is.
Yeah. Josh, come on. It's time for the percolator. Is it percolator? Is it
what
percolator?
The hell? What the hell was wrong with us back then?
And that's the kind of coffee pot my grandma had.
The percolator?
The percolator.
Boop, 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 boop. See, things have gone horribly wrong when they leave us in charge. Okay. SPOOs are now down 51, so the rally is kind of.
And where's VIX now? It was 1795 when we left the SIBO floor. Now it's 1688, down $1 from where we saw it. We need the VIX needs a percolator.
Look at that.
Is it percolator or percolator?
For the song or for the actual coffee?
The actual percolator machine.
I think it's a percolator, but I could be wrong.
I'm gonna have to look this up when the show's
percolator. I wonder if Frank the Great is monitoring the YouTube chat. Because
I wonder if Josh, do you ever chime in? Josh, do you remember the song "It's Time for the Percolator"?
I don't know.
I do not, and it could be just from therapy that I've forgotten it. So.
I would like that song played out on our way out if we could request an out song. That's pretty funny. Okay,
I'm gonna request that. When we're in Mexico on the dance floor, I'm going to request that song. And don't tell our friends. Don't tell our friends, because when I request that song and then it comes on, everyone's going to remember it.
Everyone's going to remember it. We're all the same age. We were all at the same club. I forget what the name of it was. When we were 19, don't tell our parents. And that song would always come on and we would dance to it.
Oh, gosh. What was that called? Rum Runners.
Rum Runners. That's where we were.
That was the only club that let us in with our fake IDs. We all would go with our fake IDs every weekend to Rum Runners because it was the only place that let us in.
That's true. All true stories. Okay, is there anything else you want to do before the boys come in? Oh, Josh, can we pull up, because I think this is pretty cool. We have a program running right now, 4% cash match. 4% if you, for new people that are coming over, that's pretty good. And like you said, the interest rates are 4%. So you can get 8% basically if you did, just because you're going to get 4% cash match up to $10,000. Can we pop that up on the screen?
I said you could get 8% risk free if you transfer your money over, get 4%, and then throw it into like a box and get another 4%. It's risk free 8%.
Yes,
for the year.
That is true.
For new accounts. And that's not my recommendation. That would be a very, it's not that what I would just do with money that you want risk free.
Hold on. She's not allowed to recommend anything. So she's just talking.
This is just like, yeah. So anyway, 4% is huge because last year, the best I saw was 1%. So seeing 4% cash match for new accounts, I want 4% cash match for current accounts who transfer new money in. Maybe I'll put more money in my account if they would give us that.
So you got to call someone. You're going to need to make a phone call.
We're not going to take it.
No. Josh, I'm sorry. I'm sure you never want to produce this show again. We get a little out of control. Okay. 4% cash match, that is a big deal. And I know that we have to keep an eye on time to see if there's anything that we want to manage. But yeah, if you have a new client, I was waiting. I'm not going to lie to you. I was waiting for a very good deal for all of JD's friends to come on over.
Go ahead and rub it in. I mean, JD's friends, what are they transferring over? $1,000? I said
they're going to put $25 in. They're going to get
I just had my in-laws transfer a larger sum in, and at the 1% in the end of the year, I was like, you better get this in so you can get that 1%. And
before that goes away. Yeah. What are you going to do?
But they're going to.
Hey, I got to tell you, though, you can't time the market, because if they would have waited and tried to transfer it now, they would have missed the up move in the beginning of January. Because at the end of the day, Jenny, look at this. Take a look at this. No, I know we have been down 2 days in a row, and I know they're talking about that on some other networks, saying that we're down these 2 days in a row. But the beginning of the year was right where we were.
Oh, yeah.
Yeah. It's been, we're still up like 1% or 2% since the beginning of the year.
We got a banger start, just like 2025. And look how 2025 turned out. It got choppy, but then rallied.
It did get a little choppy. So as far as trading goes, we talked about this today because we are in full disclosure. You and I, a lot of times we didn't do the SPX because we were ferociously not in fear of, but using our knowledge of options to protect from a looming decision that we had never heard of happening before.
No. I didn't want to do the 0 DTE with the possible Supreme Court decision coming out. I didn't know what the market was going to do. I didn't want to have the SPX Iron Condor on.
No, I know. And that's what I'm saying is you and I use our options knowledge to, we were literally, I spent my time that I would be putting on 0 DTE, and we probably wouldn't have done it either way, to your point. But we did. We went in and we protected every position that we had because you have the knowledge to be able to do it. And if you want to put the protection on for, and I'm not saying you, I'm saying Jenny, because I don't recommend anybody else. If you just want to put the protection on for a couple hours, you can go in and take it off now.
No, and I kind of said to Liz, I said, I went through and did some, things in my account. You did things in your account, but we didn't do anything in this account. And then you said to me, we don't really have anything crazy in this account.
We don't, but 5 days ago and I don't remember this. So.
Oh yeah. I asked Liz today, I go, what is Rio? What did you and TP do in Rio?
I didn't do anything in Rio.
With TP and I didn't do anything in Rio.
You're like, it's got a timestamp on it, you fool. But we're at 50%. I'm closing it, so you can push that through because that's something we can get. We've been pretty good about cleaning up this account. So tomorrow we've got a lot of powder dry. And what's nice is when you do get the implied volatility, if you are taking small wins back and forth, when you do have a lot of powder dry, you can, when you do get some implied volatility, you can dip a toe in the water. Now, that's what hurt us in January last year.
Now, I will say that we were filled in Taiwan Semiconductor and filled in Rio, but we were never filled in Morgan Stanley.
Here, you know what? Let's replace the order. Well, you know what? We're going up with it. I was trying to get it for 7 cents.
Wait, we don't want to pay. Were you trying to get a credit?
No. I was trying to get 7 cents credit for it. And then when I replaced it, it moved it to 9 cent credit.
Oh, you ticked it the wrong way.
No, I didn't. I mean, it's not getting filled. That's why I wasn't.
Okay, then don't worry. I mean, we don't have to chase it.
And I will tell you, this is my my own analysis that I've been doing my entire career. Anytime there's a trade that I really want on the end of the day that I chase, always turns into a loser. If the one's like, I got to get this on, I'm just going to pay up because I want the position, not the penny. For an earnings trade, it always turns into a loser. So I'm not. If it comes to me, great.
Yeah, right. You don't need to chase it. You don't need to chase it. What time is it? 2:55. Do we have time for any more trades?
So I was just kind of looking at this too, and I know we put this on a couple days ago, and we'll talk about it tomorrow. This is our
it's a spike blizzard. It's a spike blizzard.
Now my eye line when I have a spike blizzard on will always go to the smallest put to see if there's anything you can do to take off all that risk. Not yet.
Really not yet.
No, because there's still 37 days left.
Yeah.
Other than that, I think we're pretty good. We're in good shape. Any other trades you want to put on? Oh, you know what? Somebody asked us in Twitter, and I apologize that I'm not going to it. They wanted us to take a look at XOM.
Well, oils, we talked about oil, and I wish we would have sold some puts in oil yesterday because oil's rallying today. We've got, CL's down now.
Yeah, CL's down because
but it was.
I mean, somebody said, and once again, this is just somebody on Twitter, was saying we're attacking Iran. What are we going to do in XOM?
Okay. Well, Exxon usually has good premium. If you go to the Feb options.
Look at that.
Yeah.
That was from today's news. Okay.
Well, but why is CL down? Like you could see CL was higher earlier and now it's only 60. But Exxon does usually have decent premium. But it doesn't right now. 27 rank, there's not a lot of premium. I've seen much better from Exxon
I've seen much better from Exxon too. But once again, when it gets up so high, look at that. You've seen premium because it's a good return on capital when you're looking at, $100 product where you're getting this. Now it's a $130 product.
Yeah, Exxon doesn't look that great. I'd rather just go to MCL.
Oops, I got to do slash.
So in MCL, we've got a 43 rank instead of a 20-something rank. Yeah, up.
Well, here's what I'm going to do. I want to go to the Feb, and I know we only have, I don't know what time this closes, but I'm going to go to maybe a downside. Wait, let me clear that off. Downside ratio spread where I'm going to stay with the.
Or do a Jade Lizard.
You could, but watch this. Jade Lizard, buy one, sell two. Whoops. Buy one, sell two. You can collect 50 cents, and it brings your break even pretty far down. And you're only using $400 to do it. What do you think?
Yeah, but if I'm waiting 34 days, I want more than 50 cents. I'll take 50 cents in a week, but I don't want 50 cents in 34 days.
No, I don't either. So to your point, you're going to wait a while to do a Jade Lizard, but I'll put one.
Yeah, you're going to, unless it goes up and then I don't know.
There's a Jade Lizard. I'll ship it.
I mean, the buying power is so low in here.
Yeah, we got one in under the wire. I mean, it's only 97 cents. And I do like having MCL in there because then we can keep an eye on it.
Right. So it's only $400 something in buying power for Jade Lizard and MCL, which is the micro crude. And
what's the wide market here? Because he had 74 cents at 120.
They're all probably 10 cents wide. Yeah. So add it all up and you get that wide market. Well, 259. I think we're out of time. We might have to table this to tomorrow. We might have to hope for a down move in CL tomorrow and table this till tomorrow.
Yeah, we probably are. And you know who's a wealth of information that is coming on directly after us is Chris and Elliot. Those guys are great. And I mean, they really are a wealth of information. So if you guys want to learn anything about, your what are they called? What would you call them? Economists?
Well, I guess so. I mean, I'll remind you again that I have my degree from University of Illinois in economics,
but I do not call you an economist. I would argue you're a trader, not an economist. And I am sorry that your degree is in economy, but you've spent the last, 30 years being a trader, not an economist.
Yeah, right. I didn't.
So everything that you've learned at the amazing University of Illinois has been crumpled up and thrown out the window.
No, I still, maybe one day, Liz, I'll go apply to be the.
No. I do know what you use. You use your Spanish degree because you use it every week.
I do speak every day almost. There's the bell. I want to wish luck to my all two people that watched my Taiwan semiconductor video.
Hey, I watched it twice, so it's probably just me.
Hopefully Taiwan Semiconductor doesn't blow through the upside broken wing butterfly.
I know. Well, it's defined risk. So either way. All right, everybody, good luck with your earnings trade. Stay tuned for Chris and Ilya. And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. Oh, that's the end of our earlier show. Well, stay tuned for Chris and Ilya. Have a great day. We'll see you guys tomorrow.
Goodbye.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Maybe the U.S. isn't going to bomb Iran after all. It's Wednesday, still January 14th, 2026. This is Overtime. I'm your host, Chris Vecchio in New York. He's Ilya Spivak in San Francisco. We're here to take you through the rest of this half hour as we wind down the trading day. Trading day, of course, defined by a little bit of weakness in stocks. Tariff announcement from the Supreme Court did not come this morning. Stocks slumped most of the session until just about an hour ago when President Trump remarked that he heard that the killings in Iran have stopped and that they're not going to do the planned executions anymore, which gave us the reaction we have here in oil, which was trading up near $62 a barrel at the time, fell close to 59 in the span of about 45 minutes, Ilya. It's since rebounded, trading back closer to 60. Alongside that decline in oil came a little bit of a relaxation in volatility here. VIX fell off right around 3 Eastern as well, was trading closer to 17.5, now closer to 16.60. Fall futures likewise fell down across the curve. So as the war trade fell off in some regards, other assets didn't get the memo, although stocks certainly did. S&P 500, 3 o'clock onwards, has a little bounce alongside the decline in oil and pullback in vol. Gold didn't get the memo per se. It's still holding on to most of its gains today, up 0.84%. Silver doesn't know how to read, which is why it's doing very silly things, up 7.87%. Again, $93.13.5 here.
We've talked about this, silver. We've talked about this.
Yeah. So much to say about silver. So the war trade was on, though, for most of the day today.
Yes.
For the first, up until the last hour of trading, it was stronger bonds, it was stronger gold, stronger oil, weaker stocks, volatility up across the curve. What do you make of these comments from President Trump this afternoon that seemingly turned the price action on its head, at least for oil and for equities?
I think what this says more than our intent to or not to bomb is just how focused the market is on the possibility that it is time to bomb, or that bombing is a thing that might occur. So if you take the president at face value, okay, I can see the signal. Obviously, market action reflects it. Over the past 24 hours, we've also had France, Germany tell their citizens to leave Iran. That hasn't been reversed. In fact, there's been additional orders ordering airplanes from Europe to avoid that airspace.
Germany issued a NOTAM today to say that German airlines should avoid Iranian airspace, and the British embassy in Tehran was closed temporarily. Within the past hour, for what it's worth.
So what this could be is, who knows? This could be a stall tactic. This could be this or that. Obviously, the pullback in oil is noteworthy, and it's noteworthy not only because it tells you this is a thing the market is paying attention to. It's also telling you that what this is and what Venezuela was is not the same thing.
Yes.
But more importantly, it tells you that you just got the difference between what is the longer term story for oil and this kind of jumpiness to event risk. So if you had a bigger view on oil, you see that the waters have become somewhat muddied. What is that longer view? Well, if you look at a, say, daily chart of oil, what you see is that prices did absolutely nothing on Venezuela, digested for a while, and then broke higher. And they broke higher before the U.S. thought to wade into the Iran thing. And as I've argued, there is a larger, longer-term narrative here. And that narrative is that the dominoes of Chinese supply seem to be folding one after another. Venezuela is just one thing. By itself, it's nothing. But with Venezuela folding and Iran teetering and the U.S. boarding Russian tankers, that's a meaningful part of China's mix for what they import as crude oil. They still import tons from Saudi. They import tons from the GCC in general, the Gulf. They will continue to, and they'll make up whatever they lose here, there. But that'll strain supply and prices will go up. That's not a will we or won't we bomb Tehran story. So whatever back and forth you get in the fuzz here, the larger narrative seems to be we've turned a corner.
The direct quote that spurred the move lower in oil today, Trump noted that the U.S. is monitoring the situation when asked if military action's off the table. Quote, "We're going to watch it and see what the process is, but we were given a very good statement by people that are aware of what's going on. Everybody's talking about a lot of executions were taking place today. We were just told no executions. I hope that's true. That's a big thing." I don't know, Elliot, between the embassy shutting down, the reports in the Israeli papers, the U.S. assets being deployed into the region, I don't know if the story's done yet right now. Certainly the posturing's there.
It doesn't feel like it's done.
The posturing's there. There is a pullback in oil vol today, though, which I suppose as we were creeping up into 62 earlier, the IVRs had tripped up into the high 50s. We're back down to 44.2. So we're still north of 40, which I think is important because, again, we hadn't seen an IVR reading north of 40 in oil, really from the end of June up until just a few days ago. And if we find ourselves with volatility readings that are shrinking back into a posture that is more reminiscent of what was the past 6 months, that could be one of the telltale signs that something has indeed changed here. And maybe there is de-escalation, perhaps. Trump is one to make a deal, Ilya. So could you see a deal being made here?
Well, I think it's
Potentially as
very
an out?
important. I mean, I think it's very important to note that this is not a U.S. spurred move. This is, I would imagine, not dissimilar from how 1979 started to feel in the beginning. This is a popular uprising. Now, granted, it's a popular uprising after the regime was weakened substantially, first by its conflict with Israel, then by the U.S. wading into that conflict, however temporarily. But clearly, the people are rising up in Iran. So, were there to be a deal with the U.S., you'd have to first ask, who's the deal with? Is the deal with the current regime? What is that deal? That the U.S. doesn't strike Iran? Okay. Does that cancel the revolution? No. And then if the revolution is then successful, let's say Iran agrees to some red lines and says, we will not run tanks over protesters. Tehran will not be Tiananmen. Okay.
It feels like this should be the most interesting.
They might be successful then, and there might be a new government now annoyed to make a deal with. So if there wasn't the U.S., I mean, I know Americans, and I'm a typical American. I'm very, we're the only country that matters in the world kind of situation. When it comes to me following the news, generally speaking, although I like to think I follow the news abroad pretty closely, it feels like there's so much domestic news right now that people aren't paying attention to what's happening to Iran. And arguably what's happening in Iran is just as consequential potentially as what was happening in 1989 Tiananmen, which is, I think, an opinion that a lot of observers are suggesting right now. Yes.
But it's not being given the weight that it should in our collective consciousness because we have Howell being fired. We have ICE doing whatever they're doing in Minnesota and around the country. We have this, that, yada, 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 yada. And so our bandwidth is saturated, as it were. Which makes me think that for the oil market, then, today's comments by Trump, I suppose, are one thing. But on the other hand, it feels like we're underweighting this because typically we as Americans underweight and misunderstand anything abroad. If it's equity prices, if it's local politics, we're not great at pricing those things in. And just like people in foreign countries aren't great at pricing in American issues because they just don't have the know-how and the feel for it.
I mean, I think when this kind of stuff occurs, right? Obviously, it's much more difficult to benchmark geopolitics than is economics, because at least economics operate by certain sets of generally understood assumptions. And you can, at the very least, say, okay, well, nobody knows what's going to happen, but I do know what assumptions policymakers would make if this and this were to happen, from which I can infer what policy is going to be, from which risk sentiment and the cost of money flow. So at least there you can do some sort of intelligent analysis. Geopolitics is not necessarily amenable to that level of thinking. But what you can do is you can look at the price action, because the price action will say a great deal. And when you consider that the consensus for crude oil going into this year and out into the 2030s was an endless supply glut, what you see in the price action is the answer is, no, not that. And when you and that's sort of a speculator's dream here. When you get this kind of out of consensus breakout, there's a lot of wrong hands on the other side. It's a move with follow through, perhaps.
That's really how I feel about maybe some of these energy names. It wasn't that long ago, Ilya, when we noted that coming into this year, X precious metals commodities had the lowest weighting in the average person's portfolio ever. The energy sector as a component of the S&P 500, I just got to double check my math here real quick. But if I recall correctly, XLE divided by SPY is trading at, it's just off of the lowest levels that we've seen going back to 2022. Yeah, it just bounced off of the 2022, some of the levels that we saw at the start of 2022. Maybe that's turning a corner. So the allocation here right now, XLE as a percent of SPY is not even 7% yet. At the start of the year was 6.4%. Now it's 6.97%. A few years ago, it was 12%. And by November 22, it was 12%. So I don't think we're going back to November 22 levels, but there's an argument to be made that this is a sector that's been so unloved for so long that if you're looking for a place where maybe you can see a runner, Venezuela is not going to do it. But if oil prices do get into that Billy Bob Thornton $75 a barrel range for the folks out there who've watched Landman, some of these charts, like an ExxonMobil, that's a weekly time frame here, breaking through the highs from 2024. That's a Chevron here, breaking the downtrend that we've seen going back to 2022. A lot of these names haven't received the love in a long time, and so plenty of room for people to jump in the water and crowd these trades up because they are just not crowded trades at all.
No, and I would argue that if you look at where crude oil itself is, for me, that's the more attractive way to do it. But that's only in relative terms. Crude oil is down significantly relative to where it's been. These names have a certain amount of equity market premium by virtue of being equities, because that market has generally performed much better than oil has. And so there's an uplift there inherently, which is not to say that there's not an opportunity there. There certainly seems to be. But the commodity itself, in my mind, is so beaten down and so obviously doing the opposite of what everyone expected that what you have is a very attractive kind of contrarian macro idea unfurling itself in front of our very eyes. And your sound is gone.
Sorry for sneezing before. Lots of sneezing today. The oil refiners ETF crack is sitting up at what would be its second highest weekly close ever, third highest weekly close ever here. We're peering into second. The energy sector right now deserves some attention, and it follows on to, again, what's going on in commodities broadly speaking here at the start of 2026, which is in the commodity tracking index funds. We could see here that it would appear even the energy heavy commodity tracking index, that's showing signs of potentially breaking out. DBC potentially breaking a long-term downtrend. DJP, a little bit more metals heavy, has already moved to the upside. So Ilya, if I'm thinking about incremental commodities exposure moving forward, the trade is still silver, but the smarter, less crowded, less speculative thing seems to be energy, not the oil itself, but maybe the equities. Okay. Silver's up 7.3% today. When is this going to stop?
Why should it? I mean, it's a very simple question, right? Why should it? What is there? I mean, this is a relatively thin market. There is every reason to think that the longer term narrative for precious metals is in play because, again, the echo here of what's going on in oil is very clear. This is still a US-China thing. If the US wants to have a point to score, why not say, you know what? We're going to squeeze China's energy supplies, and they're going to have to pay more. And you know who they're going to have to pay more to? US allies. They're going to have to pay more to Saudi. They're going to have to pay more to Iraq. They're going to have to pay more to the Gulf countries. Do we want something from the Gulf countries? Oh, yeah, we had that stabilization force we wanted to put in Gaza, right? What if we gave them a windfall? So there's a whole situation that's unfurling here, maybe, with a variety of dimensions. But even on a small scale, to say Venezuela is no longer a reliable supplier to China. Why? Because now it's in the U.S. sphere of influence. Well, who did that? We did that. So, again, we're in a world where the two poles are in some sort of an economic Cold War, and you might want a go-between non-sovereign asset if these types of things heat up, because you might want to be able to do business with one without upsetting the other. How do you do that? Precious metals. Or at least that seems to be what the markets have decided.
Everyone accepts it. Going back to a barter economy, Ilya, that's exciting. I don't know if it's that far, but we do see that it's a day where we have our semiconductors trading a little bit weaker here, down 0.85%. It's a lot of the Oracle, Microsoft, OpenAI flywheel. Oracle's down 4.3%. Microsoft itself was off another 2.4% and breaking to a new low relative to what we saw back here in November. Volatility is likewise spiking alongside the decline. So not exactly the prettiest looking chart. Where is support come into play? Listen, if this market wants to get mean, we do have a gap to fill from last April, which comes in closer to 395. I'm not saying we're going to 395, Ilya, but if we wanted to, that's a place where I would be much more comfortable looking long than buying a falling knife. Google itself tried to get back above water, which I suppose is one of the encouraging signs among the Mag 7 names today, because there were not that many. Meta was down another 2.5%. Yuck. Tesla down 1.8%. Yuck. NVIDIA. Oh, yeah, can we see a green tick from NVIDIA? No, we can't. Down another 1.4%. So there is just a lot of headline slog right now in the NASDAQ. A NASDAQ that saved the day today because it looked like we were going to lose the uptrend off of the November, December, and early January swing low. Likewise, closed below the 50-day, and we bounced them there for now. Bulls probably aren't feeling too hot. Bears could be feeling better. This is perhaps the emblematic price action of what is a failed Santa Claus rally market, which, again, going back to 1950, the S&P 500 drops by 0.1% in the month of January when Santa Claus puts us on the naughty list. And we ended up on the naughty list for the third year in a row. So a choppy January, in hindsight, despite bullish premonitions 2 sessions ago, might be the obvious path forward, as frustrating as that would be.
I mean, if we look at what we're seeing here in broad terms, I think the S&P captures it. We've been talking about this late October high. We still can't get through it. And I think we still then operate on the basic premise that this market hasn't gone anywhere, bar for the Russell, which has made a stronger effort, that this market hasn't gone anywhere, and that the fundamental issue why it hasn't gone anywhere is because the Fed will not give the market the cheap money it wants to wrap itself in safety. And what we're seeing as far as the geopolitical front just demonstrates clearly why the market wants to wrap itself in safety. It wants for the Fed to give it cheap money because it wants to say, you know what, we don't know what's going on. But worst case scenario, if we wipe out and the money is cheap, we can borrow back and keep going. So just put the cheap money there, because we can all see that there's madness going on. But what all of this oil situation does is it just makes that outcome less likely. Because as we said yesterday, it takes about a month for a surge in oil to filter through into CPI inflation. And so does the S&P have legs to go over this December high? ultimately, I think these things are connected. And from the looks of it, it's trying to say maybe not. I don't think it's convincing yet. This is one pullback. We're still within a hair of that high. I don't think we know yet, but the combination of factors and the responsiveness of price action to those factors is not looking great. The Brent crude oil versus WTI spread is out to $6. That's the highest since COVID. Back to near the highs of last summer, where the Israel and Iran nuclear reactor kerfuffle went down.
Are gas prices going to be a problem in the near future? I mean, they are trading at the same. But gas futures themselves, like same levels we were at last March. I mean, for me personally, like I've seen my local pump oscillate between 349 and 359. I feel like for the past year, it has not moved at all. Today I filled it up at 356 a gallon, I think. So give it that. Usually it's about $2 spread for me over where the prevailing price is. So I guess we're going up to about 383 sometime soon. Doesn't really change much of anything. But also, if you have a flash in the pan rise in oil like we did in June, the markets, you're not going to see the prices at the pump change even just for a few days. It just gets washed over. So I mean, that's to me what matters most. If there is something that occurs, it seems like it's going to go down soon. I don't think the US is going to be advising allies purportedly, and there goes the camera, allies purportedly to have their people evacuate embassies, only for them to return and then to start the bombing, right? That doesn't seem like the glove fits.
That doesn't seem like the thing that's going to happen.
So temporary exit from Tehran by the UK. If that holds, just watch the window. Otherwise, right now, Trump's comments here in the second half of the session, really the last hour of the session, helped save a market that was sliding with volatility bumping up throughout the morning. No tariff decision yet today, Ilya, and I have not seen when they intend on releasing their tariff decision from the Supreme Court. Maybe it's Friday, but it was supposed to be today. Do you read anything into that?
Tough to say. I don't think we necessarily have anything to get worried about this way or that. I think the market is pretty much benchmarked that there's going to be some sort of a rollback of IEEPA tariffs. If that rollback is something on the order of, but you have XYZ months, or you have a hold here because we don't want to be disruptive. So no, you can't do this, but you have a lot of time to figure out what to do instead. I'm not sure it changes anything. If it is an abrupt end, though, could be something.
The next batch of SCOTUS decisions may come next week, Ilya. So I suppose as we do our pre-FOMC, because we go into the communications blackout window for the Fed this Saturday in the run-up into the January 28th meeting, maybe that becomes the primary catalyst. Because outside of that, GDP coming up.
Yeah.
But GDP and tariffs, those are the two big ones. Earnings that are due up around the corner Wednesday. It was today. Bank of America was down. TSM is going to be reporting tomorrow. We're going to have Morgan Stanley. We'll likewise have Goldman Sachs and BlackRock, not Blackstone. Blackstone is the one that's making everyone angry for buying the homes. BlackRock's the one that gets blamed for it all, which still is just very funny considering the difference between the two companies. Either way, though, a few more banks due up tomorrow. A few more banks due up on Friday. PNC, State Street Corp, M&T Bank. Other than that, the macro calendar is pretty dry. All eyes on what is happening in DC, what's happening in the airspace over Tehran. I'll be looking at Flight Radar 24. Maybe we'll see some movement in oil. But the news flow here, Ilya, how Tehran responds, ultimately, that will matter most. As we saw in June, they declared victory almost as soon as the bombing was done, and that was the end of it, and oil collapsed thereafter. So we can't discount that again. Ilya, one last comment here. Bitcoin pops over 95K. That's a bit of a development. I see here a quick note that today was the largest day of inflows for crypto ETFs since the peak in October. So a big
I'm going to shock
volume
you now
surge.
and tell you that I flipped my position over.
We're going to have to talk about that more tomorrow. Overtime's out of time. We'll be back tomorrow, same time, same place, 4 p.m. Eastern, 3 Central, right after last call. So for Ilya Spivak today, well, today I've been Chris Vecchio. We'll see you later. Good luck trading. Up next, Ilya Spivak with more macro money.
See you there, everybody.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
If your trade's not going how you expected, it's not necessarily that your assumption is wrong. Maybe it's just not right. Yet. Rolling is managing a trade by closing your position and opening another one like it for a credit all in one order. The cool part is that you can change the expiration to get more time, or you can tweak the strike for a higher probability. Usually we want to roll the expiration instead of the strike. Remember, duration over direction. Exactly when and how to roll trades is a learned art, and it can be a little bit subjective. Usually we only roll if we haven't changed our assumption, and we almost never roll winning trades. If you have changed your mind, don't roll. Instead, you probably want to close it if it has undefined risk, or just let the probabilities play out if it has defined risk. So before you cut your losses, consider rolling the expiration or maybe even the strike. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
What a day it has been in these financial markets. We get aggressive swings across major assets and, of course, crude oil. We're going to try to figure out what all of it means here on Macro Money. This is Ilya Spivak, head of global macro here at tastylive. And what we're going to try and do here is, of course, first and foremost, delve into the price action, try to figure out what all of this ultimately amounted to being, and then see if we can't take a look at what the landscape then portends, because, of course, this is not the first time that we've talked about crude oil this week and all the volatility that seems to be showing up therein, but it probably won't be the last either. So the main question that we have to ask ourselves here, and this much should not be surprising, is what is this really? Is this a situation where we have temporary geopolitical risk on the table? Or is this a situation where there is something more lasting, something more substantive, and perhaps something more thematic that is taking shape? After all, we've seen time and time again situations where the flare-up in geopolitical risk came and it went and didn't amount to much, and at least last year it was an opportunity to fade. But perhaps that is not where we are now. So let's begin with a look at the price action. There is the breakdown. We can see stocks are down 0.58% for the S&P, NASDAQ taking a full 1.1% almost hit. Bonds are up, so you get a flavor for a kind of risk off environment here. Tellingly, the situation seems to be that, in fact, this was about as close to risk aversion classic as you might expect. Bonds in this environment looking like they are once again taking that role of safe haven. And that's not the correct quote for the yen here. Let's fix that. There we go. So we have a yen that's up and a dollar that's down. Because, of course, that certainly changes the landscape and brings us back into this kind of situation where we see, again, kind of risk aversion classic. We have a yen that's higher, showing the unwinding of carry. We have bonds, as we say, that are higher and yields that are in. Crude oil, interestingly, down 1.41%, but that's only after it was up as much as 2% on the day. Bitcoin also, interestingly, breaking ranks with everything that's going on here, up 3.3%, finally clearing out that range where it's been oscillating since early December. More on that later. I've made some changes to the portfolio there. We'll take a look at those toward the end of the show, so stick around for that update. But the main, clearly, narrative here having to do with what's going on in Iran and with oil. But that's not all of it, because we, of course, also had a bit of economic data on the calendar, and there was a bit of that story about the Fed and what it might do. So before we jump onto the oil side of things, let's take care of a little business here and take a look at what that looked like. So this was the day's economic data. It came out a bit hotter than anticipated. We can see here, this is back data for October and November. Of course, CPI is already caught up to the December numbers, but PPI, alas, is still disrupted by the government shutdown. But the latest numbers here, we can see, here's core PPI for November. It is up to 3%, certainly much higher than expected. The prior number we can see was revised up to 2.9%. The expectation was 2.7%. So this is meaningfully hotter for core PPI than anticipated. Wholesale inflation seems to be building here. Same thing for the headline number. Again, 3%, hotter than the 2.7% expected, hotter than even the revised 2.8% before. So we're looking at a situation that seems to be generally a little bit hotter on at least the wholesale inflation front. And as we looked at yesterday, the main story here, because of course this data is somewhat stale, is what is happening under the surface. And we can see here at the headline, it looks like things are relatively steady. So the month-on-month gains not that large, the year-on-year readings relatively anchored. But if we look under the surface, this is wholesalers' margins. First at the end of the US-based supply chain, and then at the beginning. And what you see here is that since the advent of these tariffs, margins have been getting squeezed at the end of the supply chain and at the beginning. It's a little bit more dramatic here for intermediate goods at the early part of the supply chain. Basically, as soon as something touches down stateside from wherever it's coming from, these are the importers at this stage of wholesaling. And you can see they're taking big hits on margins up to 2% here on some months that don't see a commensurate rebound the other way. Hits that then look like the biggest squeeze since 2013. And that's because they appear to be eating the tariffs and basically shielding demand downwind of themselves, because of course, if that demand is destroyed because the price goes up too high, then they're out of business. So they're trying to do the best they can to keep that demand protected as long as they can. And we can see here that as we start to get, especially into the latter parts of 2025, wholesalers closer down the supply chain to where retail is, they're starting to take margin hits. Because now it's starting to show up for them. And these numbers start to get large. I can see, in particular, in August of last year, this hit is especially sharp. And so the squeeze on inflation seems to be significant. And of course, the prior day, what we saw was relatively benign looking CPI, which gave us numbers that, for the most part, looked okay, anchoring at around 2.7%. But more importantly, the larger trends in CPI seemed to be in line with what the Fed was looking for. That is to say, goods inflation was leveling out. Services inflation, the biggest component of the bunch, you can see that here. Services by far the biggest. That seems to still be going down. There was a pop in housing inflation, but the trend here is unmistakable. So all of this looks well and good, but if there is the plateauing here because wholesalers are eating the tariffs and not passing it on, well, then this is inherently a temporary thing. They can't eat it forever. Eventually, it'll be too big a burden for them to do that. And so what we eventually then might end up with is a kind of uncorking of inflation once they are forced to basically give up the ghost on holding it back. And what then becomes, of course, the issue is if inflation spikes, the Fed is not in much of a position to cut rates, which, of course, is the crux of this entire issue. We can see that the markets still want a pair of rate cuts this year. 53 basis points here is what they've baked in. Now, that is, of course, still a wide disparity from where the Fed thinks it is going to have rates. We can see that here. Still on the December summary of economic projections, we find the Fed only sees one cut for this year. And in fairness, the Fed and the markets are generally aligned for how many cuts we see in 2 years. That's about agreed at 2 cuts, but the markets want all of them this year. And the Fed wants to space them out over this and 2027. Now, if there is inflation brewing under the surface in PPI, that's going to be a difficult thing for the Fed in finding its way over to where the markets are. And of course, we can see the S&P 500 hasn't really made new highs since October of last year. Well, it's tried, but it hasn't held those levels and has stumbled every time it's tried to issue a close above October's highs. And that was, of course, when the Fed told markets that they're over extrapolating rate cut potential and should stop. And ever since then, stock markets haven't gone very far. So this then is where crude oil comes in. Because if there is pressure on wholesalers and a timer on how long they can eat these tariffs, this situation makes that worse. What we see here is a breakout for crude oil that appears to be, even if you're no kind of technical analyst, somewhat unmistakable. Because what you find here is clearly a series of lower highs and lower lows, going all the way back to last year. That spike you see around June, July of last year, that's the firefight between Israel and Iran, which ultimately had the U.S. join into a strike on Iran's nuclear facilities. But the down move extends even beyond that. That spike was just the latest in a move to the top of a range that's kept crude oil anchored below $80 a barrel, going all the way back to September 2023. But even just this year, from mid last year into now, is a very clear decline. We can see the low there at just below $55 a barrel is what was there on Liberation Day last year, when everything panicked around the introduction of the tariffs at first. We found a bottom going into the beginning of this year, and clearly now, whatever downtrend this is, appears to have been violated. And it's easy to say that what's going on here is strictly having to do with the teetering in Iran and the possibility that the U.S. might strike to push the whole thing over. But that seems to be the small story within a larger one. Because what you find is the Venezuela raid to extract Nicolas Maduro was in here somewhere. Crude oil did not budge on that news. It moved later. It also moved before, let's say, the past 48 hours really became a story about whether the U.S. would intervene in what's going on in Iran. Because the actual uprising in Iran is an organic one. The people have actually stood up and are threatening to overthrow their government. Now, what that did in the wake of Venezuela as it started to heat up, even before a conversation about U.S. involvement got underway, was started a conversation that is, at its essence, a much bigger and a much longer term discussion. That, of course, is about what all of these dominoes falling at the same time seems to mean for not just Venezuela, not just Iran, but much more importantly, what it means for China. Because there is, of course, clearly here the assumption that in basically taking over Venezuela's oil exporting, what the U.S. has done is said, we control this now, and that means not China. But look at China's import mix here with the nice visual from Visual Capitalist here. And you can see Iran high on the list, then Russia, Saudi, South America. And South America, of course, includes Brazil, includes Guyana. Venezuela's in there, but it's not the largest. But what you start to see here is, okay, so Iran's teetering. The U.S. is boarding Russian shadow fleet tankers. That's probably the biggest disruption here. And at least one piece over here is missing. So what does that leave us? Well, it certainly makes for a meaningful hit taken together, were it all to come apart at the same time, if you were to consider China's energy mix. Now, of course, there's other sources. It's not like they're going to go without oil. They will get their oil elsewhere. But it does force a reshaping. For example, if Iran suddenly goes offline and Russia and its supply keep getting squeezed, and Venezuela is now basically off market for exports to China, China's going to have to get more from Saudi. They're going to have to get more from other Gulf countries, which we see here, Qatar, Bahrain, Oman. So they're going to have to maybe get more from the UAE and West Africa, from Iraq. So there's a rejiggering of supply chains here. And that, of course, makes things more expensive. Also, you can't get all types of oil everywhere. Some grades are lighter, some grades are heavier. So China's energy mix here isn't perfectly substitutable, one producer to another. So there's going to have to be some reshuffling. And China is the world's second largest oil consumer. So what that reshuffling means is that there's probably a squeeze on supplies in these other places that was unexpected. And in reaction to that is how you end up with this. In fact, if we take a look at the spread between the global benchmark, Brent crude, and the US benchmark, WTI, we can see that the spread has jumped wildly. And that's telling you that US-based crude prices are, of course, cheap because the US is almost fully self-reliant and is itself a producer and a net exporter of some oil. But the global price, we can see clearly, is showing signs of stress and a potential supply squeeze. Not because the U.S. might wade into Iran, but because all of these things taken together appear to squeeze China's import supplies. And so what we end up with then is today we attempt to rally. We were up again, as we were saying earlier, as much as 2%, but we get a recoil back after U.S. President Donald Trump comes out and says, we heard that the killing's going to stop, the killing of civilians ostensibly. We heard that, and that's good to see, et cetera, and sort of seem to give an indication that the U.S. is maybe not in a hurry. But at the same time, U.S. allies have told their civilians to leave Iran. The UK embassy closed briefly. And we likewise have at least German airlines telling their planes to avoid Iranian airspace. Generally speaking, the U.S. would not tell its allies to pull its people and redirect its flights if nothing was going on. But maybe ultimately nothing does occur. Maybe this is a show of presence and a show of force that ultimately that doesn't have to be consummated. But whether the U.S. gets involved or doesn't really doesn't change why crude oil seems to be breaking out here. And so tellingly, the pullback we have, as it seems to come from the president, that we're not imminently going to get involved. The U.S. is not imminently going to get involved here directly. Nevertheless, the breakout holds. We get a pullback and a retest of the bounds of the breakout, but ultimately, with the push through 58, 60, 59 here, the breakout seems to be intact. And the longer-term story, the reshuffling of China's supplies for all of this apparent reconfiguration of the market, that's going to take months at best. So that story is probably not going away. And of course, where this connects to what we just saw on US PPI is it takes about a month for oil prices to filter into US inflation. And if oil prices are going to spike here, then CPI is likely to follow. And of course, if that's the case, then those producers are that much more squeezed for margins, that much less able to eat the tariffs, that much more inclined to pass on costs down to consumers. Well, and then what interest rates exactly is the Fed supposed to cut? Which, of course, then comes back together to a threat for risk sentiment. So, I am still long gold. I am still long the dollar, which takes all of this impressively in stride. As if to say, yes, I intend to move higher. I flipped over my Bitcoin position because, as I've said, we crossed the range boundary there on the top side. So I am now long a call vertical, still short the NASDAQ and the S&P through put verticals. I have doubled my oil exposure, so I'm long there, looking for that move to continue with plenty of duration still in these positions. And I've added a little bit on the bonds side, a little bit long at the long end here via a call vertical in TLT, looking for all of this risk aversion to give them perhaps a little bit of a lift and perhaps an expectation that rate cuts will have to be later and that they will show up at the long end of the curve rather than the front. And that is macro money for today. As ever, we are here Monday through Thursday, right after overtime. That's a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things might go there from. I am likewise writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.